XRP is a digital asset for representing. What is XRP? XRP is a digital asset for representing the transfer of value across the Ripple network, also known as the RippleNet, created and operated by an US-based technology company, Ripple Labs. The main goal for Ripple is to connect banks, payment providers, and digital asset exchanges to provide a solution for real-time and cost-effective global money transfers. XRapid is an on-demand liquidity solution provided by Ripple Labs. It is designed for financial institutes to use Ripple's XRP asset as a bridge currency between fiat currencies when making cross-border payments. XRP and XRapid are relying on Ripple's patented technology called the Ripple Protocol Consensus Algorithm, or RPCA in short. And all the information of Ripple accounts and XRP transactions are stored in a common shared ledger, also known as the XRP ledger. The ledger is managed by a network of independent validating nodes that constantly compare their transaction records. These nodes can belong to anyone, from individuals to banks. However, Ripple recommends its clients to use a list of identified, trusted participants, also known as Unique Node List, or UNL, to validate their transactions. The nodes in the Unique Node List continually exchange transactions with other nodes on the list, and the goal of consensus is for each node to apply the same set of transactions to the current ledger. Transactions that are agreed upon by a supermajority of nodes are considered valid. You can imagine this as a large group of trusted people, and the network needs agreement from all of them to make a decision. But if one of them doesn't agree, nothing will happen until the problem is solved. How does it work? Let's take a simple example. Bob from Australia wants to send $100 to Alice, who is based in India. Bob transfers the money via a service that is provided by a financial institution that is using the XRapid solution. The service then connects into asset exchanges in both the originating and destination country. Bob's $100 is exchanged into XRP, which provides the necessary liquidity to power the final payment. And in seconds, that XRP is exchanged into Indian rupees and is accessible by Alice from the local asset exchange. Ripple also offers other solutions that do not use the XRP cryptocurrency by default. Xcurrent is Ripple's enterprise solution that is designed for facilitating instantaneous settlement and end-to-end tracking of cross-border payments between RippleNet members. Xcurrent does not operate on the same technology as XRP, as it is built around the Interledger Protocol, ILP, which was designed by Ripple as a protocol for connecting different ledgers or payment networks. Xcurrent consists of 4 different components. The Xcurrent Messenger provides peer-to-peer communication between connected RippleNet financial institutions. It is used to exchange information regarding risk and compliance, fees, FX rates, payment details, and expected time of funds delivery. Validator is used to cryptographically confirm the success or failure of a transaction, and also to coordinate moving of funds across the interledger. Financial institutions can run their own validator or can rely on a third-party validator. ILP ledger is used as a subledger, which can be incorporated into financial institutions' current ledger. The ILP ledger is used to track credits, debits, and liquidity across transacting parties. Funds are settled atomically, meaning that they are settled instantly or not at all. FX ticker is used to define exchange rates between transacting parties. It is also good to note that the same way Xcurrent can handle dollars, euros, and other fiat currencies, as well as Bitcoin and other cryptocurrencies, XRP can also be traded through the system. XVIA allows payment originators and corporates to send international payments through a financial institute that's been connected to RippleNet using an API-based standardized interface. Payments can be attached with rich information like an invoice or payment status. Stay tuned for more content and don't forget to check out our other videos at Binance Academy.
In today's now economy, money, like goods, must move fast. As a result, payment solutions are undergoing dramatic change to enable this. And it's you and me, the consumer, that is driving this change, this innovation. On a domestic level, many countries have modernized their payment infrastructures, providing this instant payment experience. Now SWIFT is bringing that same instant payment experience to cross-border payments, making them as efficient and as seamless as domestic payments, and by providing interoperability into these instant payment systems. We're doing this through a new service which harnesses the power of SWIFT GPI and now provides an instant payment experience. This will dramatically improve the end-user experience, in particular for SME, e-commerce and retail. Our GPI instant solution is in place, and it works. We successfully tested it with 3 countries and their payment infrastructures. Now it's time for the whole community to seize this opportunity. We invite all market infrastructures and banks to join us on this journey.
So I think we've reached a very successful conclusion.
Yes.
Congratulations.
Thank you.
Thank you. So it's my understanding you're flying out this evening?
Yes.
ありがとうございました。
Success. There you go.
Oh, thank you.
Hey, Lawrence.
Hi, Ian. Look, I know you've put a lot of work in on this, so I thought you should be the first to know. We've signed the contract.
Fantastic. Does that mean that I can push the green light on this end?
Hi Ian, it's Anya. We're almost complete. We also just wanted to keep you in the loop with the payment.
Yep. You should see all the details in front of you now.
Fantastic. Time is of the essence. The deadline for our first shipment goes out this afternoon.
We've also just sent Mr. Chinaka the payment request, which is everything he needs.
Yeah. Looks like he's got it.
Taxi! Hey guys, look, I know it's getting late there. I can track the payment and keep you posted.
Oh, there's no need for you to do that, Ian. Thank you. Payment is complete. We've just got access to the funds.
Perfect.
Hey everybody! Last week, Swift GPI was mentioned, and as promised, I'm following up with a Faster Friday video to explain what is Swift GPI. Stay tuned. Swift GPI, or Swift Global Payments Initiative, was established to explore the possibilities and improve customer experience in cross-border payments. See, Swift GPI has been built on Swift's existing infrastructure, and Swift has been around for, about 5 decades, almost 50 years now. Swift GPI ensures that cross-border payments are fast, many of them done in seconds. Yeah, that kind of fast. There's a Swift GPI Instant that is kind of fast too. It lets you make high-speed cross-border payments in minutes or seconds. If you read their marketing information when it comes to global payments, it says you need them to work fast in seconds. You need them to be transparent, showing all costs and charges. You need them to be trackable end to end. So is it fast? Well, nearly 50% of GPI payments are credited to the end beneficiaries within 30 minutes, 40% in under 5 minutes, and almost 100% of GPI payments are credited within 24 hours. 30 minutes is fast, Professor? For cross-border payments? Yeah, it is. See, there are several payment channels here in the US that can't move funds in 30 minutes, and very few that can do so in under 5 minutes. So to do this cross-border, that's kind of a big deal. Well, is it really very trackable? We are used to tracking everything. If I order something from Amazon, it doesn't get delivered in less than 30 minutes, but I have had same day. But as far as tracking, I get notifications of where my package is all the way up until when it's delivered. Your package is 3 doors away, 2 stops away. I recently ordered a pizza too. Now, I'm not a big pizza eater, but my son said it was the one thing he wanted for our New Year's Eve celebration. I could tell you exactly where my pizza was, from the point that I ordered to the point that I suddenly looked at my son and said, they're going to knock on the door now. For a 9-year-old, this was impressive. As a dad, it was greatly appreciated to be able to show off like that. For the payments professor, it was also impressive. So why not be able to do this with a payment? Needs to happen. Bank customers want to know when a payment is sent, where it is, and when it reaches the end recipient. With GPI, banks can track their payment flows end to end and also do so in real time. If you want transparency, through GPI, banks can provide their customers with a full visibility on processing fees, exchange rate cost, and processing times. Used to be, you almost had to guess when and how something was going to get to another country. You could send a couple of payments to the same place, maybe an hour apart, and they could arrive hours apart, a day or days apart, and at significantly different exchange rates and processing fees. And if you recall from last week's video, we discussed how last year, during a global trial to integrate Swift GPI Instant, that the Swift cross-border instant payment service into Singapore's domestic instant payment service, fast and secure transfers, appropriately named fast. Liam still laughs when he hears that's what it's called. They had a successful trial that involved 17 banks across 7 countries. These countries were really spread out: Australia, China, Canada, Luxembourg, the Netherlands, Singapore, and Thailand. I do believe then, as I do now, it seems to notice that someone or some country is missing from that list. Let's just keep on. It was a test. Yes, it was a test. It involved payments across continents, settling within 25 seconds, with the fastest actually being between Australia and Singapore in just 13 seconds. Swift GPI, I have to give you 2 thumbs up and expect to see and learn more in the coming year. Payments professionals of all types, we are here to serve you, to help you learn about electronic payments and have some fun doing it. As always, feel free to email me, kevin@paymentsprofessor.com, if you've got any questions or if there's a video you'd like to have made. If you would like more, you can also go to our YouTube channel where we have all of our videos, even the ones from last year. You can also go to the new and improved paymentsprofessor.com website where we have additional courses. We have a free mini course on payment channels available. We are here to aid payment professionals in learning everything they need to know to advance their careers, get raises, even promotions, and to do so to help protect their organization, whether they work for a fintech, a bank, a credit union, a regulator, or any other entity. But we also help you to be better prepared to take care of
this edition of GPI Friday. So this afternoon, what we're going to look at is a comparison of Swift GPI initiative versus its competitor Ripple, who also operates in the cross-border space. So in the interest of full disclosure, here at Access Pay we have no reason to favour either party. Our driving motivation is improving the corporate banking experience for our corporate customers. Equally, there's a number of parties out there, disruptors, etc., who could stake a claim to be able to move money cross borders and be included in this comparison. But this isn't their video, it's mine, and if your name's not on the board, you're not getting compared. So let's take a look. As for the criteria, payment speed and liquidity, fees and FX, tracking remittance data, network and scale, security and trust. Again, some arbitrary comparison measures that we've drawn out based on our experience of what's important to the corporate customer when making cross-border payments. So without further ado, we'll look at the first one, which is payment speed and liquidity. Now, back in the day, when the Swift rails first emerged over 50 years ago, then payment speed could be hours, days, or even weeks in some cases. And then Ripple emerged with their sub-second interledger protocol process for moving payments across borders. So at sub-seconds, I think we can definitely give Ripple a tick on that front. And then GPI was built by Swift, and we know from the GPI payments that are being remitted today that they've got payment times typically under 30 minutes now on GPI. So again, let's give Swift a tick on the speed front. This is all really important to a corporate customer because frankly, it all comes down to liquidity. And what you don't want is the payer's account being debited on a different value date or a previous value date to the beneficiary's account being credited, and some banks in the chain somewhere in the middle sitting on that liquidity overnight. So really important criteria, and I think at under 30 minutes for both parties, then we can say that they've both got this payment speed nailed. I'm not going to go into the benefits of sub-second versus 30 minutes because, as I say, in our experience, the corporate's driving motivation here really is, does it happen the same day? Okay, the next criteria we're going to look at is fees and FX applied to cross-border payments. So again, in the old world of cross-border payments, then basically what happened is you go to your bank and you say, Mr. Bank, I want to make, as a corporate customer, a payment cross-border. No problem, says the bank. It's going to cost you some money, quite a lot. But Yabu sucks, we're not going to tell you what that money is until the payment lands at the beneficiary. You've not really got any other alternatives, so suck it up. Then Ripple emerges, and Ripple basically operate a process where you get, they submit the payment request to the whole of the network via a kind of auction process, and so you get all the FX and the fees built in pre-payment. Pretty key to knowing exactly how much it's going to cost you up front, but also key for the beneficiary to know exactly how much they're going to receive for reconciliation purposes, etc. With the emergence of GPI, then certainly the tracker, the observer, and the directory and all the rich data that's contained within it holds the potential for customers to be able to look at FX rates applied by the banks and fees, lifting fees that are going to be included based on history up front before making the payment. But it's not quite there yet because all that information has to come via the bank. So how much of it they're going to expose to the corporate customer is a bit of an unknown. So GPI has the potential, whilst Ripple has already got this ability to give you the fees and the FX rates up front. So it's a tick for Ripple and a question mark for GPI as to whether they're going to get there in the future. The next criteria we're going to look at in the comparison is remittance data. Remittance data and a rich set of remittance data is really key to a corporate customer. You add data to the payment when you send it out, whether it's a reference or other information, and you want to know that that information is going to get to the beneficiary. Oftentimes this information is really crucial for the beneficiary as well, so they can do things like reconciliation against invoices. Now both Ripple and GPI pride themselves on the fact that you get all that rich remittance data attached to the payment, processed all the way through to the beneficiary. So simply, it's a tick for both on this one. Next comparison criteria is the network and scale of the solution. It's really crucial this because as a corporate customer, what you want from your cross-border payment solution is a guarantee that you can reach anywhere in the world, any currency, and from a bank's perspective, and it's critical to include the fact that both Ripple and Swift GPI are very focused on the banks. So as a corporate customer, you connect to your bank and the bank then connects their infrastructure to either the Swift payment rails or the Ripple network. And as a bank, you want to know that with your cross-border solution, you can process millions of transactions a second. So to the first one on network, can you reach anywhere in the world? Well, yes, absolutely you can with Swift because the existing Swift rails have been going for a number of years and basically used by pretty much every bank in the world. So you can definitely achieve scale of banks, of currencies using Swift GPI. Not so yet with Ripple. They need to demonstrate that they can get their solution into the hands of a lot more banks globally before they can claim to be competing with a network the size that Swift has today. In terms of scale and the ability to process volume, then Swift GPI is already processing about $100 billion every day over Swift GPI. And again, Ripple has got some way to go to match that and prove that they can process that kind of volume and indeed process the volume of transactions per second that the Swift network can. So we'll give a tick to Swift on this one. And again, as the pace of technology develops, then there's no reason why Ripple can't get there in the future, so we'll give them a question mark on this one. Last comparison criteria on the board is security and trust. Very important, this one, so certainly last but by no means least. So we're talking about corporate payments moving cross-border. So what we really want to ensure is that the payment isn't going to go walkies somewhere in the middle of the payment chain and you never see it again. It's a lot of money we're talking about, so loss would be bad. Catastrophic, you might say. So in terms of the security aspect, then the fact that the SWIFT network has been going for 50 or 60 years clearly means that whilst it has some issues in terms of things that need to be addressed to improve it from a customer experience perspective, certainly the banks place their trust in the SWIFT network and the SWIFT rails. And this is really critical actually, because as a corporate customer, then if your bank trusts the rails, then you trust the rails. You tend to, the banks have had a lot of bad press since the financial crisis, but by and large, they are still the institutions that corporate customers trust to move their money around the globe. So in terms of security and trust, then definitely a tick for the SWIFT network. And again, I think that this still is unproven from the perspective of Ripple. And back to the point, they need to get the solution in the hands of far more banks before they can stake a claim to have the same level of trust in their solution that the SWIFT network does. So it's a maybe for the future for that one. So where we've ended up, by my calculation, is that we've got 4 ticks for SWIFT and 3 ticks for Ripple. So it's a current 4-3 lead for SWIFT, and I say it's a lead and it's not a victory, because what seems to me to be certain is that this argument and this debate and this race for improvements in the cross-border space is going to continue. The way that I see this is that Ripple was like a big stick that has poked the SWIFT incumbent bear. Well, the bear's awake, he's built GPI, and I can't wait to see what the challenger has got hiding behind his back as well as a big stick to continue this fight. Because one thing's for certain, if this continues and the competition continues, then it means only good things for the corporate customer in terms of improvements for cross-border payments. That was this episode of GPI Friday. Next week, Andy Howarth.
But there is a debate between Ripple and SWIFT discussing their technology, and so I believe it was this gentleman here at Steedes, that's XRP_Crow. I highlighted him in another video of mine. He created this infograph and it's on his website. If you want to go check it out, steedes.hr, that's steedas.hr. And so it kind of gives an unbiased perspective on RippleNet versus SWIFT's GPI technology. And guys, there's pros and cons, okay? This is not going to be FUD. There's pros and cons in all kinds of situations. So we just kind of have to take it for face value and understand the benefits of the tech. So Ripple versus SWIFT, comparison of the 2 most popular cross-border payment networks. And so I'm going to obviously link this in the description if you guys want to take a look at this infographic yourself. So we have RippleNet and SWIFT GPI. Ripple is the company that created the Interledger Protocol, which underpins their global payments network, RippleNet, which includes banks, payment providers, and other financial institutions. SWIFT GPI, Society for Worldwide International Financial Telecommunications. SWIFT introduced its GPI, Global Payments Innovation Initiative, as a way of enhancing cross-border payment processing. Really, they did it as a way to combat these guys because they were realizing that their technology was getting old. Ripple came onto the scene, and so they had to respond somehow. Founded 2012, Ripple 1973, SWIFT, headquarters San Francisco, SWIFT in Belgium. Guys, I'm just going to go over this kind of quickly. Again, you can look at the infographic if you wish. I will link it in the description. Brad Garlinghouse, CEO, Gottfried Leibrandt, who is no longer the CEO of SWIFT, he did step down. Employees, over 300 at Ripple, over 2,000 at SWIFT. Number of clients, 150 plus banks and financial institutions on RippleNet, 160 plus banks and financial institutions using GPI systems. Now we got to remember, GPI has been around since 1973. Sorry, not GPI, SWIFT has been around since 1973, but their GPI system, I'm assuming they are pushing that for some of their clients today because they realize that, times are changing and so they need to figure this out quickly. Some major clients, as you know, American Express, MUFG, Standard Chartered SEB, Santander, Cambridge PNC, Bank of America, CMIB Bank, Qualix, SBI Holdings, and I can't even read that out, Saudi Arabian Monetary Authority. Okay, that's what it says. Citibank, RBC, JP Morgan Chase, Deutsche Bank, so a few others here, major clients. Not going to read them all out here. Let's keep going. The tech, RippleNet, processes payments, sources liquidity, sends payments. And of course, Ripple converged all these products in September 2018. Now RippleNet clients can use all three products at the same time. With Swift Global Payments innovation, improvements over the old Swift system, same day transfer of funds, transparent fees, end-to-end payment tracking. Okay, good for you guys, good for you. Instant payments, yes and yes. Instant settlement, yes and no. Settlement means that a core ledger is being updated in real time. Payments are just being sent, but have to be settled on the bank's ledger individually. Liquidity sourcing, yes, through XRP, and no, because they are not using a digital currency, and no, because they still need to use Nostro and Vostro accounts for this, so the financial institutions must pre-fund Nostro accounts on each side of a transaction in that country's native currency, tying up capital that could be used in more productive ways, around $20 trillion globally. Digital asset XRP can be used to lower the cost and improve the speed of liquidity for these cross-border transactions. Ripple's XRapid solution uniquely uses XRP to offer on-demand liquidity. And guys, this is the big thing here that banks have got to realize. You know, I think if Ripple went into banks and actually showed the CEOs, the decision makers of these institutions, this infographic, it could change minds. Because when you see information, a lot of people are visual learners, and you see this information in a visual chart here, it's very apparent that Ripple has a leg up on Swift's GPI. So transfer speed, real-time settlement, 3 to 5 seconds, so around 4 seconds. Intraday payments, 30 minutes to 24 hours. And it's not even settled instantly, okay? FX transfer determined by bank. Data bidirectional, unidirectional technology, blockchain technology, that's RippleNet plus the ILP, interledger protocol, and Swift uses a messaging service technology that has been around since the 70s, the early 70s at that. Architecture, decentralized versus centralized, settlement process, consensus versus batch clearing and settlement currency. Now here's the best part. Cryptocurrencies and fiat currencies can be settled instantly with RippleNet, whereas fiat only can be settled with Swift's GPI. And guys, this is important because we know banks are now creating, or rather central banks are now discussing for their country to be able to create a cryptocurrency version of their current fiat currency. So you would get a crypto greenback or a crypto yen or a crypto euro, possibly a crypto loonie dollar in Canada. And so what is Swift going to have to do? Change their whole technology again? Well, yet to be determined. Key features, some advantages here and disadvantages. Guys, I don't want to go through all this. I'll link it in the description. You can read it all. But the conclusion is very interesting. Thanks to Ripple's innovative and advanced distributed ledger technology, DLT, and its capabilities to address interoperability and scalability issues, Swift is being forced to improve payment processing standards and correspondent banking, a decades-old and inefficient system. At the end of the day, this will benefit both users and financial institutions in the future. Nevertheless, Ripple offers better, faster, and cheaper technology services to its clients and customers worldwide. So guys, when you're invested in XRP and your family asks you, well, what is this XRP? What is Ripple? You can just send them to this infographic and it pretty much explains everything, especially people in the finance world. I know, for example, I was just talking to my neighbor the other day and I didn't actually realize he worked in finance. And so I asked him if he knew what Ripple was or XRP. He, of course, knew what cryptocurrencies were, and he said his firm was not interested in touching cryptocurrencies. I go, well, have you heard of Bakkt? He says no. I go, have you heard of Ripple? He says no. Have you heard of XRP? No. And then when I did the comparison to Swift, because he had heard of Swift, obviously, he's a financial guy. And when I compared it to Swift, it seemed like I had just blown his mind. There are a lot of amazing features here that RippleNet is improving upon. The 4-second settlement was what really got my neighbor. And so, guys, I'm so glad that the XRP community is so vibrant and thriving with information. Again, another special thanks out here to @Stidas for creating the infograph, Nick Foong for posting this on Twitter. Thanks so much, guys. I want you to read this information for yourself, and I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.
Together, we are at the heart of the global financial system. We move the transactions that keep the world's economies working. Transactions that represent real business ambitions and the livelihoods of our friends and family. What we do underpins the world's way of life. Today, that way of life is changing faster than ever. At Swift, we are evolving too. We use our expertise to help our community move faster and work smarter. Payments and securities transactions should be instant, frictionless, and transparent. They should have end-to-end integrity and global reach. This entire process should be driven by smart data and shared services to unlock huge opportunities, to help you strengthen in existing markets and open bold new possibilities for the future. We've laid the foundations through game-changing services and technologies that are already transforming the industry. Now, we're going even further, taking innovation to the next level by transforming the Swift platform with new capabilities so you can reduce costs and offer increased value to your customers. We are delivering the infrastructure to help you adapt, thrive, and grow, and together, shaping the future of payments and securities faster, smarter, better.
Payments are entering a new era with ISO 20022, the new language for domestic payments and correspondent banking. And corporate customers are set to benefit thanks to the advanced reconciliation and treasury opportunities the new standard makes possible. Let's take an example. Coffee Co. is a boutique importer, roaster, and distributor of coffee beans based in London. Coffee Co.'s supplier in Indonesia has asked to be paid in US dollars to its local account. Coffee Co. is happy to do this, and to make life easier, has agreed with its supplier to aggregate multiple invoices into a single payment. The batch of invoices to be paid includes one invoice that is not correct and needs adjustment, and a credit note from a previous transaction that needs to be reconciled. Coffee Co. would like to present all this information in a single instruction, with a single payment setting the entire net amount outstanding. Using today's MT standard, they would not be able to do that. There is not enough room in the remittance field to describe all that is needed in a structured way that can be automatically processed. With an ISO 20022 based instruction, though Coffee Co. can pay all outstanding invoices, apply a credit note and contest a line item on an invoice. A single payment can describe multiple rich and structured elements, including dedicated fields to differentiate between commercial invoices, credit notes, and invoices that need adjustment. Declare local purpose codes required to report to the Indonesian regulator. Uniquely identify invoices in the buyer's ERP for easier reconciliation, and, in cases of dispute, the amount to be adjusted and reason for adjustment. All parties in the payment chain know exactly what is being paid and settled, and there is no need for a single phone call or email. All this information can be reconciled and immediately posted to Coffee Co. and its supplier's ERP system, significantly driving supply chain and working capital efficiency. Corporates are ready, and with the adoption of ISO 20022 in correspondent banking and all major reserve currencies, end-to-end payments will be rich and structured, enabling the next generation of treasury services and a new era for corporate payments. ISO 20022 quality data means quality payments.
The securities industry can be complex, with each transaction involving multiple parties and often complicated processes. At Swift, we are addressing these challenges, working with our members to co-create an end-to-end transaction monitoring solution. Settlement instructions will contain an agreed common reference throughout the transaction's lifecycle. This will enable you to track settlement instructions and get early visibility on any issues. We will also provide an SSI enrichment service, so you don't need to include all of the SSI information in your original settlement instruction. At the same time, the Swift E2E transaction monitoring solution will capture the status and settlement details. It will provide all parties with the visibility on the status of the transaction from end to end and in real time. If there is an issue with the settlement, the details will be sent to all the parties, allowing them to act quickly to fix the problem. This will reduce the risk of missed deadlines or failed trades and the related costs. The Swift platform will also use matching status and settlement confirmations to provide a near real-time view of holdings for all parties. This will enable better liquidity and investment management. And customers can access useful benchmarking and analysis data through easy-to-access dashboards. At Swift, we're transforming our platform to address the key challenges you face and add even more value to the post-trade industry. The solution will help you reduce costs, increase efficiency, and enhance risk management. You'll be able to more easily comply with settlement discipline regimes, manage exceptions, gain visibility on settlement status, manage shorter settlement cycles, and much more. Talk to us today to find out how you can get involved.
Have XDC now, but it's still a different animal. As a first and only supported cryptocurrency for the settlement. Well, now we have XDC. So the deployment of Corda Settler and its support for XRP as a first settlement mechanism is an important step in showing how powerful ecosystems cultivated by the two world's most influential crypto blockchain communities can work together. While the settler will open all forms of crypto and traditional assets, this demonstration with XRP is the next logical step in showing how widespread acceptance and the use of digital assets to transfer value and make payments can be achieved. Okay. So while Ripple's XRP is the first currency supported by the Corda Settler in the future, it is very likely that R3 will make settlements in other cryptocurrencies, where that's where XDC comes into play. Also other currencies too. So the Corda Settler is an agnostic to which payment method is used, whether it's JPM coin, Wells Fargo coin, BAML coin, Bitcoin. Just threw that in there. All right, HSBC coin, it doesn't matter to us that we have no horse in that race and we don't have any financial incentives one way or another. We're just trying to get as many people onto the platform as possible. So it continues here. I don't want to make this too long. Let's go ahead to the Swift. Let's go right to Swift. Okay, so Swift partnership. Oh, also, by the way, I'm going to put the link to this article down below so you can look it over yourself. All right, so Swift has announced its partnership with R3 Corda Settler to launch the proof of concept. The trial would see the integration of Swift's payment standards framework, GPI, as I stated before. This is important for people to understand. The GPI, so when you hear Swift, think automatically with GPI technology that they're using. So, all right, so the Corda Settler to launch a proof of concept. The trial would see the interaction of Swiss Payment Standard Framework, GPI, with R3's trade finance platform. So following the recent launch of the Corda Settler, allowing for the payment obligations raised on the Corda platform, it was a logical extension to plug into Swift GPI. The Swift GPI has rapidly become the new standard to settle payments. So right here, and this is all before the lawsuit that came into play and stuff like that. This is why I said that I think it was multiple things. that was pressuring Jay Clayton to do it. I really do. So continuing here, that Swift GPI has rapidly become the new standard, as I stated. All right, so all blockchain applications running on Corda will thus benefit from the fast, secure, and transparent settlement provided through Swift GPI banks. So honestly, this is truly Ripple's rival is GPI. So global payments innovation, the trial will integrate Swift GPI link cross-border payments gateway with R3 Corda's settler platform to enable the continuous monitoring and control of the payment flows. The settlement payments through their bank and receive credit information, Swift and GPI in a messaging system based on existing messaging standards. So it's still an old messaging system. So I'm going to go ahead and show a clip of Godfrey from Swift actually explaining about this proof of concept. This is the proof of concept experiment that they were talking about in this conversation. And Swift did not have a good report about it. Well, they said it did work, but here, listen to what he says.
Gottfried, why not use Ripple's technology to do that?
Because, well, we'll have to see. I think what we are seeing, we had a long discussion about blockchain versus API. What we could see is the API technology, which is at the heart of what we do with GPI, is here today, and banks are able to integrate it. Blockchain, we think, is further out. We've run a large proof of concept with blockchain to several proof of concepts, I should say. One of them to put it inside the reconciliation between banks, Nostro Vostro, the account reconciliation between banks. We had 40 banks participate in that. It was the largest Hyperledger implementation outside IBM, really big. 500 bilateral relationships on the blockchain, 500 individual blockchains being run. When we evaluated it with banks, they said, yeah, it works as a proof of concept, but it's not clear to us that it's that much better than what we have today, given the migration cost. And a lot of it is about the banks themselves who have to migrate and be interoperating with that new platform. We find that for them it's much easier to integrate with APIs and what we're now offering them with GPI than it is with blockchain.
So realistically, I see this as GPI versus Ripple. So the proof of concept from what he was talking about was exactly in that article. I'll show you again. All right, so this was the trial. It said, end of January, Swift announced its partnership with R3 Corda to launch a proof of concept. This trial will see the interaction of Swift's payment standards framework, GPI, Global Payments Innovation, with R3's trade finance. And as you can hear from Godfrey, banks aren't ready for it, according to him. but he truly is pushing that GPI. All right, in case the volume was kind of messed up on that last clip, some of these videos, they have different volume settings, so I got to adjust them. Let me play this again. I turned the volume up. Sorry about that.
We will see that evolution thanks to the transparency that the platform provides.
Gottfried, why not use Ripple's technology to do that?
Because, well, we'll have to see. I think what we are seeing, we had a long discussion about blockchain versus API. What we could see is the API technology, which is at the heart of what we do with GPI, is here today, and banks are able to integrate it. Blockchain, we think, is further out. We've run a large proof of concept with blockchain to several proof of concepts, I should say. One of them to put it inside the reconciliation between banks, Nostro Vostro, the account reconciliation between banks. We had 40 banks participate in that. It was the largest hyperledger implementation outside IBM, really big. 500 bilateral relationships on the blockchain, 500 individual blockchains being run. When we evaluated it with banks, they said, yeah, it works as a proof of concept, but it's not clear to us that it's that much better than what we have today, given the migration cost. And a lot of it is about the...
All right, so in this clip I'm going to play Charles Hoskinson. He's explaining how the old legacy systems are going to fade away with this new technology that's being implemented. Now, and this is just speculation, guys. Please take it with a grain of salt. But I was thinking about a statement that I saw about how XRP and Flare Finance, I'm going to look more into Flare Finance. I've only gone over a little bit, but how they could have been possibly a Trojan horse. So go ahead and give this guy a listen.
All there. Once mankind knows they have fire, you can't go back. You can't change that. You can't put that genie back in the bottle. Central banks will fade away. It's just going to happen. Your conventional legacy banks are going to fade away. The payment rails that are so nepotistic and corrupt and slow and inefficient and expensive will fade away. And good riddance. It wasn't us who charged 15% to some of the poorest people in the world to move their money home to take care of their parents. It was the people who ran the old system. It wasn't us in this industry who charged 85% interest to lend $100 to a subsistence farmer desperately trying to survive after a drought. It was the legacy financial system. It wasn't our industry that laundered hundreds of billions of dollars for drug dealers and evaded sanctions and participated in oil for food and all kinds of these horrible programs that ended up enriching and empowering some of the worst human beings the world has ever known. It was the legacy financial system. And never allow them to say that ours is the industry that's the risk. Ours is the industry that's the antidote to the excesses, corruption, and nepotism that we've found. This is an industry of frustration that has now been replaced by an industry of creativity and innovation. We're going to change the world. It's just that simple. We didn't ask permission. We came here and we're going to get it done together. And
awesome, powerful words from Charles Hoskinson. I'm going to put the link to this video down below. And it was interesting how he said that we're going to see these old legacy systems fade away. So with that being said, somebody might say, well, isn't XRP a banker's coin? So the technology was built to provide transactions for banks, yes, but it's still able for financial institutions to also use it. It's decent as the network is growing. What I was really trying to reach out to people is, could somebody call it a banker's coin? Yes, they could call it because the technology was made and created for cross-border payments for banks, but also other financial institutions. All right. I see more of XRP as not so much just a banker's coin, but I'll add on that I think it's going to be used as a reserve, basically a global bridge currency, a token for liquidity that anybody can use. You don't have to. Does the XRP need the banks to live, or do the banks need XRP to live? So that's the question right there. So a person can send and receive XRP to any other financial institutions, even a private entity can receive XRP without a bank. So just put that to thought. All right, so now I want to bring you to another, it's an older article, like I said, though, but we're kind of connecting the dots. We're seeing where we're headed. So Ripple's CEO, I've actually seen some videos and I was searching for the video, and he stated it a few times, okay, that he's basically said that they're taking over Swift. So this is kind of like Swift's like last leg, and I think they're trying to buy so much time. So I hope that this clears up any kind of confusion if people are thinking that, hey, Swift is always going to be here. They're using R3. That's true, but they're using GPI technology, and I think it's this transition. As Charles Hoskinson said, now nobody knows the future, okay? But if we are transitioning, it wasn't going to be, it was going to allow, Swift was going to be allowed to integrate the GPI with the legacy systems, and then we're going to see it faded away. And that's personally my opinion, but go ahead and comment down below your opinions, guys. I really want to see what's on your minds and so forth. So, but anyway, let's go over this article. So Ripple's XRP Brad Garlinghouse says that Ripple is taking over Swift. All right, so it states here that XRP is redefining its presence in the market, particularly the remittance sector. This sector has been dominated by traditional systems like Swift. However, the chief executive officer, Brad Garlinghouse, reckons that the network is taking over Swift's market share by a bang. Moreover, in a recent interview with Bloomberg, and CEO clarified that the rumors of Ripple's Swift integrations are just that, rumors, he clarified. So there have been multiple times where Ripple has gone to Swift and trying to create a partnership, and I've shown clips in that before. So in the link, I'm going to put a few links to some videos that I recently made to any newcomers that find this video interesting. I'm going to put XRP as legend and then another video, and that'll give you some good information to go over. And remember, though, it's all speculation. There are a lot of facts in these videos, but we also try to connect some dots and have fun and try to speculate. So, all right, I'm going to tell everybody right now that one of my favorite channels to watch is Digital Asset Investor. I think he's a very smart man, and I like to have as an environment of grown-ups on this channel too, not children. And so there's a lot of information out there, and I think that if we come together as a community, we can learn a lot. And that's one of the beautiful things about the internet and social media, is that if we do bring our knowledge together in numbers, we can solve probably a lot of things. But after doing some thinking about this, we are in the crisis that we are with liquidity and so forth. Now imagine if the whole banking system collapsed and we said, you know what, we're just going to go completely digital. We don't need banks, they're gone. Do you know that possibly could cause a major collapse? Not everybody's ready for this technology, guys. What is it, like 1% or something like that, less than that, of the world's population's into crypto? Now, do you think that if we just let the banking system and this financial trade gap that's in the world right now, and we just let it go and say, hey, we'll just go to this? I think there has to be a gradual transitional change from, that's why we have these old legacy systems. It's almost like Swift is getting thrown a bone and saying, you know, you're on your last leg. This is the way it's going to be. But not everybody is ready for this technology. So if it would have been a serious, abrupt change, I don't think it would have went over well. It could have even started maybe a world war. We would have had a huge collapse. So unfortunately, we still need the banks during this transition. But as Charles Hoskinson stated, that he sees a lot of these legacy systems fading away and the banking system fading away. So where does that leave XRP? As I stated before, though, it's going to be fully, as the system network grows, it's fully decentralized. We won't even need the banks. With Flare Finance, this is another topic I want to talk about. Flare Finance, that is going to be the true new banking system, where you can get loans and so forth and all your financial needs on that platform or program. So I'm tired, guys. It's been a mouthful. But yeah, go ahead and comment down below your thoughts, your opinions. And I want to say thanks, guys, so much for watching another edition of Token Topics. You all take care and stay safe.
Hey, what's going on, crypto people? It is your boy, the Crypto Siege, with another day in the life and the crazy life that is the digital asset space. Good morning, guys. How are you? Hope you guys are doing outstanding. I'm shooting this video in the morning, but I'm actually not going to post it probably until the afternoon. Yeah, man, crazy. Get a chance to get 2 videos in. Why not? Right? Why not? I still will be doing the 2 streams, so plan on seeing that 3:30 and between 8:30 and 9 tonight as well. Absolutely exciting times, guys. So listen, major shout out to Sam I Am, to the Lifeboats. He was the first one that I saw report on this. I am going to talk about this in depth, a little more in depth on the stream this afternoon, because I think it is really significant. And it is this article and that Santander apparently sent article document that Santander, the bank of Santander sent to the powers that be in reference to sort of this whole new thing with the Dodd-Frank Act that happened in 2008, where they wanted this more transparency and fees and this type of thing, and being able to get that out in the messaging that clearly what the fees are in the messaging and this type of thing. Well, Santander was addressing Swift's GPI and how it is not effective. It is not going to solve the challenge that the regulators, if you will, are wanting, because the messaging that this GPI does, it doesn't provide it early, it provides it afterwards in terms of costs and fees, from what I don't understand it from Sam. And so to get this major global bank Santander, which is basically saying, look, we know that you guys know that there's some fintech companies out there, right? These non-bank companies, they call them, but these fintech companies that can do something, but they don't have the reach in terms of the network, and they're not at scale yet to handle volumes like a Santander would handle. Swift has the network and they can handle the volume, but they're not able to provide the things necessary in that GPI that the regulators want. This is Santander acknowledging this. So they understand that there's a fintech company out there that can provide this, everything that the regulators want. KYC and AML, transparent fees in the messaging. It can provide, the RippleNet can provide everything that the regulators want. And Santander knows it, but they also know that RippleNet is beginning, especially the ODL platform. It's in its infancy, and they understand that it can't handle the volumes yet. But in order to meet what the regulators need, they know the Swift GPI cannot do it. And so it's just a matter of time before RippleNet will become, if you will, as to put it the way Two Lifeboat said, the de facto option. It's just a matter of time. 2020 is going to be a great year. And they also know that there's this other non-bank money transmitter that is MoneyGram, that because they're leveraging the power of RippleNet and its greatest asset, XRP, that they can do the same things that the regulators are wanting to do now. They're using it on a limited basis. MoneyGram is only 10%, but they're looking to ramp up the quarters as well. So it's just a matter of time. And the banks know this. The banks know that MoneyGram's doing its thing, right? Like I've always said, MoneyGram's use of the ODL at XRP is, in fact, old money's, real money, Wall Street's proof of concept. They understand the business model, and they're paying attention, especially the banking world. They're paying attention. They're listening to the Q2 and Q3 reports just like you and I. They're hearing these buzzwords, these code words for additional revenue streams because of this RippleNet partnership and the use of XRP. They're listening, they're hearing it loud and clear. And they're scrambling. The banks are scrambling to try to figure out a way that how they too can leverage this thing that is the RippleNet. And the only way obviously is to become part of the RippleNet, and they understand that. But for Santander to acknowledge the shortcomings of the Swift GPI is massive. And as I always like to say, if Santander knows, so do the other major banks. That's why Bank of America is making the moves that they are making. And if you didn't catch my quasi deep dive on that, you got to go check that out where my videos. Go check that out as well. Bank of America is not resting on their laurels. Bank of America is making moves. They are being proactive. They are being proactive. So I love that. So guys, yeah, we're going to cover that in the stream this afternoon. Santander is essentially saying, look, the Swift GPI is not the answer. It's not the answer. And the people from Ripple, whether it be Brad Garlinghouse on stage, calling, their move, that GPI is basically going from a horse and buggy to an automobile. But he points out, why would you just go to an automobile? Why not build a Ferrari, right? Why not build a Lamborghini, right? And that's what RippleNet is. That's what RippleNet is. And so, interesting article. I can't wait to cover that a little bit more on the stream this afternoon. Santander Banks acknowledging that they understand that there's something else out there. They understand that it's a quote-unquote closed network, but it can provide the things that the regulators are wanting, which is transparency in fees and costs, KYC and AML, and they also know that RippleNet can literally tap right into the Swift network without a problem. It just needs the word. It can tap into it, and those 11,000 banks on that network will now be able to meet the requirements of regulators. That's the bottom line, because they got there's a deadline for this meeting requirements, right? I believe it's something about June 2020. So they got to meet it. They got to up the game. And Swift GPI is not the answer. And the people in the magnitude of Santander understand that. So guys, that's really, really exciting to know. And it's just cool to understand that we're part of something that's providing the answers to so many problems in the financial payment space. How cool is that, guys? It's really, really cool. So anyway, guys, listen, I'm going to end this video like I do all my videos and tell you to never, ever forget this. That old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating? Or are you standing on the sidelines? Here's what I do know. That the battle for you has already been fought. And the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.
Hello folks, you have reached the cryptocurrency news portal, and today we're going to go over some information about Ripple and XRP, because Ripple announced a new use case for Ripple and XRP. It says Ripple launches new service utilizing crypto asset XRP to fund instant cross-border payments. So let's go through this together. Ripple's new, quote, line of credit service is now live, giving the company's customers an opportunity to borrow XRP for cross-border transactions. Financial institutions and money service providers using the San Francisco companies, I don't like calling them a startup, the San Francisco companies, XRP-powered cross-border payment product, ODL, or on-demand liquidity, can borrow Ripple's native currency for a one-time fee via an approval system that will move faster than legacy financial options, according to a press release. So let's go through the press release together, then come back to this. But I think that what is interesting is the one-time fee, and the approval system is quicker, because we all know that loan processes are cumbersome and take a long time. So let's pop over here. This is from Ripple Insights. This is the press release that they sent out about it. The headline here is Fund Instant Cross-Border Payments with a Line of Credit from RippleNet. So this is directly from Ripple and Ripple's Insight. Today, Ripple announced and launched a line of credit, a new beta service on RippleNet that allows customers using on-demand liquidity to source capital on demand to initiate cross-border payments at scale using the digital asset XRP. Limited access to working capital is one of the biggest barriers to growth for many companies. This is very true. Unlike incumbents who have large balance sheets that allow them to scale their business quickly, many fintechs and small and medium-sized businesses, enterprises, SMEs, lack the capital and resources to compete. Faced with stalled growth, customers turn to creating bespoke credit arrangements with each partner in each destination market. Each arrangement requires additional overhead and management, making it slow, burdensome, and an ultimately inefficient process. Very, very true. Ripple's line of credit solves the problem for our customers by providing upfront access to capital for every market through one simple credit arrangement, simplifying access to financial solutions that accelerate business performance and scale. Those using ODL on RippleNet can purchase XRP from Ripple on credit. Customers are charged one fee on the amount borrowed with no hidden fees and can receive approvals faster than through traditional means. RippleNet customers simply take advantage of the one simple XRP-based arrangement everywhere that ODL is available, regardless of sending destination or fiat currency, and costs a lot less than most other available credit options. Line of credit has already been piloted by RippleNet customers who specialize in cross-border money transfers, are experiencing the benefits firsthand, helping these companies grow their business and make global transfers more affordable for more people. It also opens up opportunities to use the capital freed from pre-funded accounts, Nostro and Vostro accounts, folks, and further invest in their business to enter new markets and reach new customers. So they can source capital this way and they can get rid of their Nostro and Vostro accounts. This is great for the world economy. RippleNet uses technology to deliver financial solutions vital for businesses that were once offered by multinational banks without the cost and overhead of legacy systems. By leveraging distributed ledger technology, DLT, and XRP, the universal asset for the exchange of value worldwide, Ripple can deliver access to services that were not previously possible. Line of credit is the latest step in Ripple's vision to enable the Internet of Value and break down the barriers in finance. It's an exclusive new service that financial institutions and money service providers can use to consistently provide customers with low cost-effective, real-time cross-border payments. Get in touch today to find out more. And here's a little note. Line of credit is only for use by eligible institutional RippleNet customers and not by consumers, retail consumers, or the general public. Availability varies by jurisdiction and is subject to change. The line of credit is treated as a form of payment to finance a purchase of XRP and is not a lease or loan of XRP for tax purposes. Interesting they put that little note in there because I've actually seen some questions out there in the Twitterverse asking these types of questions. They may not have seen this whole press release. That was the press release directly from Ripple. Let me know in the comments section below what you think about this. So let's finish up this article from Daily Hodl. The XRP-based arrangement is the same in any location served by ODL, regardless of sending destination. Ripple also says it will be cheaper than most other available credit options. Ripple says it's the company's latest move to build out the Internet of Value, which we just talked about, and make money as easy to send and receive as email, linked to Ripple release that explains the term. So we just discussed this. Ripple's line of credit solves this problem for our customers by providing upfront access to capital for every market through one simple credit arrangement, simplifying access to financial solutions that accelerate business performance and scale. So Ripple launched ODL back in October of 2018, so a couple years ago. The technology is now live in 5 remittance corridors, moving funds between the US dollar, the euro, the Mexican peso, the Philippine peso, and the Australian dollar. So let me know, folks, in the comment section below what you think about this new use case from Ripple and what do you think about this product. And by the way, a quick little housekeeping issue. Hey, just smash the thumbs up button if you like this video. It really helps me out, puts a smile on my face, and helps out with those like Google and YouTube algorithms. And also, I've started an email distribution list if you want to sign up. It's in the pinned comments in the comment section below. It's a free daily newsletter about the crypto space. So if you want to sign up for free updates about the crypto space, again, it's in the pinned comment in the comment section below. So the next article is just a quick little just in from you today. Ripple now offers XRP loans to RippleNet customers. They have a little different extra little take on this. So it says San Francisco-based blockchain company Ripple has launched a lending offering called Line of Credit. This new service, which has already been piloted by members of the RippleNet network, is currently in a beta testing stage. As reported by you today, Ripple's foray into lending came to light back in mid-May after the blockchain Decacorn started looking for a director of product management for its loan platform. And I always talk about that, folks, and that's why I highlight the job openings at Ripple on this channel often, because open positions at a company are usually a leading indicator of where they're trying to go. So back in May, the company remained mum about the details of its new offering, which makes sense. They got to get all their ducks in a row. Although Ripple's ex-head of XRP markets, Miguel Villas, did offer a glimpse of them on a podcast as early as March of 2017. Wow, 3.5 years ago, calling lending one of the levers that the company would be able to pull. The new product now allows RippleNet members to borrow XRP from Ripple by paying a one-time fee, avoiding long waiting times associated with legacy financial institution. So Ashish Birla, in his Twitter statement, and make sure you follow Ashish Birla on Twitter, the newly appointed general manager of RippleNet, claims that the capital crunch is one of the biggest obstacles for growth of any small to medium-sized startup. Line of Credit allows you to scale and accelerate your business performance. Pilot customers are already seeing results. RippleNet is evolving from bi-directional messaging, settlement, liquidity management to lending. So they are continuing to get new and more use cases out there. Branching out into the lending puts Ripple one step closer to becoming, quote, the Amazon of crypto, the goal that has been repeatedly mentioned by the company's CEO, Brad Garlinghouse. And he says, Amazon started as a bookseller and just sold books. We happen to have started with payments. 2 years from now, you're going to find that Ripple is to payments as Amazon was to books. They sure hope so. Ripple is by far the largest holder of XRP that controls the lion's share of the token's total supply. We all know that, and we know they release more out of their escrow accounts at the beginning of every single month. So let me know in the comment section below again what you think about this new line of credit or XRP loans. So moving on, Ripple partner dLocal rolls out its payments network further in Latin America and the Caribbean. So let's go through this article together there as well. There's just 2 bullet points. One is major cross-border payment firm expands to new markets, and the other one, dLocal raises $200 million from investors for further aggressive expansion. So in a recent piece, Business Wire reported that Ripple partner dLocal has expanded deeper into emerging markets. It will now link its customer merchants with markets in 3 new countries to accept and distribute local payments. So this is the major cross-border payment firm expanding to new markets. So dLocal is a top-tier transnational payment service that brings global merchants together with buyers in the developing world. This time, the company announced that it has expanded into 3 markets in the Caribbean and Latin America region, the Dominican Republic, Panama, and Costa Rica. dLocal now works with more than 300 local payment companies in 23 emerging countries using its own API-based payments platform. The company is also present in the top 5 countries in the emerging market with the highest population: Mexico, China, Brazil, India, and Indonesia. So this is them raising $200 million from investors for further expansion. Almost a month prior to this new expansion, the company raked in $200 million in a new funding round, planning to use these funds to turn itself into the top company in Latin America backed by venture capital. dLocal intends to utilize the millions it raised in order to expand its presence to over a dozen new markets in the next year and a half. In Costa Rica, the Dominican Republic, and Panama, dLocal now issues MasterCard and Visa bank cards. Together with the newly added markets, Ripple partner dLocal now works with 450 customers and links them to almost 2.5 billion consumers in emerging economies. So more and more forward momentum for the Ripple's partners, the crypto space in general. So let me know in the comment section below what you think about D-Ripple, folks. All right, major partner SBI Holdings plans STO via DLT platform. All right, so check this out. Japanese financial giant SBI Holdings has announced that it intends to initiate its first business in the sphere of security token offering. You're going to be hearing a lot about that, folks. So STOs, security token offerings. So about STOs. STO is a fundraising model that offers investors so-called, quote, security tokens. Those are securities emitted in digital form on the blockchain as opposed to regular stocks or corporate bonds. Japanese regulatory rules define STO as the right to display securities for electronic record transfer, etc. The company decided to enter this sort of business after revisions of several financial instruments and exchange acts last year as well as in May of this year. SBI Esports to perform an STO on the iBet blockchain. So the article on the SBI website features SBI Holdings and two of its subsidiaries, SBI Esports, which was just launched in June of this year, and SBI Securities. The latter will be conducting the security offering of SBI Esports on October 30th. SBI Holdings will take part in the fundraising procedure as underwriter. The security token offering will take place via blockchain platform iBet, provided by Boostry Company Limited. So SBI Esports deals with the management and consulting of professional esports teams and esports media. Previous STOs done via iBet. So earlier this year, the first security token offering in Japan was conducted via the iBet blockchain platform. It was initiated by Nomura Holdings and conducted via its subsidiary Nomura Securities. The latter was an underwriter and it issued the digital asset bond via iBet for NRI, Nomura Research Institute. It is the biggest economic research and consulting firm in the country, part of the Nomura Group, with more than 13,000 employees. So again, let me know in the comments section below what you think about this, folks. I always think when SBI Holdings gets involved, obviously SBI Holdings is a big owner. I think it's 10 or 11% of Ripple, and Yoshitaka Kitao is involved, and he's on the board of Ripple as well. So there's always kind of people working together behind the scenes. All right. This got a lot of play out in the crypto sphere. Ripple is considering relocating out of the U.S. due to unfriendly cryptocurrency regulations. This may or may not be true. This may just be a way to get some headlines and just get some of the legislatures talking about crypto regulation in general. So we always talk on this channel about needing crypto regulation just so that we have the appropriate guardrails in place so the crypto space flourishes in this, since they're in this nascent state right now. So let's kind of go through this. This was kind of popped out there. Ripple Labs, the silicon company behind the namesake payment protocol and cryptocurrency XRP, might move out of the US due to limited guidelines in the digital asset space. So co-founder Chris Larson opened up speculations with this comment. We're even looking at relocating our headquarters to a much friendlier jurisdiction. In Tuesday's LA Blockchain Summit, Larson expressed his displeasure by saying that the United States is woefully behind in the virtual currency domain and the regulation through enforcement policy is detrimental to the industry. What happened? As a last resort, Ripple could move to countries in Europe or Asia which have less stringent cryptocurrency regulations. The United Kingdom, Switzerland, Japan, and Singapore are some of the names that popped up on Larson's list, according to Cointelegraph. Ripple co-founder also lambasted the federal government for sidestepping while China is leading the blockchain innovations with its digital yuan, CoinDesk has noted. Now, I've actually done an article and video about the digital yuan in China. So I'll link that in the comments section below as well. It's an interesting video about what China is doing. All right, so continuing, and that's actually it on this article. So just let me know in the comment section below what you think about Ripple saying this, Chris Larsen specifically, and if you think it would make even sense for Ripple to leave the country. Again, same type of topic. U.S. losing the tech cold war with China, says a Ripple boss. And Ripple's co-founder believes the United States is losing the tech war. At the LA Blockchain Summit again, criticized the United States for not playing a strong enough role in shaping the next generation of global financial system. It's very true. I mean, if the United States doesn't get its act together and put these appropriate guardrails, other countries are going to be far ahead of the United States, and the United States may not be the financial hub like it used to be in the future. So the crypto firm's executive chairman said during the interview, we are in a tech cold war with China, and that goes across spectrum, whether it's communication, surveillance, data, AI, but also blockchain and digital assets. And the reason is that China has recognized that those technologies are keys to who is going to control the next-gen financial system. Referring to the global messaging network used by banks and other financial institutions to quickly, accurately, and securely send and receive information, such as money transfer instructions, he said SWIFT and correspondent banking is not going to be the system we are going to be living with over the next 2 decades. Larsen said the United States has fallen woefully behind, pointing out that Beijing is way ahead of Washington in terms of legislative clarity, resource allocation, infrastructure development, and tech innovation. I think that's very, very true. So let me know in the comment section below what you think about that, folks. All right, only 2 more to go over. Again, Chris Larsen made some comments here. XRP's price is not tied to on-demand liquidity. So he says at the same blockchain summit about the possible exodus of Ripple from the United States, which we've talked about, but his statements about the XRP token, ODL, may have been very interesting as well. So let's just talk about this piece right here. Larsen expressed his opinion that investors should not expect ODL to influence the price of XRP. According to Ripple's co-founder, the value of XRP is much more strongly correlated with Bitcoin and Ethereum rather than Ripple's ODL projects are currently determining it, and that's true. And here's some of the quotes. If you look at XRP Ledger, XRP, the decentralized digital currency, most of what happens in the ecosystems is really correlated with Bitcoin and Ethereum. It's like 100 billion trading per year, that's say. The vast majority is connected with what's happening in the overall market, and it's being driven by all the things that drive Bitcoin and Ethereum. Is it a store of value? Is it maybe just holding it as something that we value in digitized global future? Is it speculation? That's just all happening in its own economic reality, completely separate from what Ripple is focused on. Now, Larsen also explained that Ripple continues to make great progress and positions itself as an enterprise blockchain solution. The gateway for Ripple are the banks and payment service providers who already have 100 out of millions of customers, as well as large wallet providers such as Ripple partner Bcash, which offers over 135 million wallets to people in Bangladesh who otherwise would not have a bank account. Larsen further commented on this. So it's all these financial institutions that bring these enormous amounts of customers and bring all of the other infrastructure that's not changing here, the custody relationships, the security relationships, the AML. So we think this is a good approach to quickly approach these really big networks. So that's all I'll really go over with that. I just thought it was interesting with the Ripple co-founder making those comments about XRP price not being tied to ODL. So the last article we'll go over is this. It says Ripple first DeFi protocol based on Flare networks enters test phase. So the expected launch of Flare networks and its Spark token by December of this year has received further reason to raise the hype. Yesterday, Flare finance team revealed that they have successfully launched a test network for their system called Coston. And as a result, the Flare finance team has begun to interact and present themselves to the XRP and Flare community. Flare's finance product, according to its official website, consists of a platform called FlareX that will operate as a decentralized exchange with a multi-token ecosystem, YFLR, YFIN, YMIN, in conjunction with SPK and the token FXRP. Furthermore, the platform claims they will offer 6 revolutionary products that will allow users to do yield farming and participate in the decentralized governance model. It will also offer users peer-to-peer trading with margin and spot, non-custodial liquidity pool, decentralized insurance coverage, among others, according to the website, which states the following. Soon, decentralized finance will make its way to the XRP ledger through the use of the Flare network, a revolutionary approach to enabling smart contracts for the 3rd largest crypto in the world. Through the use of the smart contracts on the Flare network, Flare Finance opens the door for many new financial products. So you can check it out here, Flare Finance. You can follow them on Twitter. And that's all I wanted to talk about on that subject there. So let me know in the comment section below what you think about this first DeFi protocol based on Flare networks, and they're entering the test phase. So that's it today, folks. Thank you for tuning in to the Cryptocurrency News Portal. I deeply appreciate you tuning in. Again, if you like this video, please smash the thumbs up button. It really helps the channel out, helps me out. Again, puts a smile on my face. When you like the video, the Google and YouTube algorithms like that and show other people. Feel free to share this video with others too to help get this message out. And if you are already a subscriber to the channel, thank you very much. I appreciate each and every one of you. If you're not a subscriber yet, hopefully I've shown you value, and I would be honored with your subscription to the channel. And again, I've started an email distribution list daily about the crypto space. It's a free newsletter if you want to sign up. It's in the pinned comments in the comment section below if you want to sign up for that free newsletter. So thanks again for tuning in to the Cryptocurrency News Portal, and I'll talk to you real soon.
Today I want to talk about the $125 trillion small and medium business enterprise cross-border payments market. Everyone knows that Ripple and XRP are going after the over $50 trillion cross-border payment market for banks and large financial institutions. What most people that are invested in XRP don't know is that they're also going after the growth in the business-to-business cross-border payments market, with the market exceeding $125 trillion, and they're also going after the quadrillion-dollar derivatives and bond market. Guys, we could see quadrillions of dollars going through XRP, but today we're going to keep it quite conservative and just talk about the $125 trillion that's going to flow through XRP. It's going to be the biggest wealth transfer anyone's ever seen. We're going to be oligarchs, we're going to be rich, and it's going to be awesome. Okay, so this is a special document for you guys, exclusively on MetiGTV, so make sure you subscribe for that. Make sure you smash the like button and leave some comments so everyone knows. Push this out to more average peasants. Small and medium-sized enterprises, SMEs, are a dynamic force in the global economy today and a growing source of cross-border payments. This is especially true for emerging markets where small and medium enterprises account for 60% of the employment and 40% of the national income. Although the de-risking trend in emerging markets has hampered international finance, new payments technologies are increasingly providing small and medium enterprises with opportunities to source talent and supplies abroad and expand into foreign markets. Not surprisingly, we're seeing notable growth in the business-to-business cross-border payments market, with the market exceeding $125 trillion in 2017, according to McKinsey & Company. The firm estimates revenues from this market will surge another 9% by 2022, reaching almost $3 trillion. That 9% is probably the inflation on the money supply. I expect the money supply to inflate at least 10% per annum for at least the next 10 years. They're going to pretend it's 2%. Don't tell anyone it's more than 2%. But I believe it's going to be much higher than 2%. Just like McKinsey and Company. The people that found out that $125 trillion are going to flow through XRP. Small and medium enterprises, cross-border payments is a significant portion of this market with at least 10 to 15 trillion annually. It's composed of roughly half and half between accounts payable and marketplace payouts. So not all of these payments are cross-border payments, but the actual payments is $125 trillion. I don't believe they're going to actually capture the entire $125 trillion. There's going to be other companies that want to capture it as well. But I believe when Ripple and XRP are paraded out in the mainstream media every single day as the solution to every single one of their problems, I believe they're gonna take up most of all this. It's composed of roughly half and half between accounts payable and marketplace payouts. It's also worth noting that small and medium enterprise, business-to-business markets are outpacing consumer-to-business, business-to-consumer, and consumer-to-consumer remittances markets, growing faster than C2C and B2C at 5 to 10% per year. Financial institutions stand to gain a lot from tapping into this SME, business-to-business, cross-border payments market. Who do you think is going to help the financial institutions tap into this market? Do you think it's going to be Ripple, or do you think it's going to be Dogecoin? The opportunity in small and medium enterprises, business-to-business, cross-border payments is especially strong in emerging markets. About 2/3 of these payments are from developed countries, while profitability and growth is twice as high in emerging markets as in the developed world. SME cross-border payments revenues in emerging markets has reached as much as 100 to 150 billion annually, according to Ripple's analysis and data from FXC Intelligence and Capronasia. The majority of this revenue is an opportunity found in Asia Pacific and Eastern Europe. Ripple are helping with the cross-border payments worldwide in the highest margin emerging markets and more. We're talking trillions of dollars. Look at all these countries where Ripple are targeting for all this. We're talking Ecuador, Colombia, Brazil, Peru, Chile, Argentina, Austria, Poland, Ukraine, Czech Republic, Hungary, Romania, Turkey, Pakistan, India, Nepal, Myanmar, Laos, Vietnam, Philippines, Indonesia, Bangladesh, Sri Lanka, Thailand, Singapore, Cambodia and Malaysia, and more. Can you imagine your bank account when we tap into all these markets and go live in the quadrillions of dollars? SMEs' needs are specialized and largely unmet by traditional systems. We're going to replace the traditional system with the brand new XRP endgame. Despite recent growth, the SME B2B cross-border payments market is stunted by lack of traditional financial services. Look at this guy. Does he deserve poverty? He's trying to run his business just like you. Why is it that you can get paid and not have to pay exorbitant fees, but people like him can't? This is the financial system that allowed people in developed countries to get ahead through work that they didn't even do, just because of the muggings of the old financial system. Do you want a level playing field in which you win because of your own achievements? Or do you want this imbalanced playing field in which you win because of the country you were born in and how the economy has prospered because of the mugging off of the cross-border payments markets? I love to win, but you know what's even better than winning? Winning legitimately. Winning on a level playing field. Winning because you're the best, not because of circumstances outside of your control. I want this guy to win. I don't want him to get mugged off in the cross-border payment scam. And neither do Ripple. We're going to send XRP to the stratosphere. And then we're going to come in offering the fake solution when we're already rich. I mean, it will be a solution. They'll start to get ahead, but they'll only get ahead against the non-XRP investors. All the XRP investors, man, we're talking two-tier society. Really in your face. Despite recent growth, the SME business-to-business cross-border payments market is stunted by lack of traditional financial services. Fees for international payments are extremely high. And some regions, cross-border payment services aren't even readily available. Yet SMEs are increasingly reliant on cross-border payments for growth. both to access new customers and to tap suppliers and outsourced employees. With fewer banks extending capital to SMEs since the 2008 financial crisis, which was an engineered event to take everyone's money, just like this XRP New World Order will be an engineered event to take everyone's money. But at least we'll have the financial system on a level playing field. At least these poor countries will be able to receive payments without getting shafted hard. These businesses have trouble getting credit to supplement their already limited working capital. Around 70% of SMEs in emerging markets lack access to credit, according to the World Bank. Further, traditional global payment systems involve a lot of intermediaries. Not only does this slow down payments, but also introduces more margin for error and more margin for all these intermediaries stealing your funds. Any lag between the VAG, between paying these suppliers and employees, really impacts SMEs' ability to maintain their business and grow and scale. To compete, SMEs need to be able to focus on their business, not on whether their supplier receives a payment. Imagine a small clothing manufacturer in Thailand that needs to import raw materials and fabrics. The timing of payments is crucial. Without a lot of working capital, the business depends on fast-moving payments to keep the goods flowing. Why are we allowed these fast-moving payments in other countries, but not in Thailand? Why are the Thai people getting mugged off? Is it because we're scared that if they had a level playing field, that they would beat us, that they're harder working than us, that they're more successful than us deep down inside them? I believe that when the shackles are lifted from their businesses, they're going to thrive like never before, that we're going to see economic growth in these countries like never before, and there's going to be certain people that are still working that want to capitalize on all this new opportunity. And there's going to be the old money people that have been benefiting from this old financial system that will, decade by decade by decade, finally start to fall apart unless they can increase their work rate and stop mugging people off in scams like this. So the timing of payments is incredibly crucial for small businesses. This is one of the reasons that these countries can't thrive. This is one of the huge issues Ripple are solving. This is one of the huge issues that's going to make us millionaires. This impacts the business owner's ability to build trust with suppliers, outsource talent, and banks that might extend them credit. Because they can't receive payments on time, the banks are unsure about their financial position and won't give them credit. It's not just a couple whammies. This has a ripple effect into every aspect of their life. Their business being less successful because of the old financial system is affecting every aspect of their life. Who are we to slow down these people when we have a solution? The government want to slow down these people. The SEC want to slow down these people. They know that they're breathing right down their neck, that guys like this, if they just had a level playing field, could become a millionaire. They know too many people like this are going to become a millionaire on a level playing field. That's why they've been mugged off this entire time. It's absolutely criminal, the things that are going on in the financial markets. And there's so many people that are successful that aren't really successful, and this needs to change. I believe the new financial system will ensure, decade by decade, century by century, the playing field becomes more and more level, and more people who deserve to be millionaires because their businesses are amazing will actually get to become millionaires because they're going to receive instant cross-border payments. We're going to see people in Thailand selling their products directly to people all over the world instantly. Right now they need to wait days. Right now those days are costing them the whole opportunity of being in business. There's people that should be in business right now that can't be in business just because of the cost of border-to-border, cross-border payments. Can you imagine it? Look at this. $30 to $100 cost per transaction just because you're unlucky enough to be born in the wrong country. That's sickening. These people are disgusting. Because we've had the solution for this for the last 30 years. Let's not get this twisted. We've known about this distributed ledger technology for the last 20, 30 years. But it's not been implemented. Why? Because these people are scumbags. 4 to 6% international payment error rate. So imagine that. You're getting your payment. You're paying $100 just to get your payment. Takes 2 to 5 days. And you only actually receive that payment 95% of the time on average. That's disgusting. This old financial system is disgusting. Ripple and XRP aren't just some banker coin scam. They're actually changing the world. So send this video to anyone that says it's just some criminal banker scam. We're actually changing the world. We're actually changing the cross-border payments landscape for hundreds of trillions of dollars. And if your moral compass is stopping you investing in something that's going to make you millions, I think you're stupid. I think you're so stupid. If you want to learn more about how this new technology can bring better services to SMEs, make sure you're subscribed, make sure you tune in, put the alarm bell on for the next video, because the rest of this article is absolutely sinister. You need to see it. Guys, I'm Matty G. Love all you guys. Share this video with a Bitcoin maximalist loser that doesn't understand how the financial system actually works, because they're gonna start to learn here on Matty G TV. Guys, I love you guys. Have an amazing day. Catch you guys next time.
Wiping out the middle class, creating the two-tier society.
Two-tier society. I'm Matty G from Matty G TV, the star of the show. Today I'm going to be taking you through this Bank of International Settlements worksheet about the cross-border payments and central bank digital currencies. I think cross-border payments and central bank digital currencies are the #1 thing that's slowing down the world economy right now. Just one example, I wanted to send a cross-border payment on Friday night and realized that I need to wait until Monday morning before I can even start sending the money and do all the cross-border payments. So last night, wanted to go out, wanted to spend money in the economy, but I couldn't do a cross-border payment, couldn't get access into my bank account because Coinbase was down and Binance is down because I'm a United Kingdom citizen. It's an absolute disgrace, absolute disgrace. But it's slowing down the economy on an epic scale. Imagine this times 100,000 people yesterday, 100,000 people today, 100,000 people next day. I don't know how many people it is. Maybe it's even millions of people are getting mugged off in the cross-border payment scam in the old SWIFT financial system. What's the solution? I believe interoperable, interlinked systems using a bridge currency is the way forward and how we're going to rehabilitate the enormous economic recession that we've gone into because of the Corona. Alright, so here's the current issues in the cross-border payments. We have fragmented and truncated data formats, complex processing of compliance checks, limited operating hours, legacy technology platforms, long transaction chains, funding costs, and weak competition. No competition. There's nothing. We've got to use SWIFT or that's it. So limited operating hours. That's why I couldn't do it over the weekend. Not only is it limited over the weekend, it's limited between 9 to 5, Monday to Friday. We also need to use these old technology platforms with long transaction chains going through multiple intermediaries, stealing our funds multiple times throughout the whole process, making millions and billions and trillions of dollars, while people around the world are actually starving to death because they can't receive payments from people in the United States. There's so many people in the United States that would love to hire people in Africa, but they literally can't pay them properly in this old financial system. People are starving to death because of the old elites and the old SWIFT financial system and their unwillingness to move over to the XRP endgame master plan. But guess what, guys? There's too many people on board. There's too many people invested. There's too many good people pushing for this new world order. It's going to change the landscape of the financial system. It's going to improve people's lives like you cannot even imagine. The economic boom we're going to see when all this goes live will be absolutely incredible. And there's people working so hard to make sure that the economy doesn't boom and that more people are stuck in the universal basic income scam. That's why we need to get as many people into these interoperable cryptocurrencies as soon as possible before they send it to the stratosphere and all our friends and family are stuck in the lower rung and we're going to have to bail them out because they're going to be absolute peasants in this new world order. And I don't want to bail them out. I wish they'd just boss up and invest in these cryptocurrencies and stop being so stupid. I mean, it's so simple. The writing's on the wall. They've seen decades and decades of information accumulated into the last year and a half on Matty G TV. Still not made that decision. It's unbelievable, man. You can lead a horse to water, but you can't make it drink. It'll lay there next to the side of the puddle and die. That's what's going to happen to the people that are not invested in this brand new asset class. So we want no constraints on cross-border use. We want a coordinated cross-border access to domestic CBDC and multi-CBDC arrangements. That's why I'm invested in XRP, because they've been working with all the central banks and governments across the world to coordinate this cross-border access to domestic CBDCs. And they've even helped other cryptocurrency companies create a system, the ISO 20022 framework system, that allows multiple different companies to help the countries plug their central bank digital currencies into one interoperable, compatible system. So we've got 3 models that they may progress with that we're going to go into in this video. So what are the potential benefits with central bank digital currencies? Less intermediaries, enhanced efficiency, enhanced integration, enhanced technical compatibility, enhanced safety, and the mitigation of cross-border and cross-currency risks. But these people, this Bank of International Settlement, they don't care about the millions and billions of people around the world starving because of this old financial system. All they care about is all this. It's absolutely criminal, but that's the potential benefits that they've listed here. Potential risks. We've got the micro-financial operation and cyber risks, and the macro-financial risks, international flows, financial stability, and monetary policy. I believe that these cyber risks will be used to bring on a clear 2-tier society. Anyone that's in the middle class, anyone that owns like a little bit of this stuff that's really helped their lives, helped them become a millionaire, they're going to be the targets for all of these cyber risks. Remember, you will own nothing and be happy if these people get what they want. That's why I recommend holding your digital assets across multiple different places, across decentralized and centralized places. So that way you can't get destroyed all from one place. The remainder of this report is structured as follows. Section 1 presents some elementary considerations on central bank digital currency designs in the cross-border context. 2. Takes stock of potential central bank digital currency designs in cross-border payments. And 3. Reviews opportunities and risks related to the cross-border use of central bank digital currency. In this article, in this video, I will take you through the first step. Domestic central bank digital currency designs and cross-border considerations, a primer. Improving cross-border payments efficiency is an important motivation for central bank digital currency work. Most central bank digital currency projects are focused on domestic needs, but improving cross-border payments efficiency is also an important motivation for central bank digital currency work. Cross-border payments, including remittances, are an important factor for economic development in a globalized economy. Today, on the retail side, most remittances are sent abroad through a money transfer operator, leveraging their own global network. International remittances raise a number of well-known issues, some of which could be tackled by appropriate central bank digital currency solutions. First, fees are generally extremely high. Second, in some contexts, remittances may not have a guarantee that funds reach the expected recipient in full. And third, international remittances suffer from the absence of interoperability between domestic payments systems. Money transfer operators and white label platforms try to bridge this gap between domestic payment systems. On the wholesale side, these inefficiencies, due to a lack of payment system interoperability, are patched by the correspondent banking network scam, which can be costly and slow in the case of long correspondent banking chains. Many obstacles to cross-border payments are rooted in the differences among domestic legislations, namely differences in the implementation of the AML CFT standards, rules on settlement finality, participation criteria for payment systems with central bank money settlement rules on the conflict of laws and others. Remember, they make this as complicated as possible for you guys so that you just give up and don't continue reading. That's why some people are internally impoverished. They just simply don't have the mental patience to get through an article like this, to understand this in higher detail. In this context, central bank digital currencies are seen by many central banks as an opportunity to simplify and enhance the performance of cross-border payments and make their ultimate settlement available 24/7, even outside the closed-loop solutions or those money transfer operators which control the payment end to end. The issuance and use of central bank digital currency for cross-border payments could potentially help simplify intermediation chains, increase speeds, and lower costs. And indeed, cross-border payments efficiency is an important motivation for central bank digital currency issuance. What is the one company in the space that has a on-demand liquidity patent for these cross-border payments? There's only one company, it's Ripple. And what is the primary digital asset of Ripple? It's XRP. So it's going to be efficient, it's going to be fast, it's going to be interoperable, it's going to be 3-second cross-border transfers, it's going to change the landscape of the financial system, and it's going to create the biggest economic boom we've ever seen, unless the media really do get in the way and continue all the lies and propaganda that they've been propagating over the last year and a half. The issuance and use of a central bank digital currency for cross-border payments could potentially help simplify intermediation chains, increase speed and lower costs, and indeed, cross-border payments efficiency is an important motivation for central bank digital currency issuance, according to a survey among central banks in late 2020, especially with regards to wholesale central bank digital currency projects. The importance of this motive also increases for central banks in advanced stages of central bank digital currency work. That said, most central bank digital currency development efforts are focused on domestic use. So they're focusing most on domestic use, but there's private companies outside of the Bank of International Settlements that aren't focused on domestic use, that are focused on the interoperability of the cross-border payments efficiency. It's going to be efficient, it's going to be fast, it's going to be lightning fast. It's going to change our lives. Can you imagine your life after everyone is financially included? How's your business going to succeed when you can start paying people in Africa to help your business online? How is it going to succeed? And you're not paying 25% fees to Upwork and all these other hiring platforms. You can just do it with cryptocurrencies, send it them, and they get it straight in their central bank digital currency for their local economy. And what's the problem with paying these people right now is usually when they come to you, they're so poor that they actually can't do the work that you need them to do until they receive the money. How long does it take them to receive the money? How much money do they need to pay in fees for them to receive the money? According to other documents, people in Africa need to pay between 30 and 100 US dollars just to receive a cross-border payment. How is their economy meant to boom? How are they meant to extract money from better economies if they need to pay between 30 and 100 dollars for a cross-border payment? It's unbelievable. And there's one company who have an on-demand liquidity patent to provide liquidity to these financial institutions instantly. They can go in and out in 3 seconds, meaning it's not volatile at all. Doesn't matter how volatile the asset is, doesn't matter how fast it's going up. If you're in and out in 3 seconds, it's much, much better than the current system, with the US dollar system where you need to pre-fund the account. The banks don't want to pre-fund the accounts. We can use that money as a tool in other areas to expand the economy faster. We need new monetary policy. We need a new financial system. We need to flip the switch and send the cryptos to the stratosphere. When is it going to happen? I believe before the end of the year, we're going to see massive price appreciation in our favorite cryptos, and this will be a utility bull run, and it will make people rich beyond their wildest dreams. Guys, I'm Matty G from Matty GTV. Make sure you subscribe for part 2 of this article. It's going to get wild out here.
What is up, good people? Jungle Link here. Buy the dip, buy the dip. Man, I can't keep buying the dip. We're not talking about monopoly money here. You know, I gotta work for this. Cold hard cash that I keep throwing after invisible and magical coins. But I got to tell you, long term, I don't think it's going to matter if you bought it 25 cents, 30 cents, 40 cents, $3.40. It's all going to be massively profitable. So I don't get too out of control. I have to pull myself back a little bit. You know, I already bought it 35 cents or so. So I'm going to let it cook a little bit. We'll see where things go. And we can't control where we find ourselves today. We want it to happen now. We see the future and we want to make it happen now. But you really got to just relax and let it come to you. Our tough work is ahead of us. It's going to be very difficult as the price starts to go up, and it's going to happen. If we flip out now about losing 10 cents, what's going to happen in the future when we're losing $1 in a day, or $10 in a day, or $50 in a day? I mean, think about the type of swings we're going to see. It's going to be huge. And if you're going to make it to that end goal, you got to keep your eye on the metrics. You got to find a calmness in the fact that real development's being made. In the early days of Bitcoin, they banked on replacing the institutions, the banks. They banked on the fact that you would be using Bitcoin to buy coffees and gasoline, and now we see that clearly is not the case. They have abandoned that whole theory. Now it's just strictly storage of value. And I'm not saying there's not going to be value there in that brand name, that first mover, that first adopter. You know, Bitcoin is powerful in its name, and there may be value down the road. But we know XRP has the chance to really disrupt a lot of these different industries in a real way. XRP can be the model that all future digital assets really strive to be like. And that's really where you're going to get that long-term and sustainable value, that upper echelon type of gains that we all look for. And a lot of people, they're going to run to mommy and daddy and complain, you know, the price isn't going up. This is precisely why when everyone tells you XRP can't go to XYZ price, because everyone will be rich. It's never that easy. The fun and games really haven't even started yet. Now, we saw this news come out. This article is from Yahoo Finance, and it's titled, PayPal Fires Up Ripple Killer Zoom App for International Payments. And it seems like every other day you have a Ripple killer, you know, digital asset or new service that's rolling out, whether it be Facebook or JP Morgan or PayPal. You notice they're all gunning for Ripple and the things that they are doing. It's not the Bitcoin killer or the Ethereum killer. It is the Ripple killer. And we saw David Schwartz talk about when anything is the XYZ killer, that's really the leader. That's the thing that everyone's gunning for. Quoting from the article, PayPal has launched its mobile payment app Zoom across Europe to provide faster and cheaper international transfers. It hopes the new offering will make it cheaper than traditional payment services and more convenient than sending crypto. Now here's the best part of the article. This brings PayPal in line with international money remittance services like TransferWise and MoneyGram, who charge fees between $5 and $12 and $4 and $10 respectively. It also sets Zoom against blockchain-based rival Ripple. However, if it wants to compete with the likes of Ripple, it's going to need to speed things up and drop the price significantly. So it turns out that this PayPal Ripple killer, it's not as fast, it's not as cost effective, it's not even in the game. Now look, they're not doing anything really new or novel. They just see that this is an important space to be in, that cross-border payments is the service of the future. It's really where we see explosive growth, and everyone wants to be involved here. And Ripple's the only one that's really coming out with new solutions, ones that drastically speed up the service and drop the cost. And it's helping both institutions and users. I mean, this is a win-win across the board. We know this is very complicated. It takes a little bit of time, but they are making progress. This is very real. And that's what you should take away from all these new press releases, all of this news. We see governments paying attention to digital assets. We see PayPal, JP Morgan Chase, Facebook. They are all focused on cross-border payments, but none of them really have the keys to success like Ripple does. They have the partners, they have the digital asset, they have the technology. They have been working at this day and night, non-stop, just focusing on this problem and this problem only. They have some of the brightest minds in the industry on the Ripple team, figuring out 10 steps ahead what needs to happen. And we've seen they've been able to work in this, era of regulatory uncertainty, which is a huge accomplishment. They figured out how to grow the network, add customers, add partners on a weekly basis. In a time and space when we really don't know what is legal and what is not. They are making huge progress, and that's what's going to bring us that value. The Don't Be a Billy story. It resonated. People could understand it when we were at the tail end coming off of the last bull run. Everyone could look in the very near, past and see what happened when you got carried away with the day-to-day fluctuations, when you weren't looking at the metrics, the things that were really going on. Everyone understood, but it's been a little time now. People are starting to forget. They think the game has changed. It has not. And if you start getting too tricky, too smart, you try to, nickel and dime every single move, I guarantee you this game will slap the smiles right off your face. And it will happen so quickly, it's not going to be funny. I know we are down in the doldrums, but we are truly making massive progress. Our day will come. And if you give up on your position too early, there will be no glory to be had. You will tell your friends and family, I saw the future. And they're going to laugh. They're going to say, we told you. This invisible coin thing would never work out. The only way you can seize your glory is to seize this moment and really follow those things that matter. Let me know down below. I want to hear from you. How are you holding up here? Is this bear market finally starting to get to you? Are you still laser focused on the issues that matter? And as always, please like, please subscribe. The revolution will be televised right here on Jungle Inc.
Alright, welcome back everybody to Altcoin Daily. My name is Aaron. In this video today, I'm going to play you this clip. I'm just going to play you a part of it. This is from an interview very recently given by the Ripple CTO David Schwartzman. So if you hold XRP, you're going to want to see this. If you're thinking about buying XRP, you're going to want to hear this. If you're in the XRP army in any regard, in any way, this video is definitely for you. And also, this is a follow-up video to one that I uploaded a few days ago, why XRP will make you rich but will ultimately fail. Just to be clear, I want to say this right up front. We're going to go into this with a clean slate. I want to be fair and balanced to the XRP community, but also, obviously, we're still going to maintain my own credibility. I'm still going to keep things 100% real, but I'm not out to get anybody, guys. And that's actually the reason I'm going to show you this video. I want you to get the information right from the Ripple CTO's mouth. Just like always, guys, use our channel as a starting off point and do your own research. I'm not the end-all be-all. And if you appreciate that, if you want to support a channel like this, do me a favor, hit the thumbs up, like the video. This video, it's going to be good for both the XRP army as well as just everybody else in the cryptocurrency space. Before I play you the clip, actually, I do want to talk for a minute regarding the response that I received after posting this first video. So first of all, something that you should know about me is I love to hear different opinions other than my own. I love to have my own personal worldview challenged. And even with Bitcoin, like if you've been subscribed to us for a while, you know most of my portfolio is Bitcoin. I like Bitcoin, but also I like to hear arguments against Bitcoin. I like to hear arguments as to why Bitcoin can fail. On the other hand, and the reason I say this, I can't say the same thing for most of the XRP army, because after I posted this, I mean, never in my life have I had my opinion met with such hate and vitriol like I did the other day when I posted this. I mean, it's as if XRP is above questioning, right? Why XRP can make you rich but will ultimately fail, just my opinion. So if you watch this video, despite the fact I agree with you, XRP army, XRP can make you rich. Despite the fact I had a warning right in the title, only my opinion. Despite the fact that I regularly make it known, I'm not an expert, I'm not giving out financial advice. Despite all of this, after I uploaded this video, I was lambasted, I was crucified, I was downvoted into oblivion, and this was all done by the tribal community, which is the XRP army. And not all of them, but a lot of them. Listen, guys, I'm under no delusion with Bitcoin. I know Bitcoin can fail. I'm under no delusion with any of these altcoins. I know that they all can fail. I get that. I think the vast majority of the XRP army is under a massive delusion that XRP cannot fail. And if you say something critical, if you question XRP in any way, they hate it. It's as if you're hurting the price. Which, again, it's ridiculous. If there's one coin that doesn't need the grassroots, the populace, the retail movement to increase its price, I think that coin is XRP because XRP is targeting the banks. It's for enterprise use, meaning for the price to increase, adoption will happen with the banks, obviously, and it really shouldn't matter in the slightest whether or not the general public buys in. I mean, really, if XRP succeeds, general public probably won't even know they're using it in a lot of cases. Anyways, without further ado, I want you to hear directly from David Schwartz, the CTO of Ripple. Incredibly smart guy. I invite you to listen to the whole 25-minute interview like I did. The link is in the description. Listen to it. It's great. I'm going to share with you what I felt is one of the most pertinent clips. And let me just give you my conclusion right off the bat. To answer the question, was I wrong about XRP? I don't think so. But you know what? We don't really know yet because there's a lot of uncertainty. Was I wrong to question XRP? Of course not. Every tough question that I brought up in this video is brought up in this video that I'm about to show you. And guess what? David admits those challenges. So although the CTO is bullish on the future of Ripple, he's the first to admit, among other things, that there is a real regulatory challenge getting banks to sign up and use XRP. He says banks are very slow to adopt XRP because of the regulatory uncertainty. Here, I'm gonna let him tell you. So first, let him explain the challenges of getting banks to adopt digital assets in general. And then I like the host because he gets him to talk specifically about the XRP token with the banks. So listen very carefully to his words throughout this. It's not all moons and Lambos, guys. It's not all moons and Lambos.
Yeah, this has been the narrative for a few years because I've talked to your CEO, Brad, fairly often, and he's made the case this is a way for banks to save money, use XRP as kind of a bridge currency. But I got to say, it doesn't seem to be happening. It seems every year this is kind of the promise, but we're not seeing a lot of adoption. What's going on there?
I would agree that adoption of digital assets has been a little slower, you could see it as being incredibly quick or incredibly slow, depending on what time frame you think is reasonable. I would say revolutionizing international finance is not something that you would expect to happen overnight. But it is a multi-step process, and I think the first problem that we encountered, we kind of thought that we could take a direct line to settling with a digital asset, and I think a lot of people thought that, well, now we have digital assets, let's just use them for payments, and that'll be that. Part of the problem is that the payment systems are just not capable of supporting instantaneous settlement. So if you think about a payment system like SWIFT, where you just kind of push a payment message out, and you don't necessarily know the entire path, and you don't know the fees until later, you don't even know if the destination account even exists until sometime later when the payment is actually processed by the destination institution. There's no way that you could build instantaneous settlement into a system like that. So we kind of found ourselves in this situation where if we wanted institutions to settle their international payments with a digital asset, we first had to rebuild the payment messaging, sort of the plumbing. And we discovered something interesting on the way. What we discovered was that the existing plumbing was so bad, it dates back to batch computing days, that just improving that messaging was a product. That was something that banks and non-bank financial institutions would be interested in. And so we focused on building a top-notch payment network that can settle with a digital asset. And I think it's fair to say that we haven't yet proven that we can actually settle with the digital asset. We're just making that transition from building a payment network that can settle with a digital asset to figuring out where you really want to settle with a digital asset and making that settlement happen.
If I can interrupt a second, that's my understanding. You built XCurrent, right, as a messaging product?
Correct.
And a lot of people seem to think it's superior to SWIFT. And you almost have this successful enterprise software business on your hands. And good for you, but it seems Ripple wants to do something more, which is to encourage the users of this to also wrap some XRPs into the transactions. But it sort of seems like you're shoehorning something in there that a lot of banks are like, wait a minute, we don't need this. We're just good with the messaging thing. So make the case for us why you need XRP in this.
I would just start out by saying I think that is a fair point. I think we do have a struggle on our hands to convince particularly banks, because banks are extremely conservative, they're very slow moving. What we've discovered is that non-bank financial institutions, payment companies are much, much more aggressive, and they're much more interested in things that can save them time and money and cost. And so we built the XRapid product as a way to kind of solve that problem. And it was adapted to the real life situation that we were facing. We kind of had this idea that institutions would hold XRP or a digital asset, they'd make their payments with a digital asset, or regional hubs would settle with a digital asset. And for a variety of reasons, the world wasn't quite ready for that, including regulatory issues, lack of liquidity, immature ecosystem around digital assets. And so we couldn't aim directly for sort of the end state that we wanted. We had to come up with a more practical plan. XRapid is aimed at two things. So one of them is sort of remittance type international flows, where cost is very high, and the volatility actually favors a digital asset, which is kind of bizarre. Usually people will say the problem with digital assets is they have such volatility. But here, if you think about trying to pre-fund Mexican pesos on a Thursday to make payments on a Monday, that's a lot of volatility in Mexican pesos. Whereas if you can use XRP, which can move across the planet in just a couple of seconds, the volatility is actually less. Even though XRP is inherently more volatile, you're only holding it for the minute or two it takes to complete the transaction. And I think the other thing that XRapid handles is you might have a bank that doesn't want to touch a digital asset. They're like, we can't have XRP on our books, we can't buy it, we can't sell it, it's just too much of a regulatory challenge for us. But let's say they want to make a payment in Mexico and they don't want to have to pre-fund and they don't want to have to get confirmation 3 days later. What they can do is they can have an XRapid customer that probably won't be a bank, it'll be a payment company or some other type of institution that uses a digital asset to buy the Mexican pesos as an internal treasury function and then offers those Mexican pesos to the bank. So it's a workaround to the limitations that we found that we think is adapted to the situation that we're in today.
Really great interview. You can see that the host asks the CTO the tough questions. We don't have time to go through all the questions.
Let's switch to stablecoins. Last week, a new kind of consortium of banks said, "Hey, rolling out this new stablecoin." Does that kind of freeze you guys out, or what do you think of Facebook's coin? So I'll ask you quickly too about the price of XRP. Sort of surprised. It used to be very volatile. It used to, go from 1 cent to $4 and everywhere. But last year, it seems to have really stabilized. What's behind that? Is there sort of some hidden hand keeping that price in a narrow band? Or?
He asked the same questions that I was asking in the original video, plus more. And the great thing is the CTO is able to answer the tough questions directly and fully. So respect to David Schwartzman as well. But I guess the point is it's not all moons and Lambos, because you heard him say, yes, I think we do have a struggle on our hands to convince banks. Banks are conservative. Banks are slow moving. He says banks don't want to touch digital assets because of the regulatory challenges. He said all of this. He said all of this. And yet, himself and his team, they're working hard every single day to try and make the XRP, trying to make the Ripple revolution happen. So if you hold XRP, if you're thinking about buying XRP, I really recommend this whole video. The host does an incredible job of asking the critical questions. The CTO does an excellent job of answering those questions. The response that I got from the XRP army in this original video did not make me think very highly of the XRP community. Now, the thoughtful responses that the CTO gave did make me think highly of XRP. So there's that. I mean, my overall opinion of XRP is the same. Yes, I think XRP can make you rich. That being said, I think it's got a tough road ahead. But I'm rooting for it. We'll see what happens. If one of us succeeds, we all succeed. And we're all trying to build that crypto world together. Alright guys, appreciate you all. Let me know what you think in the comments. If you got value in this video, give it a like. If you'd like to join the Altcoin Daily army, subscribe to the channel. Either way, see you guys tomorrow. It's going to be a great year.
Can an XRP token be worth $2,000 by 2024? Well, that's what one investor is thinking could happen. Now, who is this investor and what information would he possibly have? Well, I don't know about the information that he has, but what he did predict was back in 2012, he predicted that a then Bitcoin, which was about $350, would be worth $50,000 plus. He absolutely nailed it. So this video is going to be all about XRP. Now normally I look for different headlines in the cryptocurrency news world, and there really just wasn't a lot of Elon Musk news, unless you consider his RRR tweet big news. So we're going to look at some information that this guy might actually have been looking at too when making his $2,000 XRP prediction. A couple of those things include Ripple being one of only a handful that looks like it is going to be involved in what is now being a standardized global transference of money. And Ripple is also adding to their employee base by going after one of MasterCard's own. I'm going to tell you who that is and what they're going to be doing. And something that a lot of people don't think about in terms of XRP and the XRPL ledger, there's a financial services company over in Japan who is thinking about using the XRPL for something that not many people have been talking about, but they're predicting it's going to be a monster marketplace
in the next 5 years. I'm going to tell you what that is in this video. Oh yeah, and also I got a little bit of an update of the SEC versus Ripple. Hey everyone, my name is Randy and welcome back to the Late Night Grind. In this video, I am covering the SEC versus Ripple. I'm also covering other cryptocurrency news, investment markets, and personal finance. So if any of those topics interest you, make sure you hit that subscribe button. Don't forget to hit the bell notification icon so you'll know when I release a new video. And as always, if you're feeling really generous and you've gotten anything out of any of my videos, I'd really appreciate it if you go ahead and hit the thumbs up button. It really helps out with a channel like this and basically just tells YouTube to share this video with new audiences. So if you do that, I'd greatly appreciate it. All right, guys, well, let's jump into it. So as the title stated, this person on Twitter, his name is Kenny Wynn, by the way. Well, he's predicting $2,000 in 2024 for XRP. Now, that is a monster prediction because when he said that on Twitter, obviously he got a lot of backlash. Some people said, you do realize that there are 46 billion XRP tokens out there, don't you? And basically his response was, yeah. And when XRP and the XRP ledger are used for global financial transference around the world and used for just about every major underlying transfer of money and now tokens in every institution in every country in the world, that ain't no big deal because they literally need to transfer trillions of dollars per day. And there's a couple more pieces of information that he may have been looking at. In case you've been looking at Ripple news lately and XRP news lately, there's something that came up called the ISO 20022. ISO stands for the International Standards Organization. And basically what this is doing is back in 2004, this was actually created. Basically a group of financial companies and tech companies got together. They wanted to create something standardized to make global payments. Well, at the time, and technically still is, SWIFT has been using their messaging system. Basically, they message certain banks. When somebody wants to transfer money from one end of the globe to the other, there's a lot of different intermediaries that go through several different banks. It might go through several different current fiat currency changes in order to get from the sender to the receiver. Well, this is one of the things, of course, that XRP fixes. But the ISO 20022 is a much larger, essentially, equation than just something that XRP is doing. Now, the news came out just last year that Ripple actually joined the board of this ISO 20022. In fact, they're one of only about 5 or 6 cryptocurrencies that are now involved in creating this standard. There's also some huge companies like Visa, Oracle, SAP. All of these different companies are involved. Ripple, with their XRP token, is also involved. But if you're thinking about some investment ideas, you may want to think about a couple of these others. IOTA, Stellar, with their XLM token, will be utilized. Corda, the Corda network, XDC, and Algorand. All of these were shown in the white papers of the ISO 20022. Now, what does Ripple and the XRPL have to do with it? My guess is that up until Ripple really got involved, essentially they were the first blockchain technology to get involved with this standardized platform. And so it looks like once they actually got there started to be a bunch of different articles being written that started to mention Ripple is the first blockchain company to introduce this type of technology to a standardized payment system. So they started writing about quick transfers, about very low transfer fees, about granularity of data being able to be obtained and spread around into different networks, not controlled by a single user. So what does Ripple and the XRP token have to do with this? Well, from what it sounds like, it's probably going to mean the RippleNet platform is going to be one of the things that will allow for all the different institutions and banks around the world to essentially have a hub of communication when they're going to be doing these transfers. They're also going to be using the XRP token for certain things within this platform, one of which is converting any fiat or any value or any cryptocurrency into any other fiat or any value or other cryptocurrency. In this video, I'm not talking about all the details of how that works out, but basically they're going to be utilizing the XRP token to do some of that. They're going to be using some other cryptocurrency networks as well, not just for networks, but the use of smart contracts is going to be on there. And when you pair that with some of the biggest financial companies in the world and other tech companies in the world, this is probably going to be one of the most sophisticated financial sending platforms ever to be created. Now, why is it coming up in the news so much? Well, it was originally slated to be finished by November of 2021, which is coming up in a few months. However, it looks like SWIFT has put a delay on it, and now they're pushing for it to be launched in the later part of 2022. But once this happens, what's that going to mean for the XRP token? Well, it's going to mean massive massive utilization of the XRP token. Not necessarily in every single transfer in every single bank, that's not going to be it. But just being part of this will give XRP massive exposure to all the trillions of dollars that will be transferred through this new network. As it stands today, Swift network already transfers about $5 trillion a day worth of value. So to handle all these payments and all these transfers, they'll need something with interoperability, which is what the XRP token gives them. And it's funny because back in 2004 when this was created, I was reading articles that were put out in 2012, 2013, 2014, and they are still talking about messaging as being the primary mechanism for sending. They were just trying to optimize it. As soon as these crypto companies came into it, like Ripple, like IOTA, like Stellar joined the club, this thing is absolutely ready to go. So maybe Kenny Nguyen has been studying the ISO 222. But another part of this, and basically another use case for the XRP token, is this. And not many people are thinking about it, but it could be huge. See, SBI Holdings, they're a financial services company in Japan. And most recently, they came out and said they are actually looking at the XRP ledger, the XRPL, to use for NFTs. They said the interoperability of the XRP ledger gives them some of the most significant advantages to tokenizing and hosting an NFT platform. Now, SBI Holdings is really focused on tokenizing pretty much everything they can get their hands on. In fact, one of their predictions was that by 2027, that 10% of the world's GDP would actually be a tokenized asset. So let's just do the math real quick. Right now, there's about $85 trillion worth of global GDP floating around. So 10% of that, you're looking at about $8.5 trillion of tokenized assets being on some blockchain network or some NFT network somewhere in 2027. So if you're looking at the crypto market cap as a whole, well, if that's the case and just the NFTs alone are worth 8.5 trillion, you know what the rest of the crypto space is going to be worth. So that's just yet another marketplace where XRP is going to be utilized, and it could be utilized for something massive. So now when you look at some of these major players or some of these major use cases in the next couple of years coming into play for XRP, it absolutely makes sense that someone like Kenny Nguyen can come out and say, listen, I think this thing's going to be $2,000. When I look at all the stuff out there, it just makes sense to me. When Bitcoin was $350, he said, listen, this thing's going to be worth well over $50,000 in the next decade. And it is, or at least it was. So we're going to be seeing what his tweet does in the next couple of years because he's predicting this by 2024. And we all love price predictions, don't we? So that's all I got for today's video. Don't forget to check out the community tab on my channel. I have a couple new polls for you guys to check out. Always love to see what the Late Night Grind community answers. Getting your brains a little bit to see what you're thinking. Also, you can just bypass that and let me know in the comment section below what you think this means for the XRP token and for Ripple. Oh, last piece of news, Ripple hired one of MasterCard's own executives, Cindy Young, and she is actually going to be heading up the European Operations Department, basically to go expand Ripple's network in the European institutions. And finally, in the case for the SEC, today technically is now July 1st, and this is the date that Ripple has to respond to the SEC's response, because if you watch some of the other videos, you can see that Ripple wanted to subpoena William Hinman, the SEC said, no, we don't want you to, and now Ripple has to respond. So,
hey everybody, and welcome to another video. Here today, as you can kind of see on the screen, I want to focus on a couple of things here. Obviously, XRP, Flare Networks, and Flare Finance specifically as well here in this one. This is a video that a lot of people have been asking me to make, and I think I could no longer say no to this one. It is a video, however, that I know by making it, I kind of am damaging my own earning potential in certain things, because the more people participate in what I will be explaining you in this video, the less beneficial it is for the people that are early, I guess. So this might be a long video. I just want to make sure that I explain everything clear. So you might want to pause the video here, get a drink, get some snacks before we move on. Otherwise, just do. I hope you do appreciate kind of what I want to do here for you guys, and just explain everything that I believe to be true and what I'm looking at doing. You can call this something like my plan, I guess, for Flare Networks and Flare Finance. you'd really be helping me out. As you know, I'm just getting the channel started. I'm trying to grow my followers, and if you do find value in this video, if you do like these type of things, please do follow me. You'd make me very happy, and it also motivates me to kind of continue with these videos. So feel free to share this with anyone you want. But as I said, you might want to see this kind of as the secret sauce. But we can. It's up to you. You decide, guys. I'm sharing it because I want to be open and honest with everyone in the community. So hope you enjoy. So that all being said, obviously none of this is financial advice. Things might change. This is what I'm currently looking at right now. This is what I all believe to be true. But like, if anything changes, I will update you as well. Okay. Now, that being said, so what are we going to talk about here today? Well, it's going to be this. Now, no need to pause the video and zoom in and try to read stuff. We will be going through all of this. I will be explaining every part, like every word, I guess, that you can see on the screen right now. I will also be zooming in, so don't worry. But I wanted to start with like a large overview of the whole picture. Because I really want you to fully understand what we're trying to achieve. And I want to break it down as easy as possible. And I'm gonna try and keep it as what's the opposite of technical? I guess try to explain everything in layman's terms, right? So I think I'm just going to get going right now. So when we're zoomed out like this, there's a couple of things that you'll see. You'll see up at the top here, you see stage 1, stage 2, and stage 3. Now, once again, don't worry about not being able to read it. I will zoom in, I will explain it. But for now, just know that there's basically 3 stages to my plan. When you look a little bit closer, you'll see here stage 1, 2, and 3 again. And you'll see they have different colors, right? So stage 1 is blue, stage 2 is green, and then stage 3 is red. You can kind of see a lot of lines, squiggly lines, and all this kind of stuff on the screen here. Now, once again, don't worry about trying to figure out what it means right now. Just know that like the lines represent different stages and how I'll be moving my money around basically in order to make more money. And I will have specific goals in every stage, which I'll walk you all through right now. Now, besides that, the second thing that you'll probably see is that below here, there's a couple of boxes. So we've got the XRP ledger, right? So you can see that here, which I'm going around now with my kind of my cursor, right? So this is the XRP ledger. So this kind of stuff would happen there. Then to the right of that, we have Flare Networks here, right? This, the whole kind of thing. And then on top of Flare Networks, you'll see we have Flare Finance here. So that is kind of this box here. And then on the side here, I've got Fiat. I've done a video before on Nexo. You kind of see Nexo mentioned here as well. Actually, I should probably move that line from that box up here because obviously Nexo is not on top of the XRP ledger. But you know what I mean, right? So we have the XRP ledger here. We'll have kind of Fiat here. We have Flare Networks on the right. And then on top of Flare Networks, we have Flare Finance. All of these will play different roles in, well, like within my plan. We also have kind of starting points of stuff that we have, right? So we have XRP over here on the XRP ledger that we start with. Obviously, after the Flare Network goes live, once that happens, we'll have Spark tokens, right? They'll be over here. Then when Flare Finance goes live, we'll also get DAO Flare, right? DFLR, you'll see that here. And they're kind of our starting points. Now, I'm going to zoom in now and kind of give you a better understanding of what we're trying to do and how that will work. Okay, so let me zoom in first. Let's have a look here, and just pure look on look at the XRP ledger for now. Okay, so I know that I've kind of explained this part before in a different video, but I just want to be complete, so I'm just going to include a bit here as well. So you have your XRP on top of the XRP ledger. Now, just if you want to keep it there and just leave it there, that's all to you. But if you want to participate on the on Flare Networks, you can basically move your XRP over onto that network. Now, I say that, but I'm going to correct myself straight away because that's actually not true. Okay, your XRP will not like move over onto Flare Networks, right? This is a completely different network. They're not connected, that you cannot move it over. However, you can send your XRP to an agent, and then FXRP will get minted on the Flare networks, right? And this, what I've kind of drawn out here is the process that happens. And I'll talk you through this right now. So when you hold XRP, you are an originator, or that means like if you want to actually say partake in smart contracts and you want to mint FXRP to do so, because it starts with you are the originator, you're the XRP holder. Now, the thing is here, in order for you to get FXRP, you'll need to use kind of a bridge, right? A bridge between the XRP ledger and Flare networks. Now, that bridge is called an agent. Okay, so an agent is basically a person or a group of people or whatever you want to call it, right? That hold Spark tokens. Now, if you will be receiving Spark tokens, you could choose to become an agent, but I am choosing not to do so in stage 1, and I'll explain why in a minute. I think it's just more beneficial for me not to do so, because I think there'll be better ways to earn money in the beginning. But just to explain the concept here, so the agent is someone who has Spark tokens and is willing to lock them up for a period of time, and as a reward for doing that, they will earn XRP. Now, how does that work exactly? So the XRP that the originator once basically swapped for FXRP on Flare networks, they will have to send it to the agent plus a 0.1 creation fee. Now, that fee is something that in the end the agent will get to keep, right? So that's the whole point of the agent doing this, because they're earning XRP. So whatever the value of XRP is, plus 0.1% is what you send over to that agent. Now, that agent then gets your XRP, and they hold on to that for basically for the duration of the contract. Now, in the meantime, what happens is that because you cannot trust this agent, right? You want it to be trustless. The agent needs to sacrifice something too, right? Because otherwise, you can just run away with your XRP, and then you've just lost your money. So, in order for that not to happen, the agent needs to lock up, what you can kind of see here, 2.5 times the value of the XRP that has been sent to the agent, or that will be sent to the agent, because obviously I'm guessing this happens first. Now, obviously, because right now you can see that, like, if I'm just going to make up an amount here, say you send $100 over, and obviously plus that 0.1%, but then from $100, the agent will have to lock up $250 worth of Flare. Okay, so that's kind of what they have to do. So say that they were to run away with your XRP, then you'll get compensated for the same value that you sent to the agent plus 1%, and that 1% extra is to cover transaction fees and that kind of stuff. If you have to say sell the FLR to buy back the XRP that the agent ran away with, right? So just to understand here, the agent holds onto it. It's not locked up. They could run away with it. However, it's not something to worry about because of the 2.5 times value that's locked up. It would not be beneficial for the agent to do this. If the agent was to do that, obviously the whole value that they need to pay back to you, plus that 1% gets taken away from this, the whole amount that got locked up. Then what remains, because obviously this is a lot more, right? The value that remains, 50% of that also gets burned. So the agent will lose that 50% of what's left, and the other 50% they will get back. Now, so it's just not worth it for them, right? So you can trust them. So now that we know that you have to send your XRP to an agent, the agent needs to lock up 2.5 times the value. Then what happens after that is that now that that's done, then basically what the Spark tokens get locked up, get sent to the FXRP system, right? So it's a kind of a collection of smart contracts. And then the FXRP gets minted. Now, the FXRP, I've said here as well, is one-to-one kind of value-wise with XRP, right? They're worth exactly the same. So you can swap XRP for FXRP and back and forth. The value will be the same. So the FXRP here is basically gifted or sent to the originator, but this time it's on Flare networks, okay? So very quickly again, XRP gets sent to the agent plus a 0.1% creation fee. The agent has to lock up 2.5 times the value of whatever you sent, That gets into the XRP system, right? Collection of smart contracts, and then XRP gets minted, right? So minted means basically created out of thin air. Okay, so you lose your XRP here because you send it to the agent, but you get XRP back in return, which is valued at exactly the same price as the XRP that you lost. Okay, so that's kind of just how you kind of switch over from the XRP ledger onto Flare networks. As I said, you don't technically do it, but this is kind of how basically the value moves over, right? So the value stays the same. Now, once that's done, you're free to use XRP for smart contracts, etc. on the platform. Say whenever that the XRP wants to get swapped back for XRP, what then happens is once again you go through the XRP system, we call it the collection of smart contracts. The spark gets returned to the agent, and then the agent sends the XRP back to the originator, right? You can see that here. Minus, of course, that 0.1% fee that the agent earned for offering up the collateral. Now, I know I've talked about this before, so I'm not going to talk about this too much more, but I just wanted to kind of give you a taste of like how this kind of works, right? How you kind of swap over from the XRP ledger over into Flare networks. Now, so that now we know that we can move, or obviously not technically, but I'm just going to call it this way for the duration of the video, right? Once you move your XRP over onto Flare networks, we can continue here. So now, this is where it gets interesting. Okay, ignore the Flare Finance part for now. I'll get into that in 2 seconds. Let's focus here on this part first. I'm not going to go through the tokenomics. I have them here. It's not important for what I'm trying to explain right now. I just want you to understand the larger concept right now, okay? You will get your Spark tokens, obviously after the airdrop has taken place. You can obviously probably buy them and that kind of stuff later on as well, but I'm just going to assume for now that you get them. And once you get them, there's stuff that you can do with them, of course. Okay, you can obviously send them over to Flare Finance, stuff like that, which I'll continue now in 2 seconds. But what I want to kind of just do first as well is just going to run through a few tabs that I have open here at the top. When it comes to the XRP ledger, obviously the tokenomics here, you can find it here, right? So on the ripple.com/XRP/market-performance, here you can see the XRP metrics. I'm just going to close that tab to get rid of that. Okay, so now that you have your XRP kind of moved over and changed to FXRP, and you have your Spark tokens, and you have them both here on Flare networks. So let's go to stage 1 of my plan. So my plan, stage 1, is earn as much YFIN as possible. So these are the kind of the things that I want to do, and like obviously you can pause the video and read through it here. You don't have to. We're going to talk through it now in a second. But just know that the very first goal is to earn as much YFIN as possible. That's stage 1. Okay, so how do we do that, and how do we do that best? So let's have a look at Flare Finance. So Flare Finance has 6 products: Flare X, Flare USD, or sorry, Flare Wrap, Flare Mine, Flare Farm, Flare Loans, and Flare Mutual. Now, this is back in March, I think it was. I was chatting to Flare Finance, and I asked them a couple of questions. You can see it here. So, hi Flare Finance, I have 2 questions that I hope you can answer for me. Number 1, will all 6 Flare Finance products launch at the same time? And I'm like specifically interested in using Flare Farm, Flare Loans, and Flare Mutual straight from the get-go. And 2, will the APR minus the 1.5% fee, ignore that now, we'll get into that in a second, earned from Flare Loans be paid out daily like it does say with Nexo? Or it'll be like weekly, monthly, or whatever timeline. They got back to me and they said, yes, all 6 products will be launched from the beginning. So that's good. And yeah, it's also all the APY in the form of YFIN gets paid out every day, right? So that's good to know as well. Now, so obviously, I was very happy to hear that back in March, because there's some really cool things that we'll be able to do right now. Now, I'm just going to run through these 6 products very quickly. So if I just go to their website, right? This is the Flare Finance website. It's going to go down a little bit. You'll see the products here. So we've got FlareX. FlareX enables users of the Flare network to swap currencies and earn passive income, providing liquidity to liquidity pools. Decentralized on-demand liquidity is made available to traders through a simple and easy to use interface. Okay, so the main thing to take away from FlareX is just swap currencies is the main thing, right? You can kind of swap stuff around. So we have that one up here, FlareX. Then the second one is Flare Wrap. So Flare Wrap enables users to bridge their currencies to the Flare network easy without needing an exchange. So basically see this as external products coming onto the Flare network, right? So stuff like USDC, USDT, that kind of stuff, right? So like they're not assets from Flare Finance, they're not from Flare networks, they'd be like from other platforms, but then brought on to onto Flare Finance. Okay, I have that one here, Flare Wrap. Then the next one we want to look at is Flare Farm. So Flare Farm is the ecosystem's primary governance yield farming platform and fair launch distribution platform. Flare Farm enables users to earn yield easily and effectively through participation in various staking pools. Now, I don't know if that sounds very complicated or not. To simplify what this is, basically, by you parking your money in specific places, right? So like say in these pools, you'll earn more money, right? So that's all it. You're going to so it's called farming, like yield farming. We'll go through that now a bit more later on, but just know that by putting your money in a certain place, you're going to earn more money. It does not have to be this like one for one, like the same, like in-kind type. What I mean by that is, if you put one product somewhere, you might earn rewards in a different type of product. Okay, but like that's what you can happen here in Flare Farm. So I have that one here, and we'll get into all that stuff later. Then the next one is Flare Mine. Now, I personally will not be using Flare Mine. That's why I kind of have it up here to the side as well. It's not linked to anything, as you can see. I'll explain what it is, but like just know that for now, for what I'm doing anyway, it's not going to be important because I'm just not a miner. So Flare Mine is a decentralized yield mining platform that allows owners of Bitcoin or Ethereum mining rigs to mine various non-proof of work tokens, additionally serving as the first infinite mining portfolio manager. So I'm not going to get into too much depth here. See it as if you are currently mining Bitcoin or Ethereum, there's certain ways that you can set it up that you will basically swap whatever you're mining straight away into like Flare assets. It's not something that I'm currently doing. It's not something that I plan to do anytime soon. So I'm going to leave Flare Mine out of this for now. Flare Loans. So Flare Loans is an asset-backed loans issuance platform which provides decentralized on-demand liquidity by enabling holders to pool their assets to be loaned against the borrower's collateral. Okay, so to simplify this, basically, I don't know if you've ever seen a platform like, I'm a big fan of Nexo, you probably know that already. Celsius is another platform. There's more out there, right? But it's not the platform is not the issue here. My point is, the way they usually work is that you have to put up collateral, and then you're allowed to borrow against that collateral. If the person who takes out the loan does not pay back their loan, then you get the collateral. You get to keep the collateral. Now, usually, the amount that they're allowed to loan is less than the value of what they have to put up as collateral. So just as an example, maybe you put up €1,000 collateral, maybe then that means that you'll be allowed to borrow €500 worth of euros or dollars, whatever, it doesn't matter, right? But let's say half. Then if you don't pay back that $500 in this case, you'll lose the $1,000 worth of collateral. So if you are the person that is holding on to that collateral, it might be quite beneficial for you if that person does not pay back their loan, because then you just get more, right? Otherwise, you'll probably get back what they've borrowed plus interest. But if they default on their payment, of course, then you get the whole collateral. Just kind of want to explain here that how this will kind of work, right? So that's Flare loans. So Flare loans I've put out here as well. And then the last one is Flare Mutual. Now, Flare Mutual is a decentralized mutual fund that allows people to share risk together without the need for an insurance company. So basically, this is insurance on your, I'm going to assume kind of that this will be on your loan. Might be on other stuff as well. There's not a lot of information available at the moment when it comes to Flare Mutual or Flare loans. I have that open here somewhere. Let me have a quick, oh wait, I think I got it on this page. Yeah. So information on Flare loans and Flare Mutual, like the distribution and how does it all work, will be further detailed in version 2 of this white paper. So they're not telling us too much about it. However, we do know from the message that I had with them that all 6 products will be launched from the beginning. Now, because I was looking into Flare Finance at the very beginning, there was actually more information available on these 2 products back then than I can find right now. So I have written certain things down in this because I was obviously doing this back in February and March. And we'll get into that now. But I just wanted to make sure that you kind of understand these 6 products. So I hope that you now kind of have an idea of what they are. Now, what you can do right now is basically forget these 2. We're not, for what I'm going to explain, we're not going to do anything with wrapping, and we're not going to be doing anything with mining. So we're only going to focus on Flare X, Flare Farm, Flare Loans, and Flare Mutual. Okay? So just going to zoom out a bit again to give you the whole picture. So what we now know, what we've done basically, is our XRP is moved over onto Flare Networks. We have our Spark token, and now we want to start putting stuff to work. So we know that Flare Finance offers these 6 products. We also know that after we get our Spark tokens, about 1 month later, we will all receive DFLR as long as you're holding your Spark tokens in the right place during the snapshot. So if you want me to go into more detail with that, I'll do that in a different video, or maybe on Twitter we can just have a chat. But for now, just know that whenever you receive your Spark, 1 month later, there'll be you'll receive like there will be a snapshot for DFLR, and then you'll have, I think it's 7 days to swap your DFLR to YFLR. Now, the reason they're doing that, Flare Finance, is because they don't want people to just to hodl. They need people to participate in the network, right? To provide liquidity, to actually use all these products, right? And they're trying to stimulate that by forcing people to use Flare X. So as we said, kind of Flare X is the exchange, right? Where you can swap certain currencies or assets for other ones. So what they're forcing you to do basically is you get this DFLR, and you have 7 days to use their platform and swap it for YFLR. I'll zoom in a bit again. And you have to do that through Flare X, which I think is good because it means that you have to get used to using the platform. Now, if you don't do that within those 7 days, what happens with this DFLR is that it basically will get destroyed, it'll get burnt, right? So it's basically use it or lose it. So just be aware of that. Okay. So I don't know if I've been kind of talking too much about other stuff right there, but I want to make sure that everything is clear. What I am going to do with my Spark tokens when I receive them is I am going to move them, as you can see by this blue line. The blue line is stage 1. I'm going to move them over here to Flare Farm. Okay? I'm going to do exactly the same thing with my FXRP. I'm going to put that into Flare Farm as well. So why am I doing that? Well, Flare Farm, by participating here, you'll be earning YFIN. So YFIN is the governance token. You can see that here on Flare Finance. Okay, so I want my number 1 goal, remember up here from stage 1, is earn as much YFIN as possible. That's here. So I got my Spark tokens over here now in Flare Farm. I've also got my FXRP over here on Flare Farm. They're both earning YFIN. And now we're kind of getting to the part where I said that like this is probably the reason why I should not have made this video, because I'm shooting myself in the foot here, because there is a fixed amount of YFIN that can be earned per day. I believe from the old papers that I read from Flare Finance that it was something like just below 22 YFIN per day. Well, you can obviously understand that when you I'm just going to give a very simple example here. Say you have $100 and there's one person participating, and that $100 every day has to get divided among all participants. That means that since there's only one person, that one person gets $100. Say the next day a second person joins. Well, it's still $100, but now it has to get divided over 2 people. So now everyone gets $50. Now, if there's 100 people in there, that means that everyone gets $1. So what I'm trying to say here is that the more people are participating, the less each person will get. I don't know if this is a message that has been made very clear by other YouTubers. If not, I completely understand why. But I just want to be as clear as possible with what I'm explaining here, and I hope you appreciate it. If you do, I'll continue now in a second, but please do give me a subscribe. You'd really make my day, and give this video a like as well. Okay, so you have to be aware of something. So when this starts off in the beginning, obviously less people will be participating than later on, because as the network gets more popularity, people will join. The more people join, the less you'll earn over time, because it's just being divided by more and more people. So it's very important to get in early into Flare Farm, like literally as soon as possible. Okay, just so that you'll earn more, because you'll see that this will become less and less over time, and that's also what will cause our strategy to change, right? While we move from, say, phase 1 of my plan into phase 2 and eventually into phase 3. Now, there's another thing we need to touch on here. So now that we've moved our Spark tokens, right, into Flare Farm, they're now just sitting here, right? Obviously, yes, they're earning us YFIN, but they can do another thing, and this has to do with the Flare time series oracle, right? Because the cool thing about Spark is that our token, we can delegate our vote, right? Say the value of the token and the voting power is not linked together. So we can delegate our vote and hand that over to, I have a couple of examples here. I've got FTSO Europe here. I have FTSO UK and FTSO AU, Australia, as 3 examples of places where you can delegate your vote to. Now, the cool thing is as well that you don't have to make a choice. What I could do is I could give, say, 33% of my vote, right, to FTSO Europe. I could give 33% to FTSO UK, and I could give 33% to FTSO Australia. It's completely up to you. The aim of the game here is just to find, or I guess to delegate your vote to companies that will earn you the most, right? And that can change over time as well. If you're not aware how this works, I can show you quickly, because I have it open in one of these windows. There we go, this one. So right now we're just going to jump quickly into FTSO and how you get paid. So basically, I'm just going to read it and then I'll explain. This result is a distribution over the votes, of which the top and bottom 25% are then truncated. The median of the resulting distribution is taken as the price estimate, and the 50% of voters whose submissions were used are rewarded. So what does this mean? Well, what this means is that all of these, the votes, or whatever you want to call them, come in. They cut off the bottom 25% and they cut off the top 25%. They get rid of them. And then that middle 50% that's left, those were the 50% that was most accurate. And they get rewarded for their accuracy. So what you're looking for is either FTSO Europe or FTSO UK or FTSO Australia or any of the other ones that are out there. You want them to be as accurate as possible, because the more times that they are inside that 50% that gets rewarded, that also means that you get rewarded. Now, I don't know the exact percentage that they keep their rewards and what they share with you, but what it's called anyway is an Oracle reward. And that is basically Spark tokens, right? So FLR. So I'm going to make up this percentage right now, but just to give you an idea. What they might do, because obviously these companies need to make money as well, they might keep something like, say, 20% of the reward, and 80% might go to you. Now, those percentages, as I said, are made up. They might be completely different, but just to give you an idea. But this is pretty cool, right? Because now you've delegated your vote, and just for delegating it, you're going to earn more flair. So what do you do with that? Well, I'm going to put that back into Flare Farm, because what I've now created is basically a loop, right? So the more Spark tokens I have, the more I can delegate. The more I delegate, the more rewards I get. The more rewards I get, the more I have in Flare Farm. So we've got this loop going here now, right? Of me basically generating more Spark, delegating more, and then earning more, right? So this is good. Loops are good, right? But don't forget, at the same time, we were also earning YFIN. Okay, so what do we do with this YFIN that we've earned in Flare Farm? Well, what I'm going to do with it is I'm going to put the YFIN that I've earned from Flare Farm, I'm going to put it into Flare Loans. Because when it's in Flare Loans, you get paid in 2 different ways. You also earn YFIN from Flare Loans, but besides just more YFIN, you also earn an APR, right? And then there is a small fee that gets subtracted from that. Now, it's not... so basically what happens with that 1.5% fee, it goes over to Flare Mutual, right, for the insurance. We'll get there in a second. But you are getting that APR, and that's in kind, right? So whatever loan is taken out, so someone might take out an like FXRP or whatever, LTC or Doge or whatever it is, you'll earn a percentage on that in APR as well. And the cool thing is, then you can put that back in again, right, back into the system. Whatever you earn in APR, just put it back into Flare Loans. So what you're doing here is you have another loop created. So yes, you're earning more YFIN. You're also earning the APR on whatever the loaned product was, asset was. And then you put it back in, which means that you can now basically borrow out more, right? And then this continues, so this loop, and you're earning that YFIN. Now, so the YFIN that I've earned here, what am I going to do with that? Well, that I'm going to put into Flare Mutual over here. So the cool thing about Flare Mutual is you get shares of the fee pool, right? And that fee pool is this fee from here, that 1.5%. But you also earn more YFIN. So what do I do with this YFIN? Well, this YFIN I put back in here in Flare Mutual. So we have another loop that is just continually growing here, right? And then here upstairs, we have another loop, because the shares of the fee pool, like what that is, I'm going to put that back into Flare Loans, which means you get more APR, which you can put back into Flare Loans. You also get more YFIN, which you can put into Flare Mutual, which gives you more YFIN, which you put back into Flare Mutual, which also gives you more share of the fee pool. Like, you see what I'm doing here? So these are loops that are continually growing. Okay? So this here is basically my massive, like what I'm going to start off with. This is my plan. Do you see how beneficial it is to get in early and earn more YFIN? Because the more you earn here initially in YFIN, the more you'll have to put into Flare Loans, the more you'll have to in Flare Mutual, and these loops will grow faster and faster. So this is why I think a lot of people may not want to share this information. And just to be completely honest about it, I hesitated for a while as well. Should I share this or not? Because it's exactly what I showed you right now, right? The less people are in this, the better. But yeah, I hope you'll reward me with a subscribe. Anyway, let's move on. So we've got this here. So now that's phase 1. Like as you can see, we're continuously earning YFIN, right, all over the place. Now there will be a stage where so many people have joined that it's basically not worth our time anymore. Right? It's just not worth it. It's been divided over so many people. So we might want to change our plan a little bit. Okay, so then we go into stage 2. So actually just want to go back here to stage 1. So basically, this is just a list of the stuff that I just explained to you down here, right? In this loop situation. But then now we move on to stage 2. So stage 2, we now no longer care about YFIN, right? Because it's just not worth it anymore. What I want to do in stage 2 is I want to grow my FXRP holdings. Because FXRP, as we've seen here, is one-to-one, like swappable, whatever you call it, the value is the same as XRP. So basically by generating FXRP, I am also generating XRP, right? Because I can swap them. So stage 2 is basically this, the green line. And the green line is basically, you can see everything is kind of the same except for one thing, and that is my FXRP. So in the beginning, what I was doing is I had my FXRP here in Flare Farm, right? Generating YFIN. Now the only thing that changes basically is instead of putting my FXRP in Flare Farm, we're going to follow this green line over here, and I'm going to put it into Flare Loans. Now the only reason I'm doing that is because of the APR. Right, I want now at this point I want to earn in FXRP, not just in YFIN, because YFIN right now is it's just been diluted, I guess is probably a good word to use. So stage 2 is me moving it into Flare Loans, and that way through APR generating more FXRP. Obviously the same thing happens here, right? Because I now have more in Flare Loans, I'll earn more APR, but I'll also earn more YFIN here, right? I'll earn less over here with Flare Farm, but I'll earn more over here in Flare Loans. So that still continues. Then that will go down here and so on, right? So the loop still continues, just with a bit more focus on FXRP instead of on YFIN. There's a couple of things that I haven't touched yet, and that is the rewards pool. As you can see here in stage 1 and 2, we will also be getting daily rewards because we are holding an F asset. Now, if I go to, let me see if I can find it quickly. Yeah, so you can kind of, actually, I don't know if you've noticed here, it says 12 billion question mark 5 plus 7. It's just because it's not really essential right now, but it's just a bit unclear how this is divided to me. I'll have to look into this a little bit further and I'll explain why. Because as you can see here, 45 billion Spark will go to the XRP holders. Okay, I have that here, 45 billion. 25 billion Spark Flare Limited. That's the 25 here. And then 30 billion Flare Foundation. Okay, so I have that here. So these are these three. But then if I look at, let me see where that is here. So a pool of 5 billion Flare is being dedicated to Litecoin participants, right? Now, the 5 billion does not increase the amount of Flare coming into existence, but it is redirected from the amount that would be accruing to Flare Foundation. So you can see that here, kind of. So I've subdivided Flare Foundation into, there you go, 5 billion Litecoin reward pool, right? So it's part of that, the 30 billion. But if I scroll down a bit more, is it on this one? No, it's up here. There we go. So then this is the general F asset rewards pool. So here it says the general rewards pool currently derives its Flare tokens from exclusions and the XRP whale cap. This totals about 7 billion Flare. Okay. Or sorry, 7 billion Spark. It's FLR. To this, 5 billion will further be added. So to me, 7 plus 5 is 12. That's why I have 7 plus 5 here. 7 plus 5 is 12. However, where did it say it again? Yeah. Such that the foundation now starts out with 20 billion FLR. So I don't get this, because 30 billion minus 5 minus 12 is not 20. So I'll have to look into this. I might ask Flare. It's not relevant, but just want to kind of explain why I have a question mark here. Anyway, so we have this the daily rewards pool. So this daily rewards pool is this part. So the payouts will be distributed across holders of all F assets, right? Except from Litecoin, because they have their own pool, right? That's that 5 billion here. And the calculation will be based on the Flare value. Now, so basically all you need to know is that every single day that you hold an F asset, you'll be getting like a fraction of this reward pool. So every day that we hold our stuff, say here, our FXRP in either, say, Flare Farm or in Flare Loans or whatever, as long as we have it, we will be earning more Spark. And more Spark means more Spark here, which means we can, delegate our more votes, means we'll earn more Spark. So this is another big loop, right? So the daily rewards pool into Flare Farm, into delegated vote, into more Spark, into, so more and more loops. I just wanted to point that out there as well. Then, so stage 2 was preparing us for stage 3, and stage 3 will be, say that the bull market's over. All right, I know we don't want it to happen, but I think it's what happens in cycles, right? So, do you want to hold on to your XRP or your FXRP if it retraces about 90%? So this is something that I'm not 100% sure yet how I'm going to play this one out. If you have not yet seen my other video that I did on Nexo, I would advise that you watch it, because this is when that kicks in, right? And I'll give it a very quick breakdown now here. So basically when the market is going into a bear market, I will move into stage 3. So basically what that means is I will be taking my FXRP and bringing it back onto the XRP ledger as XRP, and then I will start working with Nexo. I will be using a combination of the Earn wallet and the credit line wallet, where I will basically be able to take out a loan to buy a house and pay off the house immediately without a mortgage. Then the loan that I taken out on it, I will look to pay that back as soon as possible. And you're looking at, instead of say 25, 30 years, whatever the average mortgage is, looking to do it in maybe 1, 2, or 3 years. Now, once again, please watch the video I did on Nexo, because that explains all of this part, right? But that is for me stage 3. I think I'm just going to kind of give you a very high summary here. This is my plan. I have stage 1, stage 2, stage 3. Stage 1 is earn as much YFIN as possible. Stage 2 is grow my FXRP holding so that when I swap it back into XRP, I get more. And then stage 3 is basically move my FXRP back into XRP, move it over to Nexo, and then start earning income from property, right? From renting it out. And paying back that loan as soon as possible, and then just buying more and more properties. That's kind of the end game. Now, keep in mind that when I move my FXRP back into XRP and head over to Nexo, the rest of the stuff here is still going. Right? It's still working for me. So because my Spark tokens are still here, they're still earning YFIN. YFIN is still earning more YFIN. Also APR on the Flare Loans, moving that into Flare Mutual. So even though I take away part of the equation, the rest here still works. And I think the aim of the game, and this is what I'm trying to explain here, is you want to create as many loops as possible, right? Things that just keep growing and growing and growing, preferably without any effort from your side. So quick summary, the XRP that you get changed into FXRP, you can put that into something like, say, Flare Farm. That will earn you YFIN. That YFIN I'm going to put into Flare loans. This will earn me APR on whatever assets, which I'll put back in here. So we have a loop going here. Then I will also have the YFIN that I earn on Flare loans. I'll put into Flare Mutual. That will then earn me a share of the fee pool from Flare loans, which means that I can put more into Flare loans, which will kind of generate another loop here. Also here, the YFIN that I earn from Flare Mutual, I'll be putting back into Flare Mutual, right? So this will obviously be growing as well. So you can kind of see I've got a loop here, I've got a loop going here, I've got this loop going here. Then also the same here for the Flare time series Oracle. By getting more and more Spark, either from here, right, from the daily rewards, that grows my delegated vote, which earns me more Spark. And then we have another loop going here, right, this whole part here. So that's stage 1. Stage 2 is I'm going to move the FXRP from Flare Farm into Flare Loans, which will then just generate more FXRP. The rest stays the same. And then stage 3, when I think the market is going to head down, will be to move my FXRP back into XRP, and then using a platform like Nexo to get into more property kind of stuff. I hope I kind of explained this well enough. I know it's complicated. I know there's a lot of lines on the screen. If you have any questions, please let me know. I think for now, this is probably just a deep as deep as I want to go here. If you have questions, or if you would like me to make like a follow-up video explaining more, do let me know. Obviously, comment below if you like this. Please subscribe, like the video, share it around with everyone. And yeah, look, obviously when the platforms go live, I'll be actually putting this into action, I guess, just actually doing this. I will also be recording and sharing my experiences with you as well. Any questions, guys, let me know. Other than that, have a lovely weekend, and I'll catch you in the next one.
All right, so today we're going to dive into some education around XRP, one of the favorite topics here on the show, of course. And my name is Paul Barron. Welcome back to TechPath. Joining me today is Matt Hamilton, who is with, of course, Ripple Labs, and he's going to dive into all this. Matt, great to have you on the show.
Yeah, thanks for having me.
All right, Matt, let's go into it a little deep, because we get two types of XRP viewers and listeners here on this show. One is the very educated version of the XRP army that has a full history and full understanding of where XRP is going. And then we get people that are constantly asking about what is it and how does it differ from other cryptocurrencies, other projects that are out there. If you could kind of go into just a short history of XRP and Ripple.
Sure. Yeah, glad to. So XRP is a digital asset that lives on the XRP ledger. The XRP ledger is a decentralized, permissionless, open blockchain created originally in 2011, went live in 2012. It was originally developed by a trio of Bitcoin developers who were after something more environmentally friendly than Bitcoin. They understood that the energy usage that the proof of work protocol used was not necessarily sustainable. And so they looked to find a consensus algorithm that still retained the decentralized nature and the peer-to-peer nature of Bitcoin, but without the energy consumption that Bitcoin requires. So kind of fast forward to today, and XRP is one of the most widely supported cryptocurrencies on a whole number of exchanges worldwide. And the XRP ledger is being used for many different use cases, predominantly around payments and moving value around, but also moving into other areas such as NFTs and tokenization. One of the things people may not realize is that the XRP ledger was the first blockchain to have a decentralized exchange built into the ledger, and was the first blockchain to allow the tokenization of other assets. So it's had like stable coins, USD, Euro, stable coins, and things like effectively wrapped Bitcoin, pegged Bitcoin since 2012.
So that far back in terms of just understanding kind of the environmental challenges that Bitcoin would face, that's quite a bit. I mean, that's 10 years ago. I think a lot of people were not necessarily ready for or even understood the mining protocols and requirements that were going to be out and definitely coming out in the future, especially at that time, which Bitcoin, of course, that was at 2-3 cycles ago in terms of how Bitcoin's future was looking. So that was pretty heavy in foresight to be able to understand kind of the direction of that. How important is that today? Is this pretty much the strategy for XRP and all of its development moving forward is to continue to kind of stay on this ESG track?
Yeah, I think so. I mean, like you say, it was quite a prescient move, and to be honest, it probably wasn't one of the primary motivations at the start. I mean, the idea was to have something more efficient than Bitcoin and that could process transactions much quicker than Bitcoin. So transactions on the XRP ledger are complete within about 3 to 4 seconds, as opposed to 10 minutes or up to an hour if you have to wait for confirmations on the Bitcoin network. So, but as you say, Bitcoin has moved on several sort of cycles now in the kind of halvening cycles, and the amount of mining power has increased and increased and increased. Right. And that has started to coalesce now around entities that are able to afford to set up large mining facilities. So you've got economics of scale, you've got the efficiency of dedicated mining hardware. So moving away from kind of Bitcoin's original idea of an egalitarian network to a network, and really, unless you have the ability to kind of set up these large facilities, you can't really play in that space. And so, right. I mean, the XRP ledger, because it's decentralized and it doesn't have the mining functionality, the transactions are confirmed by a set of decentralized validators across the network, that it is actually a lot more efficient. And these days, it's obviously an even bigger concern. And we've seen over the past year that the environmental aspect has really been coming to the fore now, especially when you look at things like NFTs. You've seen a lot of artists say, well, I'd love to mint NFTs, but I might as well just go and burn down a rainforest, right? They've been talking about the environmental impact of blockchains, and a lot of them may not be aware that there's other blockchains besides Bitcoin or Ethereum, and things like the XRP ledger are much more efficient in doing transactions.
So explain the relationship, because I think sometimes people maybe don't necessarily understand kind of the dual track that XRP is on versus Bitcoin, and what its core infrastructure and architecture really surrounds in terms of the development. Can you talk a little bit about the development community itself? Who all's involved? How many projects are you guys working with? Things of that nature. Anything that kind of surfaces to the top that would give you kind of that loose opportunity that Bitcoin doesn't necessarily have in terms of its development of the blockchain itself?
Right. So, like I said, the XRP ledger was originally created in sort of 2011, went live 2012, and was originally developed by a trio of developers. Those developers, originally Bitcoin developers, then went on to form a company called Ripple. That's a company that I now work for. Now, Ripple's focus, so the XRP ledger is, like I said, it's decentralized, and its entire point is point-to-point, peer-to-peer payments without needing a central authority. So exactly the same use case as Bitcoin. But the Ripple, the company, took a slightly different track to maybe what a lot of the Bitcoin community are working towards. And that is, rather than saying, okay, we need to tear down the original existing financial system, we need to try and transform the financial system. So Ripple has been working with banks, with financial institutions, money transmitters, regulated entities, to allow them to use a decentralized permissionless network, which is the XRP ledger. So it's coming at it from a different angle, but it's ultimately doing the same thing to bring about a level playing field with peer-to-peer transactions. Now, in terms of development, Ripple are heavily involved in the development of the network, but Ripple don't control the network and they don't control the development. Ripple only run a few % of the nodes on the network and only have a few % of the voting power in order to enact new features on the network. So the XRP ledger has a decentralized governance model, and the validators of the network need to actually vote to approve any changes to the protocol or any new features that are brought in to the network. And there's a lot of developers out there. So there's a development company called XRPL Labs, which is based in the Netherlands, for example. And they're working on an amendment called Hooks, which brings smart contract functionality to the XRP ledger. As I mentioned before, the XRP ledger was the first blockchain to have a decentralized exchange and allow tokenization. So a lot of the functionality that say, blockchains like Ethereum require smart contracts for, the XRP ledger actually has built in as native functionality in the core of the network. So you don't need smart contracts for that functionality. However, obviously, there's certain things you do need smart contracts for. And originally, Ripple worked on a project called Codius, which was a off-chain smart contracts platform. Well, Hooks is bringing smart contracts functionality on-chain. Like I said, is being developed by a completely independent entity in the Netherlands called XRPL Labs that are creating that as an enhancement to the XRP ledger, which should be hopefully coming later this year. So there's a lot of other companies that are working on things with the XRP ledger. There's companies like Coil, who do web monetization. So the idea that your web browser can dynamically stream payment to a content creator. So you could be reading a blog post or watching a video, and literally as you are reading it or watching it, your web browser is sending, 1/100th of a cent every second you're watching the video. So that's a company called Coil that are working on that. There's another example. There's a company called Forte that are a gaming company, and they're using XRP and the XRP ledger within the gaming side of things. There's a company called Casino Coin that is working on kind of casino and betting and that side of things for the XRP ledger. So there's a whole range of companies doing sort of different things. You might have seen recently that Ripple has made an investment in Mintable, and Mintable is a NFT marketplace, and you can mint NFTs on the XRP ledger as well. So that's a whole other area that's now kind of evolving as well, people moving into that area with the XRP ledger.
Yeah, I don't think a lot of people understand the legacy of XRP and just how far ahead of everybody you guys have essentially moved, because you've had a chance to break it and fix it a lot of times, and really understand the pitfalls of developing on the blockchain. So all of those are very good use case scenarios. When you look at smart contracts, as this is, I think, where the big rub is right now in terms of people understanding the differences between, say, an XRP and let's go back and look at Ethereum and where maybe ETH2 is going to be going with smart contracts, and some of the other projects, whether you look at Cardano, who's rolling out Alonzo this year, we hope. And then you've got Solana and even Polygon, who both have really kind of moved into this space. Kind of position XRP in the middle of that pack, or maybe it's a completely different angle of where some of those alt projects are going. Can you kind of explain the differences there?
Sure. So what I would say is, I would say that the XRP ledger is positioned to be kind of like the best blockchain for tokenization. Right, tokenization of assets. Now, as I said, the XRP ledger was the first blockchain to allow tokenization of assets, and there's been things like gold and silver tokenized on the XRP ledger for many years now, euros, US dollars, et cetera, and other cryptocurrencies. Ethereum is actually tokenized on the XRP ledger. Bitcoin is tokenized on the XRP ledger. So yes, this is the thing, that the XRP ledger was so far ahead of most of the other blockchains. I mean, the XRP ledger existed before Ethereum did. Vitalik Buterin, the creator of Ethereum, actually tried to intern at Ripple right in the early days. So the XRP ledger was so far ahead, but I think what has happened is that people are not aware of the functionality with the XRP ledger. As you say, we've had a chance to kind of build it, break it, build it again. And in some ways, I say this in the nicest possible way, but sometimes the XRP ledger is possibly perceived as boring because it just works, right? It hasn't got to deal with a lot of the big dramatic issues that, say, Bitcoin and Ethereum have to do. So Ethereum's moving to proof of stake. That's a massive thing at the moment that's taking up a lot of development time. Bitcoin is building second layer solutions to fix the scaling problem. The XRP ledger hasn't had to deal with any of those issues. So in some regards, it might be seen as like boring to some people just because it works, right? And so sometimes it's a little difficult to kind of say to people, hey, look, we've got all of this. We've been doing all of this. It just works.
Right.
So, and a lot of times as well, it's to do with terminology, right? The XRP ledger existed, again, before all of these other systems, and before a lot of the terminology within the industry existed. So the concept of stable coins and tokenization, the XRP ledger was doing it beforehand, but we called it issued assets, or we called it IOUs. We didn't call it tokens or stable coins, but it's exactly the same thing. Just we created a different terminology, and people are not necessarily aware that it's the same thing. So one of the big focuses from my point of view from developer advocacy is to kind of look at the terminology we use, the terminology that the rest of the industry is using, and basically just try to realign our messaging such that people are aware that the XRP ledger has this functionality there and has had it for the longest time.
You know, when you talk about the fact that many of the projects that are under development right now, in many cases, 2021 is going to be a banner year, I think, in terms of some of these projects coming out with their ability to essentially kind of match up to what XRP has already had the ability to do. Here's my question. With the fact that you guys have pretty much been in that driver's seat for quite a while, the ability to kind of plug in to these infrastructure opportunities down the road, whether it's DeFi or whether it's doing things in NFT or around the gaming and or even gambling industries. Is there one particular area that you feel like maybe XRP is really suited for, especially from a developer aspect, that somebody that's coming in and saying, hey, I'm going to develop a new project onto XRP, how would you direct them, especially with what you've seen in the marketplace? Because this is a big thing right now. Banks are trying to figure out how to essentially plug into blockchain. We've got so many companies that are now starting to utilize blockchain in many other aspects. Projects are spinning up left and right. What is it that you guys can bring to the market to kind of help those developers in this very critical period of time? Because you technically have the tools to do it today.
Yeah. I would say, kind of maybe slightly reiterate, what I've said, tokenization. That's the main thing. If you want to tokenize something as part of your development effort, part of what you're doing, then really the XRP ledger is the easiest way to do that. And one of the most secure ways, because you don't need to create a smart contract to tokenize something. If you want to run something like an ICO, or you want to issue a central bank digital currency or a stable coin, or you want to wrap another cryptocurrency because you want something that can transact faster using the XRP ledger, then the XRP ledger is really the place to go to, and it makes it much simpler to do that kind of development. There's a company, for example, called Spend the Bits that actually has a Bitcoin wallet that uses the XRP ledger, and it's for transacting Bitcoin peer-to-peer, but it uses the XRP ledger rather than the Bitcoin blockchain because it's faster, right? And it's got more liquidity on it than using something like Lightning. So, these kind of things, and it's been around a lot longer and, a lot more battle tested, right? So, that's the kind of area that I would say it really shines in, the really kind of focus. If you're looking to tokenize any kind of asset and you're looking for fast transaction times, low cost, I mean, the fees on the XRP ledger, you're talking thousandths of a cent rather than say $5, $10, $20, whatever it is. We've seen Ethereum peak up, I've seen people doing transactions and, trying to spend a $150 fee to withdraw $100 of Ethereum, right? Mm-hmm. The XRP ledger, it's thousandths of a cent. So anything that you want the performance, you want the scalability, you want the low fees for doing anything around tokenization, that's where I would say is the sweet spot for the XRP ledger.
So I'm trying to think, would this be considered something similar to blockchain as a service? We've seen this kind of floating around, Corda, a couple of other companies that have kind of moved in this direction around blockchain platforms as a general, because you've got the ability to kind of go in a lot of different directions here, especially with the secure capabilities that have similarities to smart contracts. Would that be an easy way to explain it for those out there that in terms of developing on XRP?
Yes and no. The difficulty with saying things like blockchain as a service is that implies that there is some entity that is offering that service, right? Now, like I said, the XRP ledger is decentralized. Anybody can use it. However, one of the things that Ripple has been working on is the idea of sidechains. So with sidechains, you'd be able to run your own effectively private XRP ledger on the side of the main XRP ledger, and you would potentially have more control of that. So you could use that and create effectively a blockchain as a service entity using that. So you could have something that could spin up these private ledgers on the side of the main ledger that maybe you have a bit more jurisdictional control over. Now, obviously, with all of these things, that's then a balance between decentralization and control. If you run your own sidechain, then it's up to you to ensure that there are sufficient number of nodes on that network to make it as decentralized as you want it to be. But on the converse side, some people, decentralization might not be their primary concern, and so they're happy to run their own separate network rather than using the main network, which is very decentralized. They could run their own separate network in which they could issue their own token on there, or could develop their own functionality that doesn't have to go through the decentralized governance that the rest of the main network has to go through.
Mm-hmm. So overall, what is the network consisting of today? If you looked at the scope of XRP as a whole, because of its age, a lot of it refer to it kind of as the OG when you look at blockchain development. What is the scope of it today?
What, in terms of the size of the network?
Size, yeah.
Yeah. So the network there's about 900,000, something like that, nodes on the network spread geographically. And those nodes are run by universities, exchanges, individuals, anybody who wants to have a connection to the network. Now, one of the things that people notice is that there's not necessarily as many nodes on the XRP ledger as there are, say, Bitcoin or Ethereum. But one of the big differences with the XRP ledger is that node operators are not directly financially incentivized to run a node. So with Ethereum or Bitcoin, you can actually make a business just out of running a node, right? And you can basically operate something effectively like a rent-seeking arrangement in which you get paid just to operate the node, irrespective of what you plan to do with it. Whereas with the XRP ledger, there's no direct incentive to run a node. So those that run nodes are those that actually have other incentives to be a part of the network. So they run a business, they run a wallet, they run an exchange. They are committed to the long-term health and operation of the network. And what that means is, whilst there's a smaller number of nodes, they're a lot more aligned with the rest of the network and with the users. You don't get this kind of battle between, say, on Bitcoin, you have like miners that want high fees because they get more profit, and users that want low fees because they want cheap transactions. Whereas with the XRP ledger, the fees remain low because you don't have that kind of rent-seeking type arrangement in which you have entities that are trying to raise the price because they will get more transaction fees.
Yeah, Matt, when you look at that, because that's a good point, is just the business models that are out there in terms of, especially around Bitcoin and Ethereum, from a node aspect. When you look at that, though, to be able to get to critical mass, let's kind of look into the future. We kind of get past, because right now I feel like blockchain is very much like the Wild West right now. We have just so many projects. We don't really know what projects are going to stick. So many new developments of existing projects that are trying to fix and somewhat repair, limitations that the project has had. Obviously, we're talking about Ethereum, Bitcoin. But when you look at kind of the infrastructure that blockchain has pretty much unleashed on, the world, there's a big opportunity here for future tokenization opportunities that could just go any way your imagination could run. What do you think is, if there was a hurdle that XRP had to overcome, maybe in scalability, where do you feel like the network would need to grow to let's say, everything is, back to roses with XRP, we're head down, we're really moving on creating new development partnerships, all those kind of things, and plugging into real use case scenarios. How big do you think XRP needs to be able to handle that kind of opportunity?
Well, I think the ledger itself is in a very good position to handle that. I mean, the ledger itself can, scale.
As of today?
As of today, yeah. So the ledger itself can scale much greater, and the amount of the transactions that are going through, because the transactions are so fast and the block times are so fast, it's actually able to handle a lot higher, throughput than, say, Bitcoin or Ethereum is. Now, currently, XRP, there's about $2 billion of XRP traded, daily, making it one of the most liquid assets out there. And it's approved for legitimate regulatory use in the likes of UK, Switzerland, Japan, Singapore. Right. So, it already has overcome a lot of the hurdles that maybe some of the other newer platforms have got to deal with. So, Bitcoin's supported on about, 90% of the top 25 global exchanges, again, about 90% of the top 25 wallets. So if you're bringing in a new asset, you've got to not only just bring in that asset and the functionality and the blockchain, but you've got to also convince all of the exchanges to support it.
Exactly.
The wallets to support it, potentially regulatory environments to support it as well. Well, XRP has kind of got past a lot of that, right? So really in terms of kind of what it is there that's kind of getting in the way, I don't really see a huge amount. I mean, you know, Ripple, you may have heard recently from, you know, within Ripple, that we're looking to expand beyond just international payments. So we're looking to expand into tokenization, moving value in general, which aligns with kind of our original goal of the Internet of Value, right? This whole idea that, you know, I can stream down live video feed from the International Space Station right now, but still, if I'm trying to send a payment across the world, it still might take 3 days, 5 days, and still might, you know, cost me 7% in fees. So that's kind of, we're still trying to deal with that, right? That's still a problem that needs fixing, but we're looking wider than just the concept of payments and remittance companies as well. So direct companies being able to make payments between each other, for example. And this is kind of just, you know, continuing further down this path of the Internet of Value that we originally started on.
Yeah, and I think where you guys, you know, when I say you, Ripple and XRP in general, you're really in a position right now that is very prime, because right now, I think for the first time, we've got a little bit of an awakening to the mainstream public on at least cryptocurrency in general. They don't necessarily understand blockchain to a certain extent, but they understand what a Bitcoin is and kind of this is a store of value. There are, you know, and it's starting to create that that inquisitive nature of our human species, which I think the next step is, I want to know how this stuff works. You know, everybody did not understand how, you know, simple ACH or even what SWIFT was, you know, 10 years ago, but anybody in their financial business today understands how SWIFT works and, you know, all those kind of mechanisms that a bank system needs to use. When you look at, and you guys are really primed, I mean, you're ready to plug into almost any kind of scenario use case with it ready to go and capable of handling the expansion of potential transactions there. When you look at that and you say, all right, the greatest opportunity here, everybody of course points to DeFi for decentralized finance, but do you see other opportunities? I know you mentioned NFT, you know, we talked about content creator, you know, monetization. There's a lot of different projects that are kind of going in that direction. We've looked at Audius with podcasting and sound and music and all those kind of things. How would Ripple apply to those various industries in a way? Do you feel like you have I guess the question is, do you have a strong enough developer base to be able to kind of really explode the use case opportunities?
I think so. And as you say, there's a lot more of an awakening and a lot more of an awareness now, right? In the general public, but also with financial institutions, with regulatory institutions. They're starting to wake up now. You're starting to see banks are allowing custody of digital assets. You know, but it's a weird one still, right? We're still hearing like banks closing down personal accounts for trading digital assets or making payments to exchanges. So we're still not quite there yet, but think about where we were 5-6 years ago.
Exactly.
You know, Ripple were approaching financial institutions and say, hey, look, there's this stuff called cryptocurrency, and the financial institutions were going, whoa, you know, we can't go anywhere near that. Whereas now it's not so much, you know, they're not slamming the door. They're saying, okay, we're interested. We're a little bit curious. We still don't quite know. But, you know, they're starting to wake up now. And as you say, so are the general public. And things like NFTs has been a massive push in the general public consensus about this thing. And, you know, with NFTs, I guess like all technologies, we were kind of at the phase where, you know, you kind of throw everything at the wall and see what sticks at the moment, right? I mean, that's what's happening with this technology. We don't know where NFTs are going to go in the future. We don't know what the killer use case is going to be for NFTs, right? Not everybody is going to be selling $60 million pieces of artwork, right? We know that. So, you know, what is the everyday person going to be doing with NFTs? You know, CryptoKitties kind of set the original, you know, that was kind of the OG of the first thing of NFTs. Yeah, that's cute, but what, you know, where do we go from here? And the business models are starting to form now. People are starting to look at these things and say, okay, what if I'm a band and I issue an NFT and people who have that NFT get backstage access or, you know, a shout out on the label or whatever it might be, right? They're starting to see some of these new business models come into play. And similarly with the XRP ledger, with XRP, the transaction time is so fast that it's enabling a whole new range of business possibilities that weren't there, right?
Yep.
If you've got to make a payment, even going back to something like trade finance, if you've got to make a payment and that payment takes 5 days and costs you several $100s to make that payment, then you're going to batch those payments up to much larger payments. Whereas if that payment takes 3 seconds and costs you, fractions of a cent, then you can make those payments much faster, much more regularly. And so that's going to change your whole supply chain and change how your business operates. So the likes of Coil doing streaming monetization, web monetization, well, their play is, let's get rid of advertising, right? Because advertising is the main model by which content is monetized today on the web. And the more an advertiser knows about you, the more valuable your eyeballs are to them, right? So if they know that, I'm a 40-something-year-old guy, I live in the UK, and I'm interested in motorbikes, then they can sell me an advert much more relevant to me. And so that's worth a lot more, right? So it's in their interest to collect as much personal information about me as possible. Whereas, imagine you've got a scenario where your web browser is directly paying, then you don't have to deal with that. And people say, well, why should I pay for content? Well, they're starting to wake up to the fact that they are already paying for it, just in a slightly more subversive way than maybe they realize. So it's opening up all these new business models, right? You go to an airport and you go and switch on your laptop and try and get onto the Wi-Fi, and you're greeted with a page, and you've got to put in, your credit card and all your address details and all this lot to buy, 30 minutes worth of Wi-Fi there for some exorbitant price at the airport, right? Well, the reason you've got to put all those details in is because they need to process your credit card transaction. And the reason that you need to buy half an hour's worth or an hour's worth or a day's worth is because it's not economical for them to charge you just, 50 cents. They have to charge you $5 or $15 because the transaction fees are so high. Whereas if you've got a system where, well, hey, look, I can literally buy per byte or per bit of data, then it's a whole different business model, right? And I don't need to collect any user data. My browser pays, the data comes down. If I stop paying, the data stops. It's as simple as that, right? So it enables a whole different set of business models there, just the speed and the low fees on the ledger.
So, okay, so you're referencing to transaction fees and speeds that really kind of differentiate Ripple and XRP from kind of the masses. But if you look at, things like the Lightning Network, so that would be, I would say, a bit of an argument there in the sense of how it layers in on top of Bitcoin. How would that compare to something that's happening over on XRP in terms of, because obviously the Lightning Network is very, I guess that's their game, in the sense of speed, transaction flow, the ability to move, massive transactions at very low cost. How would you compare the two?
So, I mean, Lightning is there as a necessity, right? It's there to solve that performance scalability.
Exactly.
And you don't necessarily see that problem on the XRP ledger, so you don't necessarily need that second layer. That being said, the XRP ledger does have payment channels, which are very similar to the payment channels used to form the Lightning Network. And so the XRP ledger has had this for years, and it's what things like Coil that I mentioned are doing the streaming live payments use. So, that is able to scale, theoretically infinitely because it's direct point-to-point connections, and then you settle up later on the ledger, similarly to the way Lightning works. Now, this has been in production now for 3 or 4 years on the XRP ledger, that people have been using this in business. So, my kind of comparison would be that we've got a lot of that functionality. We've had it for ages. It's working. I'm not quite sure what Lightning necessarily brings to the table in that regards. Right now, Lightning is a necessity for Bitcoin because Bitcoin can't scale to the same level of performance like the XRP ledger. My judgment is reserved on Lightning because you still need to open and close the channels underneath, right? So you still need to make an on-chain transaction to open and close the channels.
Exactly.
And some people say, well, we'll just keep the channels open. Well, my thing is, well, okay, I walk into the coffee shop to pay my coffee or whatever I'm using Lightning for. What if the other end has closed my channel, right? So the coffee shop has closed the channel because they want to cash out some of the money.
Right.
So if they've closed out the channel, suddenly I can't use Lightning, and I've got to then set up a new channel, which is going to take me 10 minutes, an hour, whatever it's going to take, and cost $5 or whatever to open that channel. Now, if we just all retain channels and keep them all open, well, that's one thing, but you're effectively then losing the key criteria, the key properties of Bitcoin that make it unique, right? And that is the blockchain itself. Well, if you're just passing IOUs around and not doing that, then that's why would you use Bitcoin anyway, or why would you use the blockchain? Why don't you just transact, some Bitcoin IOU on some centralized service instead?
Yeah. So payment channels kind of solve that. I mean, essentially, it is what Lightning is essentially doing, but doing it in a much more efficient manner.
Yeah.
Okay, so let's talk about security, because that's the other layer that everyone, of course, is always striving to, especially when you look at a blockchain, core blockchain, like what XRP essentially is. How secure is this? What are the potentials for any kind of potential breach?
So, okay, there's no such thing as absolute security, obviously, in any computer system or whatever. But what I will say is the XRP ledger, like I said, it's decentralized. There's nearly 1,000 nodes across the globe running the ledger. And there's no one entity that has unilateral control over it. Now, one of the unique things about the XRP ledger is that transactions are deterministically settled, deterministically final, rather than probabilistically settled like they are with Bitcoin. So with Bitcoin, when you make a transaction and the block time is on average 10 minutes, you then need to wait a certain number of confirmations to ensure that transaction is not effectively overwritten by a longer chain on the blockchain that's being mined by somebody else. So most exchanges will wait for something like 6 transactions or 6 confirmations. So that's an hour you're waiting. Whereas with the XRP ledger, the transaction finality is deterministic and immediate. So 3 or 4 seconds, the transaction is final. It can't get overwritten. So in terms of if you're something like an exchange or a wallet or any kind of entity receiving payment, then from your point of view, the XRP ledger is much more secure because that payment is deemed final within 3 or 4 seconds rather than having to wait an hour. So in that regards, I would say that the XRP ledger is much more secure than something like Bitcoin in practical, terms to a merchant.
Just because of the speed of the transaction of finalization, where Bitcoin, of course, is floating around a bit on the chain until those confirmations are done. That's interesting. So, all right. So with that kind of scenario, and the more I talk to you about understanding the depth in which our XRP has kind of moved in terms of solving, transactions, speed, obviously sustainability, the capacity to be able to grow and scale. What is really holding back the institutions? Because when you look at the core functionality of our financial system, we'll just go back to finance, because that's usually kind of the basis in which all these things are built. What is holding back? Because you look at the financial system as it is today, if you look at the ways that we do ACH or SWIFT or any kind of wire transfers, all of this is such a slow and lethargic system, in some cases just painstakingly and very open to breach. Why would these people, and I say people, banks, institutions, financial, all businesses, not just be adopting blockchain at just a record pace right now? Because this seems as though we've solved the problem and it's right in front of us. We just aren't using it.
Sure. I would say there's probably 2 reasons for that. One is the regulatory uncertainty. How are digital assets and blockchains and how are they regulated, right? As we know, Ripple are in, a legal case at the moment with the SEC, and that is around some aspects of the regulatory status of, some sales of XRP in the past, right? So, and it's still not clear. For example, the SEC in the US have not actually come out and made a statement officially as to whether Bitcoin or Ethereum are securities or not, right? They've made an unofficial statement, but they haven't made any actual official guidance on that. So, I think there's still a lot of banks that are kind of a little bit holding back, financial institutions holding back, not quite sure yet whether they can legally transact. And by its very nature, Bitcoins are transnational, right? They're independent, they're global. So what regulatory system do they come under? So how do you actually, deal with these issues?
Yeah, I think that's you're right. I think the regulatory scenario here is going to be one that we have to kind of take a look at. And it's going to be the one that I think eventually opens the floodgates, because there is going to be, whether it's the U.S. or some other major G7 that comes in and says, hey, we're going to start to go in this direction, and blockchain is going to be the future. I think that's the challenge we're facing. But it also is the great opportunity that lies in front of a lot of investors right now who are looking at this as a speculative investment. And that's really kind of the long play, is this eventually is going to supplant, some of these mechanisms and systems. Last question for you. Future of XRP and its developers, anything specific that you're really excited about, in the 5-year horizon for XRP?
5 years is a long time in blockchain, right? So that's a hard one going that far in advance. But I would say the upcoming Hooks Amendment, I think, is really interesting. There's a lot of stuff happening with NFTs. Like I mentioned, there's actually a new NFT standard being proposed for the XRP ledger that gives some additional functionality for NFTs on the XRP ledger and gives them the same kind of sort of first-class status as other currencies on the XRP ledger. So those are the kinds of things, I think, kind of going forward. And also the look at things like central bank digital currencies and stable coins. I think that's the area as well. As this regulatory clarity evolves, I think more and more are going to be moving into that kind of area. We've also as well, Ripple have just recently run a developer grant program. And so we have been looking to fund a lot of different projects, and there's been some amazing projects that have come through on that yet. We've not awarded the grants yet. We're still in the process of that. But just to say, the diversity of thinking there and the different applications people have come up with is really quite astounding. So I'm really looking forward to, when we can kind of announce more about that.
Yeah, that's going to be fun. I definitely want to keep close contact with you to hear more about that, because that excites me too, because I see a lot of these kinds of projects really start to group in a lot of pretty amazing brains when you look at where opportunity kind of is starting to really evolve. And I feel like this has been, I was around when the internet was created. I was around when the social media was first spawned. And I feel like that's where blockchain is right now. It's in that cycle of just massive innovation. And we just don't know what we don't know yet. And I think that's going to be the fun thing that we're going to get a chance to build out over the next few years.
Exactly.
Always great to have you. This is amazing, Matt. Thank you so much for stopping in today. Good insights for our XRP community. And I think this is a good one they'll want to watch. But thanks for stopping in. We appreciate it.
Thanks a lot.
Excellent. All right, you guys are tuned in over on the podcast right now. Make sure and give us some likes and some stars. We love that feedback. If you want to leave a note there, that's a great place to do it. Also, here on YouTube, of course, you can just subscribe and, of course, hit the bell for more notifications of content just like this. If you have an idea that you want us to cover or deep dive, much like getting XRP on today, was really driven by you, the audience. It was your DMs, your comments, your emails. All of that works, guys. It really does. It helps us direct our research. It helps us direct our editorial projects and how we go about getting people in. So just send it to me or over to our producers at revernetworks.com. You can also hit me up on Twitter at Paul Barron. I'll catch you next time right here on Tech Path.
Hello guys, welcome back to our channel on this lovely day. This is Crypto Inspiration, and we're back with another video. This video is about how XRP is about to blow through the roof. More on this topic in today's video, so don't click away. Before we get started, subscribe to the channel and put on your notifications. Without any further delay, let's get started with the video. The Ripple protocol's native cryptocurrency is XRP. Ripple is the name of the business that invented the cryptocurrency and works to drive its adoption at banks and other cross-border payment providers, as well as the blockchain network over which it is transmitted. Ripple was originally known as OpenCoin and was founded by Jed McCaleb, Arthur Brito, and Ripple CTO David Schwartz. Later it was renamed XRP and Ripple Labs was created, with CEO Brad Garlinghouse at the helm. Jed McCaleb has left the project and founded Stellar, a rival cryptocurrency to Ripple in the cross-border payments sector. Ripple, on the other hand, has a stranglehold on the market and shows no indications of relinquishing it to a rival. With that being said, let's take an overview of the current lawsuit. While Ripple announces tokenization with the XRP ledger, the lawsuit becomes tense. The year 2021 will see a surge in supply for blockchain solutions, and supply will be able to meet it. Within the space, competition is high, but Ripple's litigation with the SEC is preventing it from moving further. Ripple Labs is joining the tokenization competition as the XRP ledger continues to expand its utility despite the ongoing SEC case. This year, the blockchain startup has taken measures to implement its distributed ledger technology in a variety of applications, including NFTs through Mintable and central bank digital currencies via a private version of XRPL. One of the most intriguing use cases for blockchain is asset tokenization, and Ripple wants to make sure that XRP is ready to ride that wave. From art and real estate to intellectual property, equities, and supply chain commodities, tokenization is revolutionizing how individuals acquire, trade, track, and manage assets. The World Economic Forum predicts that 10% of global GDP will be tokenized by 2027, stated Ashish Birla, RippleNet's general manager, on the company's blog. We're transitioning from a cross-border payments network to a platform that offers tokenized services, bringing crypto capabilities to businesses and preparing them for a future where crypto is ubiquitous. RippleNet was created to address the problems of speed, cost, and transparency in cross-border payments for individuals who have been mostly ignored by the banking system. By employing XRP as a bridge between two currencies, on-demand liquidity, ODL, eliminates the requirement for pre-funding in cross-border transfers. RippleNet users can now use the line of credit, an extension of ODL, to acquire funds on demand to make large-scale cross-border payments using XRP. Customers of ODL can send XRP directly to a crypto wallet for cross-border payments. Birla also noted that the Asia-Pacific's progressive crypto laws have given Ripple a tremendous boost, with Southeast Asia transactions expected to increase by tenfold by 2020 thanks to existing RippleNet customers and new connections like Novati and Tranglo. Its intentions to go public through an IPO will be postponed until the case is resolved. When will the case be over? What's the holdup, and why is it taking so long? In such a fast-paced profession, these are valid concerns. That might also explain why Ripple Labs and its co-founders are attempting to arrange the important ex-SEC director deposition on July 19, 2021, less than a week away, in what appears to be a rush. While the cause is unknown, it might be connected to U.S. Senator Elizabeth Warren's recent letter to the SEC chair, Gary Gensler. By requesting a response by July 28th, the senator appears to be offering the SEC jurisdiction over digital assets, thus bypassing the CFTC. It was an orchestrated power play, according to attorney James K. Filan. As volume drops, Ripple is at risk of a 12% correction. For the past few weeks, the price of XRP has been stabilizing, unable to show any indications of movement in either direction. As long as Ripple sees challenges ahead of it, it may be exposed to further losses. Further selling pressure could bode trouble for XRP bulls, as the asset may be on the verge of a 13% loss. The price of XRP has been relatively quiet in recent days, with little hints as to its future trajectory. Since mid-June, Ripple has created a descending resistance trend line, suggesting that increased volatility is on the way after a period of stagnation. Heavy resistances are weighing down the price of XRP. Since June 21st, the XRP price has been establishing lower highs, forming a descending resistance trend line on the daily chart. Ripple has been trading sideways since its monthly low on June 22nd in an attempt to recuperate losses. The asset's Bollinger Bands are squeezing, indicating that it may be in for a period of significant volatility. Ripple has been unable to break above the 200-day simple moving average, which has kept the XRP price in a state of consolidation, while trading activity has decreased. The bulls are in jeopardy due to a lack of purchasing pressure and increased resistance. The Ichimoku Cloud Indicator, which reveals aggregate support and resistance levels, predicts that the price of XRP will continue to fall short. Furthermore, the cloud's thickness shows the significant resistance that the XRP price is encountering, which could lock Ripple into a bearish trend. Additional selling pressure and the market-wide weakness may drive the price of XRP to revisit key support levels before continuing to plummet. Ripple is finding support at the 38.2% Fibonacci extension level of 62%. However, because the latest bounce has channeled low interest, the token is likely to tumble to the 23.6% Fibonacci extension level at 58%. When the 50-day SMA connects below the 200-day SMA, speculators should be alert of the imminent death cross. If the price of XRP continues to decrease, it is at a risk of sliding at least 12% into the demand zone, which is between 50 cents and 55 cents. On the other hand, XRP bulls would need to break above the aforementioned diagonal trend line to confirm growing interest and nullify the bearish prognosis. If this bullish perspective pans out, Ripple might go for the 200-day SMA at 74 cents, which also happens to be the 78.6% Fibonacci extension target. A useful resource for investors and traders looking for Ripple price forecasts in the short and long term. Cryptocurrencies are a new type of technology that has the potential to disrupt a variety of industries. Ripple, often known as XRP, is a cryptocurrency that aims to disrupt an entire sector, especially the cross-border payments business. Ripple's XRP objectives differ significantly from those of Bitcoin. Both provide cryptocurrency users control over their funds, but Ripple was built for speed and has among of the lowest cost of any cryptocurrency asset. These characteristics make it particularly appealing to banks, which are Ripple's major target clients. They want to move huge quantities of money rapidly and at a cheap cost. As a result, Ripple is expected to eventually replace SWIFT, the existing standard for international bank transfers, which is known for its sluggish speeds and hefty costs. Banks have been testing Ripple's XRapid, which utilizes XRP to transfer payments between two parties at breakneck rates. Ripple has the potential to challenge established cross-border payment companies like Western Union and MoneyGram, and it formerly owned a share in MoneyGram, sending its stock price soaring. Because Ripple has the potential to become the next industry standard in a variety of fields, Ripple has one of the most promising long-term price prospects of any crypto asset. Short and long-term prices can be difficult to predict. However, this guide includes detailed information from industry experts as well as in-depth technical analysis to aid in accurate Ripple price prediction and to answer frequently asked questions like how high will Ripple go and how much will Ripple be worth in 5 years. Knowledge of the absolute lowest price may be acquired by analyzing past XRP market price data and by looking at circulating supply. Investors can get a feel of what the maximum Ripple price could be someday and create a long-term XRP price forecast. The value of the digital asset is limited to 100 trillion XRP. At the height of the 2017 crypto boom, Ripple hit an all-time high of nearly $3. Ripple was also the most lucrative asset of the year, with investors seeing returns of over 1,000% in a short period. It's traded against BTC and USD pairings on several crypto exchanges. It is presently valued at 60 cents per token. Technical analysis can help you figure out when particular XRP price levels are likely to be achieved. Based on the predictions of some of the industry's finest experts, here's what to anticipate. Ripple might eventually win its legal battle with the SEC, sending the cryptocurrency to fresh all-time highs and exceeding $16 per coin. Following the recent fall, there may be a wick through support before the bull market lifts off, similar to the last bull market. If this occurs, XRP may respond quickly and violently. It might be time for another down market and consolidation phase after such a strong rise from $1 to $16. Ripple would need to find support in the $5 to $6 range before the peak previous bottoms align with the ultimate support. Because all markets are cyclical, even if sentiment turns highly pessimistic on XRP as it has in the past, the asset will almost certainly break out and reach new highs. But to what extent is this possible? A pitchfork channel might indicate prices that are higher than expected. Many experts believe that these predictions are just small tides and the bigger wave will be much larger. As Ripple wins the lawsuit, it is about to smash every record. Let us know what price you think XRP will reach by the end of this lawsuit. Comment down below.
Moving on, today a Russian security company reported that it discovered one of the biggest bank robberies ever. No guns involved. Hackers did it, breaking into more than 100 banks in 30 countries and making off with a total of as much as $1 billion. Here's Anna Werner.
The authors of the report call it the great bank robbery of the modern era.
Their ultimate goal was to steal as much money as possible, and they largely accomplished that.
Chris Doggett is managing director for Kaspersky Lab, the computer security firm that uncovered the scheme.
Your very basic hacker guys are all about getting in and stealing whatever they can get their hands on. The way these guys are different is they were really a combination of hackers, spies, and thieves.
The criminals often use the simplest of methods to get into banks, an email attachment with a virus sent to bank employees. When the employee clicked on it, the hackers gained access to the bank's financial systems, then spied to see how the employees and the systems worked.
They went in and actually changed the balances in accounts at the bank, so that it looked to the bank like there was more money in that account than there actually really was in reality. They then used e-payment systems and online banking systems and ATM machines and even the SWIFT financial network to then transfer the money out of those accounts into other accounts that they had set up for themselves.
Often, the hackers sent commands to ATMs to just spew out money, and then they'd have a person standing there to collect it. The losses are huge. One bank lost nearly $10 million when the hackers targeted its online banking platform. Another was hit for $7.3 million through ATM fraud.
It's not clear yet how many banks in the U.S. were affected or whether they lost money. Now, the American Bankers Association told us today, quote, "There's no evidence U.S. banks were infiltrated." But Doggett's group, Scott, found U.S. banks were definitely targeted.
Imagine what Bonnie and Clyde would think. Anna, thank you very much.
SWIFT, the Society for Worldwide Interbank Financial Telecommunication, is going through a midlife crisis. The network operator is the backbone of payment services for more than 11,000 institutions across more than 200 countries and territories, including banks and corporations. If a bank is wiring money to someone, chances are SWIFT is involved somewhere along the way. The transaction messaging behemoth touts a failure is not an option level of security. That includes its data centers in 3 low-profile locations in Switzerland, the Netherlands, Virginia, and a 4th operation site known only to a handful of SWIFT executives. But a series of recent cyber attacks targeting banks raises questions about the security of the SWIFT network and the global banking system's heavy reliance on it. SWIFT says its core messaging platform is uncompromised. SWIFT began in Belgium in 1973 as a cooperative of 239 banks, aiming to replace Telex. By the time the system went live in 1977, its 518 member banks from 22 countries were sending 51,700 messages a day. Daily message volumes on SWIFT exceeded 25 million in July 2016, and the network now handles more than 6 billion messages a year. The company continues to grow rapidly, adding a range of ancillary products and services. It also has been adding operations in emerging markets, which sometimes have less sophisticated security practices and have been the source of recent customer breaches. In 2015, hackers stole $9 million from a bank customer of SWIFT in Ecuador and attempted another attack on a bank in Vietnam. In February 2016, hackers walked away with $81 million from Bangladesh's central bank, which had an account with the New York Fed. The hackers have not been identified. SWIFT's authentication process is designed to check that a message's sender and receiver are who they say they are. But if hackers gain control of a user's credentials, SWIFT may not detect the intrusion until it's too late. SWIFT also considers user end security to be the responsibility of its customers. It doesn't always audit customer sites to ensure compliance with network guidelines. Swift revealed in September 3 new cyber breaches without disclosing their scale or locations or the banks affected. More breaches may have occurred since then. The recent breaches at customer sites are forcing Swift to make crucial changes in the way it operates. It has hired cyber forensic teams, distributed software patches, and is publishing anonymized incident reports on a restricted part of its network so that users can track attack developments. Swift's lead regulator is the National Bank of Belgium, which is asking the company to continuously report developments. Overall, Swift is overseen by the world's largest central banks, including the U.S. Federal Reserve, which is actively monitoring Swift's response to cyber attacks. A significant global outage would slow payments to a crawl. Swift isn't the only messaging service for large payments, but it is easily the most popular one, and switching to alternatives would be possible but difficult. Swift's progress reports will be closely watched, given its mission-critical role in banking.
Hello, welcome to Sophie & Co. I'm Sophie Shevardnadze. The digital currency Bitcoin, once a toy for computer nerds, is now soaring in price, triggering a new gold rush. Is it just another bubble or the glimpse of the radically new financial future? Well, I ask Rick Falkvienier of Bitcoin Cash and founder of the Swedish Pirate Party.
The new Bitcoin craze is making people rush into cryptocurrency investment, with the digital money's skyrocketing value putting it into the spotlight. But aside from causing a new gold rush, Bitcoin is promising to completely transform the way we use money. What will peer-to-peer money exchange do to the global banking system? What role will the world's governments be left with when Bitcoin goes global? And can it overcome its unstable nature to bring about a radical financial revolution?
Rick Falkvienier, welcome to the show. It's really great to have you on our program. Now, you predicted Bitcoin's 1,000-fold increase back in 2011, and indeed, from $1 in February 2011, hit a record high of almost $7,880 last week, then had a plunge and is back up again. Now, why does it keep growing, and is there any price limit for Bitcoin?
Yes, there is a price limit for Bitcoin and cryptocurrency. It cannot displace more money than exists in the world. So there is an upper ceiling. But that upper ceiling, if you're just regarding Bitcoin as a commodity on the market, which I think it is, like any currency, can easily go to 1 million or more per Bitcoin. Now, it's important to remember that Bitcoin might not be the final cryptocurrency. Cryptocurrency will displace the central bank money. But with social networks, we had 6 Degrees, which was replaced by Friendster, which was replaced by MySpace, which was replaced by Facebook. So some cryptocurrency is going to be worth a lot of money. Which one? Well, that's a gamble.
Goldman Sachs CEO Lloyd Blankfein says Bitcoin may be another bubble, just like that of the dot-coms. And JP Morgan's Chase CEO Jamie Dimon compares cryptocurrency to the Dutch 17th century tulip mania. Don't these men have a point? I mean, a bubble forms when there's public ignorance, and with Bitcoin, most people have a vague idea of what it is and how it works.
I think you absolutely have a point that most people don't really understand what Bitcoin is. It is peer-to-peer electronic money. That means I have a phone here. I can use that phone to transfer money to a nearby phone or to a phone on the other side of the planet. The transfer is instant, it is practically free. Nobody gets to decide whether I can make that transaction or not, including financial authorities. And that in itself will mean a financial revolution. This is an extinction level event for banks. Banks will no longer be a necessary middleman. And that's, more than anything, why I believe that this is the future of finance.
So way back in February, the Bangladesh bank was the victim of a cyber attack where hackers got away with 81 million bucks. It was a lot of money. Now, it would have been even more money if the hackers hadn't made a suspicious typo on their attempted transfers, which ended up making the bank end up canceling the rest of them and then looking into it. So it turns out that these hackers may very well have been hacking into a part of a financial platform software suite by a company called Swift for the Society of Worldwide Interbank Financial financial telecommunications. SWIFT is a co-op owned by 3,000 financial institutions, and their software facilitates communications to over 11,000 banking institutions for payment orders and transfers. So SWIFT users must be authorized banks, so it is suspected that the Bangladesh bank hacker used their lack of network infrastructure to gain access to the bank network, and as such, the SWIFT network as well, which allowed them to receive several compromised transfers from the bank. $81 million worth. Could have been $1 billion if they didn't get caught. So SWIFT reported on Monday that they were aware of malware in their systems, which they suspect is being used to target their clients. A part of the software suite called Alliance Access Server Software is the suspected vulnerable vector. The malware used would modify Access Alliance's database of transfer logs, along with deleting account records, manipulating account balances so nothing was suspected, and it even manipulated hard copies of transfers that were printed by the Bangladesh bank's printer. So SWIFT released a security update and a press release about the malware on Monday. While the only instance of this malware being used in the wild is with the Bangladesh bank, it is a heist on a huge scale. So if SWIFT clients do not update their systems with the security patch, they could easily be next if they don't take proper precautions as well, like not using a $10 network switch for starters. I feel like that would be a good idea.
I mean, the one thing is that everyone in this room we can exchange an email with, but we cannot exchange money with. We have to make sure that their system talks to ours and vice versa.
And so back to what Dilip described, how did we solve that as an industry? It's called SMTP. There's a standard that allows interoperability, a protocol that allows interoperability. For Ripple, we have championed a technology called the Interledger Protocol. And this is what we build our technologies on top of and allows real-time interoperability between ledgers. This idea that there's going to be one ledger to rule them all. You know, as you and I have discussed previously, you know, Ripple has taken some contrarian bets early. And one of them was, look, we don't think there's going to be one ledger to rule them all. You need to think about interoperability between ledgers and connecting the ledgers so that we can let value move the way information moves today.
So let's talk about the problem that Ripple is trying to solve. Maybe you want to start with how money moves between banks right now and let people know a little bit about that.
Well, given that we're at Money 2020, I'm guessing many people in the audience know this well, but the nature of blockchain technology is to allow two parties to transact without trust by eliminating that central counterparty. Correspondent banking is a series of central counterparties. If we can leverage blockchain technologies to change correspondent banking, where you're hopping between bank to currency, where each bank is adding time, is adding some cost, if we can fundamentally democratize how correspondent banking works today, we can not only change the goal of talking about 300 basis points that Dilip was talking about, we talk about 30 basis points. That, to me, is what we should aspire to. In 2030, that's 12 years from now.
And we have a lot of money parked in correspondent banking, right? Just to do that. Just to be able to do trades on maybe Monday to Friday.
Yeah, I mean, you do have the problem today of banks being closed on the weekend. There's all kinds of stories that I'm sure many of us have heard of, a transaction that gets stuck. But I think particularly younger generations are used to the expectation that they have access to information, they have access to their funds 24/7. Why should my ability to transact stop
be limited
Friday at 3 p.m. because there's a wire cutoff?
Reuters and other media have uncovered several cases involving hackers taking advantage of vulnerabilities within the international system for money transfers to siphon at least $93 million from banks in South America and Asia. The attacks all combine modern tactics of hacking into computers with malware and old-fashioned money laundering skills. The most dramatic example is in Bangladesh. On February the 4th, 2016, $81 million of Bangladesh Bank's money was moved from the New York Federal Reserve to a bank in the Philippines. That's a lot of money, but things could have been worse. They tried to transfer nearly $1 billion. What do you need for a heist like this? You need some way to get into the bank's system. You need a way to gain access to the SWIFT money transfer network. You need some malware to cover your tracks. And then you need a bank account, preferably in a lightly regulated country, to receive the money. Investigators have not said how the hackers got into the computers that Bangladesh Bank uses to access the SWIFT system, but some sources say it was probably by sending an infected email to one of the staff. Once in, they would have studied the bank's system and installed their malware. The main purpose of the malware was to cover their tracks as they committed the crime. When the staff are off work, it's showtime for the hackers. They log on to the Swift messaging system and start sending requests to withdraw funds. Most are rejected, but some go through. All these successful transfers go from the New York Federal Reserve and its correspondent banks to bank accounts in Sri Lanka and the Philippines. One alert staffer at Deutsche Bank spots a typo in the name of the intended Sri Lankan recipient and queries the transaction. The New York Fed also sends multiple queries to Bangladesh Bank, but gets no response. Altogether, 4 requests, totaling $81 million, are already on their way. After the requests are sent, the malware goes to work, buying time for the money to be collected and laundered. It checks the Swift messaging system and deletes any incoming messages that might alert bank officials about their fraudulent transfers. It also deletes any confirmation messages before they're sent to the office printer. It's a Friday, a weekend day in Muslim Bangladesh, and when the skeleton staff come in, all they see is an empty printer tray and an apparently broken printer. That is not that unusual. The boss tells someone to fix it and heads off for midday prayers. Meanwhile, the money has landed in 4 fake accounts in a small Manila branch of a Philippine bank called RCBC. Some of the money is transferred to another fake account in the same branch. That afternoon, one of the branch employees summons an armored car from head office which dumps 20 million pesos. Some of the staff count the money and pack it in a paper bag. It's loaded into a car and driven off. Over the weekend, Bangladesh bank officials wake to the scale of the problem. The malware appears to have disabled the Swift messaging system. They print out the Swift messages manually and try to contact the New York Fed via phone, email and fax. There's no response from the New York Fed office that is typically not staffed on weekends. Swift remotely fixed the messaging system. It's now Monday in Bangladesh and officials realize where the money has gone and send Swift messages to RCBC asking them to stop the transfers. But it's a public holiday in the Philippines and those messages don't get read until Tuesday morning. And, crucially, they're sent as ordinary messages, not cancel requests, so they join a pile of hundreds of routine messages in the bank's headquarters. Eventually they're passed on to the branch, but officials in the branch ignore them and transfer the money to other accounts, with much of it ending up in Philippine casinos. Investigations are now going on around the globe, but no one has been arrested or charged. And other cases have now come to light in Ecuador, Vietnam, the Philippines and other countries. Not all were successful and all are dwarfed by the Bangladesh heist. More cases are expected to come to light. But the hackers, whoever they are, remain hidden.
And there was something very interesting I learned from one of your speeches earlier on talks, that Swift has an error problem. You want to talk about that?
You know, it's a really good point. And I sometimes struggle with how to describe this because I grew up in Silicon Valley. To be fair, I moved there 20 years ago, but in my professional life, I grew up in Silicon Valley. And in Silicon Valley, if you're in the tech industry, you talk about, 3 nines of reliability, 99.9% reliability, or 4 nines.
Six Sigma and all that.
Yeah, so think about this. When you use Google, the search box on Google, it always works. I mean, the success rate is 99.999, I think it's 6 nines. Imagine if 6 out of every 100 searches you typed into Google didn't work. It just failed.
6%.
6%.
6%.
Swift's published error rate is 6%. Now, I will talk to corporate treasury people and they'll tell you it's actually higher than 6%. But even if it's 6%.
So what happens if it's 6%? I mean,
well, it means that human intervention is required because, hey, somebody misspelled Faisal, you fat-fingered that account number, Faisal's account number doesn't match Faisal's name, and it's a reason why there are thousands and thousands of people embedded in error correcting and chasing down those payments that kind of get lost in the system.
Imagine if that happened with email, 6%.
Yeah.
I mean, imagine.
That's a good. If 6% of your emails didn't go through without human intervention, that would the information society we live in today would not work.
And you don't come from a banking background, so you also don't come from a cryptography background or a computer science background. And yet here you are, CEO of a company that is using cryptography mathematics to solve an old age problem of remitting money real time.
Well, I'll say a couple things. One is I've always been a bit of a geek, and did some coding earlier in my life, but never formal training around computer science beyond basic stuff way back when. But to me, the reason why Ripple has been successful is because we've focused on a clear problem for a clear customer. There are a lot of companies at Money 2020 that are thinking about blockchain technologies. The best counsel I can offer is understand what customer you're serving, understand what problem you're solving. There's a lot of people out there that I think it's a technology in search of a problem instead of a problem in search of a technology. Even when I got to Ripple about 3 years ago, we were looking at a bunch of different use cases for blockchain. We were thinking about identity, we were thinking about smart contracts. We decided to focus on one. And that focus has meant we have hundreds of people focused on solving that problem for our customers. And we now have well over 100 banks and financial institutions around the world that are working with us. We just announced our product that uses XRP to deliver that liquidity. We productized that in Q3 last year. We announced our first customers. Today, we have some of the largest payment providers in the world using XRP for their payment flows into Mexico. At the end of the day, if you're solving a problem, meaning we're reducing the cost and increasing the speed, I'm very optimistic about the continued adoption of XRP as solving that problem because it works.
We start with our first talk. It's a discussion with Miriam from Ripple. Miriam, can you please join us? Okay, let's take this. Yeah. Miriam, thank you for joining us. It's very impressive. You decided to come and join the community. Can you please introduce yourself and talk about your...
My background. Yeah. Thank you, first of all, for inviting and considering Ripple. My name is Marian de Latina. I used to work for Swift for 10 years. My name is Marian de Latina. I used to work for Swift for 10 years. My last assignment was responsible for GPI, Global Payments Innovation. And since more than 10 months, I joined Ripple. So I wanted to be more disruptive in this very changing landscape.
So I think we've reached a very successful conclusion.
Yes.
Congratulations.
Thank you.
Thank you. So it's my understanding you're flying out this evening?
Yes.
Arigatou.
Success. There you go.
Oh, thank you.
Hey, Lawrence.
Hi, Ian. Look, I know you've put a lot of work in on this, so I thought you should be the first to know. We've signed the contract.
Fantastic. Does that mean that I can push the green light on this end?
Hi Ian, it's Anya. We're almost complete. We also just wanted to keep you in the loop with the payment.
Yep. You should see all the details in front of you now.
Fantastic. Time is of the essence. The deadline for our first shipment goes out this afternoon.
We've also just sent Mr. Tanaka the payment request, which is everything he needs.
Yeah. Looks like he's got it.
Hey guys, look, I know it's getting late there. I can track the payment and keep you posted.
Oh, there's no need for you to do that, Ian. Thank you. Payment is complete. We just got access to the funds.
Perfect.
I think the question is always rises, why changing from Swift to Ripple? Because obviously there are lots of controversy around this. What really interested me when I was working in the some innovation project is the vision of the Ripple, the vision of where the internet of value. I think probably you have heard about it. There are lots of information about Ripple everywhere, but I think the essence of this vision is very interesting. When you look at the way that the internet is used to exchange data and the way that the cross-border payments or the transfer of value has been made, we see a big difference. It's still easier, to move money in your luggage from US to UK than sending it to a bank. So I think really internet of value means that you can, as smoothly as possible, move funds, that you exchange information in the internet. So that has been really the driver behind this change, and I should say that I'm positively impressed. It's a difficult job creating a new global network because, as you know, the commerce is global, and our use case actually is a cross-border payment. So it's a lot of, I should say, challenges, but it's my best experience so far in my career.
So let's start with the 100 banks. Do the banks use XRP to transfer?
No, the vast majority of the banks we have announced are working with our product called XCurrent. And XCurrent is a messaging solution that allows two banks that already have a bilateral relationship, already have that Nostra-Vostra relationship you were describing earlier, to more efficiently debit and credit those accounts.
24/7.
24/7, no problem. Where XRapid, which is our XRP solution to source liquidity, comes in, is if the Bank of Faisal and the Bank of Brad already have a relationship, I can use XCurrent to manage that process. If we now want to settle to the Bank of Audience, I don't know what currency the Bank of Audience is. We're going to stick
Singapore dollars.
Singapore dollars. We don't have a Nostra account in Singapore dollars, but I need liquidity. Well, even yesterday, I think there's a new regulated digital exchange announced here in Singapore. So if you hold US dollars, you can sell your US dollars, buy XRP, move XRP, which would take about 3 seconds, sell the XRP, and buy Singapore dollars. That whole transaction can be completed in less than 10 seconds.
You snuffed out volatility.
The volatility, it's fascinating. There's a lot of misinformation out there about digital assets broadly, and certainly around Ripple. Volatility is not really, that's fake news. Volatility, you're talking about 3 seconds of volatility risk. So here's a crazy thought exercise. If the average SWIFT transaction is about 2 days, that's 48 hours, that's just shy of 180,000 seconds. Take my word for it, that's the math. You can either do 3 seconds of an asset that is highly volatile, or you can do 180,000 seconds of an asset that is low volatility. It turns out there's more volatility risk using SWIFT and fiat than there is using XRP.
Martin, can we have the poll question? I want to take a very quick poll, and we'll give the result towards the end. How many people think that payments, cryptocurrency-based payments, will become the norm in 2018? Yes, no, and a maybe. You can use your Slido to do that, and we'll come back to that. But coming back to the 100 banks. Are the 100 banks, if another bank joins the network and it's 101, are they all able to communicate with each other using your XCurrent platform currently?
Yeah, we call that RippleNet. And so we have banks that have agreed upon a rule set using the same software such they can efficiently participate. And we now are signing up more than a bank a week, or a financial institution a week. So that the network effects are very strong here. The more nodes on a network, the value of that network increases by the square of the nodes. So every time we add another node to the network, the value of participating goes up, and so the value to the next bank to sign up, the next payment provider, next financial institution to sign up goes up. So momentum is definitely building. I'll be interested to see what the survey says. Although, to me, the survey, it isn't about whether you as an individual are using a digital asset to make a payment. It's about how digital assets can be used in the infrastructure to dramatically accelerate what is the primary payment mechanism we use today through financial institutions.
And you're not a bank per se. You want to market, or you do market yourself as a payment network or a processor?
It's a good question. I just got this question a couple days ago. Somebody said to me, are you a crypto company or a blockchain company? And I said, no, we're a payments company.
Yeah, payments.
We happen to use cryptography. We happen to use blockchain technologies. We happen to use a digital asset to solve a payments problem. But
in a decentralized manner.
In a decentralized manner. The XRP ledger is a decentralized open source technology.
Ripple vanishes tomorrow.
If Ripple, the company, goes away, the XRP ledger will continue to persist.
Including RippleNet?
I hope Ripple doesn't go away, just for the record. But yeah.
Why? but I mean, so explain that part of decentralization. How does that work? And my second question to you is, because you're issuing a token, doesn't that make you a money transmitter now in the eyes of most regulators? And if that, how would you go about that?
So I'll take that second part. When we come back to the first part, if I forget the first part, please ask me again. I want to talk about regulation because there's so much uncertainty that people perceived uncertainty, really. What we all experienced in the digital asset market was a lot of, in January, the markets, rumors out of India, rumors out of South Korea, things sold off. And I tweeted out recently.
You had a good year, 20,000%. 20,000% increase.
I tweeted out recently, I'm ignoring that for the moment, because I tweeted, regulatory uncertainty it's a euphemism in my opinion. It's a euphemism for, I don't agree with the regulation. The regulatory certainty, I mean, look, there is clear regulatory frameworks for doing payments. And yes, you have to have KYC information. You have to do AML checks. You have to do BSA checks. We can list the 3-letter acronyms and 4-letter acronyms that come after that. This idea that there's regulatory uncertainty, to me, is trying to pretend that crypto somehow shouldn't adhere to the regulations that already exist. That's just not the real world. I mean, one of the reasons why Ripple was controversial and contrarian early on is because we said that the revolution of blockchain isn't going to happen from outside the system. It's going to happen from within the system. Many in the blockchain community have espoused, many in the Bitcoin community have espoused this idea that, down with government, down with banks. Look, Ripple's taking the position that governments aren't going away. I don't think they're going to go away anytime soon. And so if you want to dramatically change the nature of how payments flow, if you want to solve Dilip's problem that he's talking about earlier, you want to work with the system. You want to work with the regulators. And when regulators understand that using Ripple's technology and using XRP through the flow that I described, you're going from one regulated institution to another regulated institution. There's a KYC account, a KYC verified account on both ends. There's AML checks on both ends. There's no regulatory uncertainty.
And coming to the earlier question.
What was it?
Oh.
It was a really good question.
I know.
But we forgot.
We forgot. Okay, quick question. Within the crypto community, Ripple is considered to go against everything that crypto stands for. Why do you think this belief exists?
Well, I think it's what we're just talking about. To use the crypto parlance, we're working with the man. The crypto community wants to kill the man. Look, I just take the point of view that the most effective way to have an impact, to dramatically change how the world works, is not to pretend that governments are going to go away. We can have, the progress we have made, in my opinion, in the last 3 years is astounding.
Yeah, no doubt.
It's incredible to me. And it's because we're not trying to blow up the system. We're working with the system.
And talking about working with the system, you will not be, and I think you're cognizant that you will not be the only network out there, and there are other networks, who are doing fantastic jobs and will.
Absolutely.
How will you all work together?
Well, that goes back to the interoperability discussion we were having earlier. I think some would like to believe in a world where everyone adopts one ledger, and every transaction is happening through that one open ledger. I don't think that's going to exist, and I think that we are.
We'll have a multitude of
different kinds of ledgers, securities ledgers.
That's where your ILP comes in.
That's exactly right. That's how I think we truly deliver an internet of value.
We have a minute. Maybe you want to explain what ILP is.
So ILP stands for Interledger Protocol. You know, in the same way I think the Internet of Information was built on technologies like TCP/IP and HTTP, we believe the Internet of Value will be built upon ILP, the Interledger Protocol. And this is
an open source?
An open source technology that we have embedded and partnered with a bunch of companies around the world. It'll continue to evolve and develop. Certainly we have been a protagonist, and some of the inventors of ILP work at Ripple.
Networks can connect
That's exactly
seamlessly.
Right. That's exactly
and
right.
They could be any Bitcoin to XRP to JPY to...
And a multi-hop across, you want to go from a JP Morgan ledger through Bitcoin, through ACH, and pay out on Linlen Pay? Okay, no problem.
And are we seeing these rollouts happen?
We actually did a demonstration of a test where you went through 7 different ledgers through ILP at the same time.
And one quick last point. You're not just working with banks, you're working with payment providers, NBFIs as well, wallet providers, telcos, and MNOs that can actually exchange value, correct?
I mean, to me, that's part of the example of it's not going to be one ledger to rule them all. When I say, I often probably make the mistake, I say banks, and then I'll correct myself and say financial institutions. And look, to me, anyone who is helping a consumer or business host value and move value, we want to work with them. We want to enable Exxon, who might be banking with Santander, to enable payouts to their drivers in Nigeria using M-Pesa. Today, Exxon wants to do that, and that's a really hard problem for them. Through technologies that we're talking about here, to real-time interoperability such that Santander can execute a payment and have it settle into M-Pesa in seconds, that's a big change from where we are today. And again, I'll go back to Dilip's presentation earlier. If we're successful, by 2030, we're not going to be talking about 300 basis points, we're going to be talking about 30 basis points.
Which will do magic for the global economy.
Without question.
Can we have the results for the poll of what people actually put up? Let's see. So 49% said no.
Well, so to me, I agree. I would have said no, because what I'm saying here, the audience will be making cryptocurrency-based payments this year. I mean, look, let's just by show of hands. How many people here have used a Bitcoin, an XRP, or Ethereum, or anything to buy something personally? And a second time, how many of you done it more than once? So some people, they've done it once, it's a novelty, that's kind of cool. But look, I mean, you may notice, I don't even use the word cryptocurrency. It's not a currency today. I can't go to Amazon, I can't go to Starbucks, I can't use, these aren't currencies, they're digital assets today. Maybe one day they will be cryptocurrencies, but today I talk about them as digital assets. That doesn't mean they can't be used to solve a real problem at scale. But I agree, I don't think most people in the audience will be using cryptocurrency this year for payments. I think they might be using it through a financial institution. It might be totally invisible to them. Right? I mean, I know we're running out of time, but there's lots of examples today where we have corporates in Sweden settling into the US dollar in seconds. The corporate doesn't know that it's going through blockchain technologies.
True.
It's just solving a problem.
Brad, thank you very much for taking the time out. I know you've been flying for quite a few days, and you probably don't even know which city you're in. But thank you very much.
Thank you for having me. Thank you.
Ripple, I think, is a very interesting company. I can tell you because I'm coming from a world that was more old and at the service of the banks. I think Ripple, what it's doing is creating a new ecosystem by leveraging the blockchain technology, but really in a way that the banks and the financial institution can follow actually the pace of change. So our vision is around creating an internet of value. So the idea is that today, when you exchange information in internet, this takes seconds. But still, when you want to exchange value and send cross-border transaction, this could take up to a few days. Our vision is to make this exchange of value as fastest and smoothest as the information.
Thank you and good morning. The video clip you actually saw was from the GPI Industry Challenge that we held a couple of weeks back in September in Singapore. And our Chief Marketing Officer, Christian Sarafidis, was hosting the event. We had an interaction with over 100 fintech. 40 of them submitted proposals to work and define, explore new overlay services on the new GPI platform. 5 we selected and brought into Singapore together with 30 banks, and 2 of them came out as a winner. So guys, these are the next unicorns of tomorrow, and I'll be hosting this event this morning with those 2 winners so that we can show how we stimulate the co-creation of fintech together with Swift on our innovation platform, which is called Swift GPI. Here you see some of those pictures. Very dynamic event, 2-day sessions, workshops, banks, corporates, all about bringing that new value to the corporate treasurer. That was really our ambition. You see some of the pictures here. And the proposal was really to say, how can we improve the experience for the corporate treasurer? We know that today correspondent banking could be a bit slow, could be maybe not so transparent, and you may not know exactly where your payment is. Well, actually, that was the past. Today, with GPI, over 100 banks have come together to provide that better experience, to make those I can't a thing of the past. GPI is live, hundreds of thousands of messages, millions of payments already going through the system, where banks are providing that richer experience between a corporate treasurer in the US and another one in Germany or Asia, China, over 100 corridors. We're seeing this new experience. And that is thanks to collaboration between banks, where they have come together in order to provide such an enhanced service, but as well with companies like the 2 gentlemen representing here today. And in a minute, they will tell you what their plans are to build additional overlay services on top of this new platform. So Swift GPI is really about providing that new platform. It is a better experience. And what we would like to do is to stimulate more creativity on the edges with APIs, integrate that into the applications so that we can activate even more value for the end customer, which is the corporate treasurer. And how do we do that? Well, Swift GPI is really that platform. What we've done for the first time in 40 years is something really exciting. We have included a unique end-to-end transaction reference in each payment going over the Swift network. So now you can track and trace a payment. And not only that, because you may say, aha, that's like the DHL of payments. Yes, but actually it's better than DHL. Because DHL comes to your door, says, ding dong, here is the package, they scan and they leave, right? Well, what we do here is we deliver the payment, or banks deliver the payment to the other bank, but that bank then processes the payment, credits the account, and updates a tracker that we developed running in the cloud, accessible through APIs. So that's like the DHL experience. Here is the package, but then you open the package, you look at the T-shirt, and you say, that's the T-shirt I ordered. So actually, what banks are doing here with GPI is providing an even better experience, really end-to-end, giving confirmation of credit to the initiating buyer, to the sender of that package, of that payment. So that's quite an innovation in the core. This is the core business of banks today. It's the core business of Swift. This is really creating a better experience, turbocharging the platform, the engine that Swift provides as a supporting mechanism for these global transactions, for these global payments. On top of that, as you see, we don't stop there. So we develop additional rich data that could be accompanied with the payment. So now that we have this tracking information, you can do all kinds of exciting things using that UETR, using that unique end-to-end transaction reference. You can attach rich data, so like a secure Dropbox. And that's important because sometimes if you have an invoice to pay, that's fine. You put the reference number, but sometimes you need to pay multiple invoices. So then you need to provide richer data. Other times it can be there's some data missing. So lots of requests go back to the initiating bank, give me more data. RFI, it's called, request for information. Big burden in compliance. How can we make that better? How can we facilitate that? Another example, now that we know where the payment is a stop and recall function. Because today, if you need to stop a payment because of fraud or error, the request for cancellation is actually chasing the payment because the payment is already on its way. You're trying to catch up and say, well, stop this payment. Today, not so efficient. But now we know where the payment is. We can shoot a request for cancellation directly to the bank where the payment is and even put a stop on the network. So a much more efficient way to help in case of fraud or help in case there was a mistake and the payment needs to be revoked. So all kind of new exciting ideas. And what we would like to do is to stimulate, together with the fintech community, the whole ecosystem of fintech, stimulate even more co-creation, more value added on the edge that leverage this new exciting platform using APIs. There you go, I used the word exciting. Fundamentally exciting. And I think it is. And I'm not here alone to bring that story to you. I'm doing this here with my two friends, winners from the FinTech Challenge, who will talk about the overlay services. So you see the box, it's a big box, and we want this box to be big, because I think there's so many exciting opportunities out there for co-creation. And that's really the message today. We want to provide this new platform on top of which we can co-create, on top of which we can stimulate this creative, this collaborative innovation. That's really the message I wanted to bring. Of course, my friends will talk more about their ideas, their companies, but of course we're here the rest of the day to continue the conversation. So come and see us afterwards, come and see us on the stand or in the various sessions. We have an engagement program as well through InnoTribe to continue the dialogue with the fintech ecosystem. So that was my message in short. And now I'd like to hand over to James.
Thank you, Wim. Good morning, my name's James Higgins and I'm the Product Director at XSPay. We're a UK fintech based in Manchester, and we're in the business of providing and building software solutions for our customers who are both corporates and the banking community. And we build those solutions around a couple of key themes around connectivity, so allowing a corporate to connect to its multi-bank portfolio to make payments, scalability and efficiency, making it really easy to do so, transformation, ensuring that whatever payment formats they send to us, when it reaches the bank, it's going to straight through process because we do a process of transformation. On the cash management side, then, we provide multi-bank cash visibility. We provide intraday liquidity reporting and forecasting. So we were very aware of Swift's GPI initiative and very excited by the prospect of using some of the GPI functionality to provide additional value to our customers. So when the opportunity to participate in the industry challenge arose, then it was far too good to pass up, and we were fortunate enough to be selected to go out to Singapore. So some 6 weeks or so ago, myself and our CEO, Anish, landed in Singapore with a suitcase full of fantastic ideas of overlay services we were going to build. Interestingly, the overlay service that we're actually going to move forward with bears little resemblance to any of those ideas that we arrived with. And that's a great news story, actually, because it's different than our original preconceptions, because we had the opportunity through this fantastic 3-day process of co-collaboration with both Swift and the banking community to not only understand from Swift the art of the possible and what could be done with GPI, but from the banks as well, what the real challenges were that they're seeing from their customers. And allied with the research and the information that we're getting from our own base of over 500 corporate customers, we think what we've ended up with is a value proposition which solves problems not just for the corporates and our existing customers, but for the banking community as well. So what is that solution? Well, the problem that we're trying to solve, so XSPay is in the business right now of, on the cash management side, solving a problem for the corporate treasurer around real-time visibility of your multi-bank cash positions. So we said, well, GPI, this fantastic source of really rich data, can enhance that for the corporate treasurer, because for the GPI tracker right now provides the banking community with a view of a remittance and where it is in the chain. But actually to the corporate, what's really valuable to them is, what am I going to get today? What is coming in? What receivables am I going to be getting? And whilst some of you in the banking sector may say, well, these kind of tools exist in the form of pre-advices, etc., the data is not rich enough to provide reliable prediction and forecasting to the corporate. So our solution is that we are going to surface some of the rich GPI data to that corporate via polling of the GPI banks, and we're going to give them accurate and reliable information on the receivables that are coming to them, allowing them to forecast in advance their end-of-day liquidity position. And we're going to do this by showing them not just the receivables that have been remitted, but when they've fallen over and they're no longer going to be received on the original intended value date. We're going to show them charges that have been deducted, FX rates that have been applied to corporate payments. Now, sure, the banks could go and build these types of solutions, we acknowledge. But the benefit of doing it this way and building these overlay services using an organization like AccessPay is that we can do it standard. We can build a standard solution which aggregates this information across a corporate's portfolio of multiple banks. As we go through this process, how we're going to do it is we're proposing to rapidly prototype 3, 4, 5, 6 different versions of this solution and offer it to the banks and say, go and give this to your customers, let them look at it, let them use it, and give us feedback on what is resonating and what's not. And what we're going to end up with, hopefully, is a solution that the corporate can rely on to be bank agnostic, in the sense that they don't have to pull information together from 16 different bank portals in order to get this forecasted position, in order to get this sight of their intraday liquidity. So that process of standardization is really going to play in the area that we're already in. So why work with us? Why do we want GPI banks to come on this journey with us? We've got experience in cash forecasting, intraday liquidity visibility, but we need your input and your insight. We want your customers' insights as well as our own to make sure that this overlay service is truly delivering the best possible value. If we do it on this basis, then there's no upfront cost to the bank. We've got experience in connectivity for the corporates, and so this information can be delivered back to the corporates direct into their ERP or TMS, whatever system is the one that they want to work in. So we're playing on back to those key points around connectivity, efficiency, scalability, and real-time information is really the area that we want to work in. So we're starting this proof of value, and I've talked a little bit through the solution. We're going to go through for 3 months. And if you want to come on the journey with us, then, as I say, we will develop prototypes on a weekly basis for the banks. And all that we ask is that we continue the great process of co-collaboration that we started at the Industry Challenge, and that what we're going to end up with is a fantastic product for the corporates rather, but also, once we've got this solution, imagine what you as a bank can do with an aggregated view of all your customers' receivables, accurate information as to what's going to be received and when. The rolled-up version of that can also talk to you, the banking community, around increasing transparency around your intraday liquidity flows. And so it comes right back to my original point. We think that what we're doing here in this process is really solving a problem for the corporates, but also for the banks as well. And so if you'd like to hear more, then AccessPay will be available for the rest of Cybos, and we'd love to have a chat about our solution and the GPI journey that we're going on with this overlay service. Thank you very much.
Good morning. My name's Simon Jones, and I am the CTO and one of the founders of Assembly Payments. Assembly Payments provides payment solutions to marketplaces and platforms. So think lots of buyers, lots of sellers. We provide merchant facilities. We provide services like digital wallets, escrow services, fraud protection, so a number of services to marketplaces. In addition to that, over the last 12 months, we've been providing those same services to banks. So as we've been able to provide these services to marketplaces, we've actually overlaid our service on top of bank services. And so banks have come to us and said, can we actually provide those services to our customers? And we said, sure. We can provide those very same APIs to your banking customers and provide those as a white-labelled API. Now, we were very lucky to be selected to attend the Swift Industry Challenge in Singapore. It was a fantastic event, 3 days of co-collaboration with banks and trying to understand some of their problems and also some of their corporate customers' problems. It was a privilege to work through some of those problems, and what they told us their customers were encountering were things like issues with cross-border payments, things like human error, where people were putting incorrect amount or incorrect bank details in, and those details resulted in funds being transferred to the wrong account. They also told us that they were seeing large amounts of email fraud. So they were seeing potentially huge instances of fraud in the US alone, $5.3 billion in fraud last year from email fraud. And that's where a fraudulent actor will actually update an invoice with their own bank details, and they'll send those details through via email, and those funds will be transferred to the wrong account. They also told us that reconciliation was difficult. While Swift GPI provides that rich data and that status tracker, there was also a disconnect between the request for payment and the actual receiving of that payment, and it was difficult for them to reconcile that information. And so together we came up with a solution called Request to Pay. And Request to Pay, like the name says, allows a corporate to initiate a request for payment. They can provide information like their company details, terms of trade. They can provide an invoice or other agreement information. And the request for pay is transferred over the Swift GPI message service to the recipient, their customer, that is going to then ultimately make the payment. Their customer is able to verify the details within their internet banking portal. They were able to see the invoice, verify that those details are correct, and then initiate payment. And so this means that human error is taken out of the equation. It also means that it's a closed loop, so you're not going to be sending emails with invoices around. And one of the other great things is that it also ties the reconciliation back to the original request for payment. So you're able to see, using the UETR that we mentioned before, you're able to generate that UETR right up front, and then that follows through with the request through to the actual initiation of the payment, and then all the way back. And then as those funds are settled, that reconciliation is a whole lot easier. You're able to reconcile using that same reference. So the next phase for us is to actually do a proof of value. And we've identified 3 phases that we would like some collaboration with banks and their customers on. That is, so the first phase is around a concept. Have we actually got the right solution for the market? So identifying things like the requirements, user stories, user cases, that sort of thing. And then phase 2 is moving into more of a feasibility study and feasibility analysis. So we're looking at, is it technically feasible? What data needs to be stored where in order to be able to do this? Is there a cost model that's going to work for the banks and SWIFT and Assembly? And then the third phase is around validation. So we're going to build some wireframe demos, take that to the banks such that we're able to validate those use cases and confirm that yes, we do have a product fit for market and that it's a service that can be delivered over the top of the SWIFT GPI services as a true overlay. So please, if you're interested in being part of this journey with us and continuing the collaboration that was started back in Singapore, then reach out to myself after this. We'll be in the SWIFT GPI lounge, and please feel free to come and have a chat with us. Thank you.
Excellent. Good morning. My name is Oliver Bisman. I'm the anchor, the host of the day, on I think the best day of the week here at the InnoTribe. Let me introduce myself. I'm founder and managing partner of Bisman Advisory. So we'll be helping with my team corporations, enterprises in the high-tech and financial service industry and startups to develop their digitalization strategy and execution, especially leveraging my experiences over the last 30 years as former CIO of SAP and UBS. On top of that, I'm also president of the non-for-profit organization Crypto Valley Association, which is the biggest and largest ecosystem of blockchain and cryptographic technologies in Europe in the area of Zurich, with 400 members, member of the Innovate Finance Hub in London, and also advisory board member of the US Financial Roundtable. So my pleasure today is, after a fantastic introduction about the GPI development, the ecosystem, to invite Wim, James, and Simon to come to the table and open up for your questions. Please. So, who likes to start? Raising question to Simon, Wim, James, because I think it's interesting to hear that GPI is not only a development from a SWIFT perspective, real-time platform, the open architecture to provide additional third-party services. I think it's a critical success factor, I would say, for the adoption and then also for the extension to other industries, because the payment business will be integrated going forward in other ecosystem, new ecosystem that I think building up over the next few years. I think the World Bank is projecting there will be 12 new ecosystems, around about 190 trillion of US dollar built in the next 10 years. And around about 40% is financial service industry related. And I would say payment will be an important service to be integrated in a supply chain, in the trade finance, as we heard, in the mobility, etc. And so having a platform that is open, it's providing services through APIs, I think it's a huge value going forward in a more real-time connected world. So having said that, who likes to start? I think we have microphones all over the place.
Raise your hand.
There, I think first one in the front.
Thank you. So my question is for Wim, and it's about the role of fintechs in developing this ecosystem. So why fintechs? Why not larger, more established players?
Well, I don't think it's a question of mutual exclusive here, because we have both. So we do have a program to work with what we call back office vendors. It's a certification program because it's critically important that the GPI basic conversation is integrated in the bank's back office systems. That's where payments come out, that's where payments go in. And we have several vendors here at Cybos on the exhibition who have GPI-ready applications. So we're doing that. We are fully engaged with that community, with that ecosystem. What we would like to do here is to engage with that other ecosystem of fintech companies. So if it's an established company or a fintech company, we're happy to work with both. And I think both have an important role, both in the integration in the really back office systems, as well as in the development of overlay services that actually leverage that new platform supported by back office application vendors. So I think it's synergy in that sense, and they go very well together.
Okay, very good. Next question, please. I think over there, you have two.
Good morning. Mine is an operative question. We are onboarding bank. If I am not in the tracker page, how do I know that a stop payment has been entered? Do I have, or would we have an alert to my email or something, or I must be in the tracker all the time?
So the idea is that you will be part of that tracking chain, indeed, so that you can fully benefit from that. So we have a program for banks to join GPI. Over 100 banks are already on. We're looking to really make that part of the SWIFT ecosystem. And we are also extending that tracking capability within the entire SWIFT network. Okay, so tracking, you could see like a basic service going forward within the entire SWIFT community. And then there could be a standard SLA level on top of that, providing additional value. And maybe even going forward, an additional service level, because in many countries, we're now talking about real-time payments supported by XML conversations. So I think that's maybe a way to look at a basic tracking capability, really enhance, go to the next level of value. On top of that, confirmation and SLAs, which is for the benefit of the corporate treasurer. And then why not build even further SLAs on top of that? So then it depends where, as a bank, you want to play. What value do you want to provide to your corporate customer, including rich payment data, including stop and tracking. But the idea is that gradually we really want to bring all of these features actually as the new normal within the whole SWIFT community.
Okay, I think there's another question over there.
Hi, my question is for Simon. These notifications, will they go through SWIFT network, through FIN essentially, or is it out of band?
So it'll be primarily through the SWIFT network, so over the SWIFT GPI message service.
Will the banks have to pay for this additional traffic?
That's one of the things that we'll be looking at through the cost model and that second phase of that proof of value. So we'll have to look at all of the costs that may be involved and determine, if there's an actual model there where banks can actually, pass on those service costs to their customers.
And the last question, if I may. It's a good thing, but it looks like it would make real sense only if it's integrated really at the SWIFT interface point. Otherwise, it's just another breaking point. One message sent, the other one was not sent for whatever reason. You have to send it at the same time and track the progress using the same tools. Is it the plan?
Exactly right. So definitely, this will run over the SWIFT GPI network. Definitely.
Okay, James, any comments from your side?
I think that your point about integration and having all the information provided as in one place is key. And absolutely, we plan to for our service, then we're going to be using the GPI tracking information by pulling APIs from the GPI-enabled banks and then surfacing that data to the corporate in whatever form they want, really. So it could be scheduled reports, or it could be direct into their ERP or TMS system, because we've got experience of integration. On the commercial model, you mentioned about incremental cost, and I think the feedback that we get from the corporate treasurer on the corporate side is they don't want to see GPI become a whole series of incremental costs to take advantage of this service. And certainly from our perspective, that's not where we're going with our solution, because actually, I mean, ultimately we'll build this thing and we'll give it to the banks. Because we have, then there's other products, and I mentioned around cash management, that we can then benefit in terms of getting exposure, additional customers exposed to those products. So we don't see this as, a massive charge or any charge really for the corporate.
Your case is very different than the other gentlemen's, right? You may be integrated with a treasury system on the client side and completely dissociated from the real-time progress of the messages. His stuff is really integral part of GPI. Anyway, thank you very much.
Okay, thank you.
I think maybe just to build on your point and where I see the two come together is because James was talking about incoming visibility, predictability. Well, if you think about it, if you send the invoice, you present a bill to pay, that is already part of that conversation, right? Because you know that you will need to pay. And maybe that can even lead to microfinancing, because you could go to your bank and say, I need to pay this invoice, but I can't right now. Can you factor this invoice? Yeah, so it leads, at the end of the day, it needs to go into the treasury management system of the corporate, because actually that's where the money is being paid and is being collected into. So it's like closing the loop, right? And I think that's how actually the two could actually work together in that sense.
I think that the two things, as you say, Wim, it's trying to eliminate some of the manual process of reconciliation for the customer. So if they've got receivables that are coming in and we're providing accurate, detailed information about those receivables into the ERP system that can be then matched against accounts receivables, then it's eliminating a lot of pain, not just for the corporate treasurer, but for back office staff, manual processes at the corporate level as well.
Yeah. And on the return side, if the payment is not reconciled because the details were not entered correctly, you have a pending invoice. And what happens is that the credit manager at the seller, he will just see the credit line go up. And at a certain point in time, he will say, stop selling, right? Because you've reached your credit line. So it is very important that the open invoices are cleared, and then e-commerce can happen again. So that's also where the invoice needs to be reconciled. And if you have better reconciliation details by presenting the invoice coming through, you can clear your open invoices. So again, yeah, that makes the payments make e-commerce go around. Yep. In that sense.
At the end, it's all about working capital optimization, no? And I think there is a new field coming up in connecting the dots here, no?
Yeah, and how we can link the financial supply chain to the physical supply chain.
Exactly. Good. One more question.
Thank you for the opportunity. Does SWIFT plan to start running real-time market where it will be possible to choose the best route, best time-wise and price-wise?
That's an intriguing question. But I think maybe linked to the question of the lady, that's more for banks to do, right? So yes, GPI will provide better insights into routing and experiences. And I think that's also where GPI banks are really thinking already beyond GPI. Yeah, because we know that we have to improve the transparency and the experience. So will that diminish maybe a bit of the fees and the time frames involved today? It probably will, right? But it's better to shoot in your own foot, somebody said. Okay? And those banks are already thinking what additional value they can provide to the corporate treasurer. I think that's the fundamental shift. And I think that's also what the two gentlemen are doing here, is allowing banks to provide added value over and above the payment. Because the payment itself, we know we need to make it better, cheaper, faster. Right? But then the question is, what more can you do on top? Maybe routing, advice, intelligence, and building on the top of that treasury visibility, or like Oliver said, the cash flow optimization.
Yep.
That's I think, where the value of the overlay services come in.
No, thank you so much for asking the question. We come to the end, and what you can see out of the discussion, I think, with this open platform, the possibility and new services will emerge out of that. And I think having James and Simon here, first of all, also congratulations from my side. It's exciting to be a first mover because it's opened up more business opportunity for you. And I think there should be motivation for the rest of the community to follow you because the possibility to utilize the GPI APIs are fantastic from my perspective, also going into different industries. So give them a warm round of applause and thank you so much for sharing your success.
Thank you.
Good. Before we finish the session, I want to walk you through, if you can stay for a minute, walk you through what's expected next. We have in around about 15 minutes the next session about regulatory sandboxes, because it's important to how you want to work together with the regulator in embracing disruptive technology, how to increase adoption, etc. So we have a fantastic panel with MIS and OSC at 10 o'clock. As always, at the end of a session, in respect to coffee, there's the best coffee of Cyprus is here at the Inner Tribe coffee shop. Enjoy it and donate $1 and $2 for the Save the Children Foundation to help the children in Mexico. Thank you so much and see you later.
I remember 3 years ago when people were talking about blockchain, saying, oh, it's interesting, but it has no use. People were saying the same thing in the early 90s about the internet. Well, of course it has no use yet. We haven't figured out how to use it, but it has use. If you can have everybody all over the world talk together under the same language as TCP/IP using this protocol, that has value. And so the reason why I'm saying all of this is that we are now in that next stage where we have real world-changing business applications for this technology. And when I say that decentralized finance will be the biggest wealth-producing event since the commercialization of the internet, that's not hype. You owe it to yourself to learn about this. It's critically important. You must map your own life. If you don't, somebody else will map out your life for you, and you'll just be a pawn in their game in them acquiring more wealth.
Yeah, there's that old saying that if you don't follow your dreams, then somebody else will pay you to follow theirs.
I know that once you fix your financial life is when you can really look within and really start changing who you are, adding more value, being of more value to the world, whether it's giving more money or giving more of yourself, being more generative. But I do believe that individuals, it's incumbent upon them to get financially free. Surround yourself with people that have the life you want, and being around them will automatically change your actions and will automatically get you on the path that you need to be. Now you put these two together, being intentional and being around the people that are living the life you want to lead, and it's like nitroglycerin. It'll change your life in ways that you can't understand.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Tika Tiwari, the former Wall Street trader turned cryptocurrency and decentralized finance influencer and thought leader. At age 16, you moved from England to New York City with just $150 in your pocket, and 2 years later, you became the youngest employee at the Wall Street investment bank Lehman Brothers. Over the course of your career, you made millions upon millions of dollars and went on to launch a successful hedge fund. You have predicted the #1 performing cryptocurrency in 2016, 2017, 18, 19, and 20, and have in your own words, quote, help more people make more money from crypto than any other human being on the planet. You are the editor of the Palm Beach Research Group, and you recently joined the board of directors at DeFi Technologies, a company that makes it easier for people to gain access to DeFi protocols. I'm excited to talk today about DeFi, which you describe as, quote, the single biggest world-changing, wealth-generating trend since the commercialization of the internet. Tika, welcome back to London Real.
It's a pleasure to be here, Brian. Thanks for having me.
Tika, I'm so excited. You've been here on London Real since 2019 talking about decentralized finance. It seems like the world is finally listening. The game is changing and it's happening so fast, Tika. I want to get your thoughts on it and also bring everybody up to speed who's watching us that doesn't really understand DeFi or decentralized finance. Just a couple data points to throw at you. My 17-year-old daughter, Gabby, was here on Friday and we talked for over an hour about crypto and DeFi. And afterwards, Tika, we set her up with a hot wallet and she's got ETH. And one of her first assignments is to transfer some ETH to grandma, my mom, 76 years old in San Diego, California, who 2 weeks ago I was on the phone with her, and she's about Robert Kiyosaki's age. She's got 50 apartment units that she lives off of in San Diego. Talk about owning assets. And she's asking me how to spell Ethereum, Tika. She's literally listening to me and asking me questions about this. So I got 3 generations really coming up the curve on crypto assets, decentralized finance. And at the same time, I got hundreds of students around the world going through my DeFi Academy. And it's just been incredible for me to finally see what I feel like you've seen, Tika, for years. And again, you were buying ETH back when it was $7, and we'll talk about your whole journey. For people that are just tuning in, how do you start to explain, what's happening in decentralized finance, why it's important, and why all of us kind of need to realize it's happening? How do you have that conversation with people?
I think the first thing is to really explain what decentralized finance means. It's a term that's getting bandied around and people are using it as if they know what it means. And I think people might be a little embarrassed to ask, well, okay, what exactly does it mean? So I'll take that embarrassment and I'll explain what decentralized finance is. Right now in the world that we live in the world that you and I grew up in, we have centralized finance where you have these regulated middlemen, intermediaries that manage our financial system. So if I want to get a loan, I have to go to a bank. If you have an asset and you want to get a loan against it, you've got to go to a bank or some type of lending institution. So what decentralized finance is where instead of having a trusted intermediary like a bank, you have a piece of software. And I think that's something a lot of people have a hard time wrapping their head around. How do I interact with a piece of software? Well, normally you couldn't, because that software could be hacked or could be manipulated and moved around or controlled by a third party that you don't want to have controlling it. Decentralized finance couldn't happen until we had the emergence of blockchain technology. And blockchain technology is this technology that underpins DeFi that allows you to have these self-automated computer programs that have all the logic they need in order to create that function of a bank. So I'll give you a prime example. Up until recently, you couldn't get loans, at least easily, against your Ethereum. So let's say you were a big whale in Ethereum, you've got thousands of Ethereum, you don't want to sell it, but you want to make some money from it. So this is where decentralized finance applications first came about. So you had programmers put together these programs that said, okay, you can lend your Ethereum to this platform, and then that platform will then lend the Ethereum out to other people and will charge an interest rate for that. And it will do it in this decentralized way. It will manage all the custody. You don't have to worry about that. You'll still maintain custody of your coins. And all of a sudden, we had this lending market that was just really an idea in a couple of programmers' minds that was nothing. That's now $100 billion market that has absolutely no individual sitting in the middle other than these self-executing computer programs. So think about this. If there was a $100 billion lending market in the traditional space right now, the costs associated with that would be massive. And you'd need literally tens of thousands of employees in order to manage that. But with DeFi, you can do it with a handful of programmers or a community of programmers that are just keeping up the smart contract and adding new functionality to it. So to give you an idea of how disruptive decentralized finance is, there is one of these protocols called Uniswap. And Uniswap allows you to take one token and swap it for another token. So similar to what we would do on Coinbase, we're going to use some Bitcoin to buy some Ethereum, or we're going to use some Ethereum to buy some 0x, for instance. Well, when you use a centralized broker, well, sometimes they don't allow you to log on if it's too busy, right? We've had hours of where you've been locked out of Coinbase. It's slow and it's really expensive. Now with Uniswap, you have control over your asset. You say, okay, I own XYZ coin. I want to own this other coin. Uniswap will let you know, well, here's the transfer rate. Here's how much you get. You push a button and it's done. And it's 70% cheaper and it's much faster and nobody can block you. There's no exchange to say, oh, sorry, the doors are closed. You can't come in here. Or when we saw with Robinhood, oh, sorry, we don't have enough capital to clear your trade. You can't do anything. So the reason why DeFi will eat the centralized finance world is it's faster and it's cheaper, and not just a little bit cheaper, a lot cheaper. Think about this. Coinbase is one of the largest centralized exchanges in the world for cryptocurrency. It took over $500 million in capital and over 1,200 employees to get them to where they are now. Uniswap, within the first 6 weeks of it operating as a protocol on the Ethereum network, was generating as much daily trade volume as Coinbase was. And it did it with $11 million in capital and less than a dozen employees. You can't beat that.
Yeah.
Right?
Yeah. So many things you just said there, Tika. I think you're making a reference to, I think it's a Mark Andreessen quote or a Horowitz quote that said software is going to eat the world, right? These were guys that were involved in the internet startup boom with Netscape and other software companies. And they said software will eat the world, which kind of means that when you get the computers involved, it kills all the inefficiencies and makes better products for everybody. Now you're saying, look at that happen in real time with two examples, a centralized exchange, Coinbase, with a lot of people use and my students use, and then Uniswap. And we spoke months ago, Tika, and when you showed me this exact thing, the volume, and I always joke with my students, you got, like you said, 1,200 employees at Coinbase, and you got 4 guys and a dog, or 3 ladies and a cat in Tel Aviv or in Stockholm, or sometimes they're anonymous, right? And they create this piece of software that either works or doesn't. There's probably 20 other protocols we'll never hear about because they didn't work, but this one does. And then you see the volume and it's verified on the blockchain. And one of my students asked me the other night, he said, Brian, when will you know there's critical mass in this market? And I said, I already saw it. I saw it with Uniswap. That it was almost hands down, because now you see this piece of software and all the barriers to entry are gone. When I worked on Wall Street and when we worked on there, I was at Bankers Trust. We needed a balance sheet, right? We needed to be approved by the Fed. We needed at least 10 or 20,000 employees to get us that balance sheet. We were one of 20 institutions, Tika, probably doing advanced derivatives, maybe less, that could even conceive of such a product. Now, you got people all over the world that are doing the same thing we were doing. And who wins? It's the end user that wins in the end, right?
Yes. Yes, it's the end user that wins. And again, I want to make clear that none of this could have happened without that fundamental blockchain technology. And this brings me back to a lesson that I got from the early days of the internet. In 1994, when I first got exposed to the internet, we had no idea of what the highest and best use case of the internet would be. We couldn't conceptualize it. And I remember 3 years ago when people were talking about blockchain saying, oh, it's interesting, but it has no use. People were saying the same thing in the early 90s about the internet. Well, of course it has no use yet. We haven't figured out how to use it, but it has use. If you can have everybody all over the world talk together under the same language as TCP/IP using this protocol, that has value. We're not sure how that value is going to be expressed, but that has value. And so when I looked at blockchain technology in 2016, and I saw here was a way to exchange value, here was a way to secure data, and do it in a way that was cheap and in a way that didn't rely on a third party, I knew that was a multi-trillion-dollar idea. I didn't know what the exact expression of it was going to be. And so the reason why I'm saying all of this is that we are now in that next stage where we have real world-changing business applications for this technology. And when I say that decentralized finance will be the biggest wealth-producing event since the commercialization of the internet, that's not hype. You've got to think about the amount of inefficiency that resides within the financial sector. And as far as the financial sector has come in terms of its adoption of technology, it's still using technology from the 1960s and the 1970s. It's still running on Fortran mainframes, that literally are programmed in these ancient computer languages, Fortran, Pascal, COBOL. Those guys are dying that know how to write in COBOL, right? They're 60, 70 years old. And so, but Wall Street, if it's not broke, let's not fix it. They're the last area that hasn't been completely and utterly disintermediated by technology the way that retailers have, the way that Blockbuster was, the way that so many other businesses and services have been utterly shattered and blown apart by technology. And it really couldn't happen to a better group of guys than for the finance guys.
Yeah, I mean, it's funny you say if it's not broke, don't fix it. That's this whole concept of the innovator's dilemma. And so you don't have to be, conspiring or evil. It just means that if you've got a great business, you stick to the business. And the banking sector, I mean, Tika, you and I both spent 10, 15 years inside. We know what it's like. Once you're in there, it's this incredible money-making hopper where people that would normally work at Domino's Pizza are making over $100,000, picking up the phone, talking to people. Maybe I'm exaggerating a little.
No, that's accurate. I've seen that. I've absolutely seen it. Guys that have a very narrow skill set and that anywhere else would be loading boxes in a truck for McDonald's are making not $100,000, they're making millions.
Millions, I know. And they focused on the 5-year treasury, and they've got 3 clients that are mutual funds. They talk to them every day. They take them out to dinner in New York City once a year, and they're really good at the one thing. But if they weren't there, like you said, they might be loading boxes. And I noticed this when I was in the city. And so they protect this business model. I think it was you, Tika, that said the banking industry takes 6 to 8% of GDP out of the market every year. We know it's like over $9 trillion is what that centralized banking institution takes out. And yet no one has any idea it's happening because it's been invisible all of our lives, Tika. I made an analogy the other day when I was teaching my academy. It's like you were born in a zoo, but you're really a wild animal. You used to have a relationship with finance back in the day when we were hunters and gatherers, you could see value. Now it's like you were born in a zoo and you were told, well, the money, don't worry about the money. It's handled by these people over here, and you're not smart enough, and we're going to stick it in these things, and you won't see it one day, and you don't even know what we're doing it, and we'll throw you a few scraps in your cage every now and then, and you're in there, something's not right, Tika. You don't really have access to it, but you still are in this weird illusion. And so I think it's really important that people like you and me talk about this, because this is a bigger disruption than what we saw the internet do. And right now, banking, what they've done, Tika, is with fintech, they've plugged in tech solutions onto their antiquated way of doing things, right?
Correct.
So now you can get online access to do a SWIFT transfer that takes 3 days and takes, huge, 2% fees. It hasn't yet gone into the software, which is the real innovation. And they're probably, and they're resisting.
It hasn't. And that's why they will, many of the many of the very profitable businesses that banking enjoy right now, specifically in remittances, will get disintermediated away. One area that I think is extremely exciting is we started to see several people in the DeFi space launch equity derivatives. So they would have derivatives of Tesla or of Apple stock. And what's great about that is that you can, using the blockchain, you can tie it one for one to actual shares. Now, the minute the global financial system saw that, they lost their mind. I don't know if you saw this, but there was this global coordinated attack against Binance, banning them from doing business in all these different areas because they were facilitating these trades. Think about it. Once you move all these trades to the blockchain, well, you basically kill the stock loan business. So for those of you that don't know, stock loan is when you have shares that your customers you're custodying on the behalf of your customers, and then you loan them out to short sellers, and you make a fortune on them. In the DeFi space, you'd be able to do the same thing, except you as the holder of the stock would get that money instead of the brokerage firm. So the brokerage firms hate the idea of brokerage assets like stocks moving to the blockchain, because you can't go 140% net short anymore. You can only go short with the amount of shares that are out there. You see everything is completely transparent. You can't hide trades, and they're petrified of this future. But I will tell you here and now, somebody will create a way to do this, to have these equity derivatives and do it in a completely decentralized way that no government and no regulatory agency will be able to stop. And when they do that, mark my words, you will see that protocol be worth billions. And you will see more volume go through that protocol than you see go through the New York Stock Exchange. It's coming. And if you don't prepare yourself for that future, you're just going to watch it emerge, and it's another life-changing opportunity that you didn't pull the trigger on. The beautiful thing that we have now as individuals is that we get the head start against all these institutions, because their charters, for most of them, don't even let them buy this stuff, not unless it's in an equity wrapper. And that's something that attracted me to DeFi Technologies, the company I'm working with. They're taking these protocols, putting them into equity wrappers so institutions can buy them. But that process is still going on. So as individuals, we can get ahead and buy these protocols before all these institutions can come in. And that's an incredible money-making opportunity right now. It's a life-changing opportunity for people that take the time to learn about decentralized finance, to learn about this space, and get educated on the good projects versus the bad ones.
Yeah, I think education's key. I think, whether it's intentional or not, our lack of education allows us to be exploited financially. And we've kind of been grown up. I mean, with Robert Kiyosaki, when he comes here, he said, Brian, when I was a kid in class, I said, when are we going to learn about money? And he said, we don't teach you about money. And, my boys, Caden and Damon, are 4 and 5, and I don't think anyone's teaching them about money either. So the education system hasn't changed. And so my question to you, Tika, is how do people get educated? I threw my daughter Gabby in on the deep end on Friday. That's what I do with my students. I just get them on the centralized exchanges to get the fiat currency into crypto, and I have them try doing these protocols even before they're ready. Now, Gabby was a little bit fumbling on her mobile, but now she's got a hot wallet and some ETH that she'll send to grandma. What do you think is the best way for people to embrace the protocol, be ahead of the curve, and potentially, create wealth around this movement?
Well, I think the first step is to get comfortable with the technology. So go watch a bunch of videos on YouTube, how to set up a wallet, how to stake tokens, what is Uniswap, what is Aave, what is Compound, and go spend 5 or 10 hours, literally 5 or 10 hours watching free videos. There's so much incredible information out there. Then get $100, $200, whatever the equivalent is in your local currency. Buy some ETH, put it on a MetaMask wallet, and start messing around with all these different types of staking protocols that are out there. And again, there are excellent step-by-step guides on the internet, step-by-step guides on YouTube. and put 20 bucks in, put $10 in, but play around, get educated, and do it with a small amount of money, because you're going to make mistakes. You're going to send money to the wrong address and you're not going to be able to get it back. You're going to send Bitcoin to an Ethereum address or Ethereum to a Bitcoin address. You're going to make mistakes. So just make mistakes on small dollars and get educated. I promise you that investment of time, 10, 15 hours, will put you so far ahead of everyone. You're automatically going to start knowing, oh, okay, this protocol is getting a lot of use. Okay, this is something I want to have a part of, or at least own a little bit of, or wow, this protocol, they talk big, but there's nothing really going on. And so you start getting into the community. It's still early enough where you can get into the community and you can learn things directly from the community. Of course, you've got to be careful. There are scammers and pump and dumpers and all that kind of stuff out there. So stick with the big protocols and start taking yourself up the learning curve. And I know you've been doing a lot of work educating people on how DeFi works as well.
Yeah, and that's exactly what we do. We start small, like that's $100 or $200. And Tika, you're right. Invariably, my students make mistakes. I tried to send 10 ETH and I got the wrong address. And I said, okay, you made a mistake, not 10 ETH, $10 worth of ETH. And they said, you made a mistake that cost you $10 or $20, better than it costing you $20,000. So you're learning all these things with some bumps and bruises. You burn your finger on the stove, but you still got your hand. And this week, my students are lending their crypto on Aave. They're on Uniswap, which it's funny, Tika, to hear my students react from Coinbase to Uniswap, because they go from this customer-centric experience with 1,200 employees and help desks, right, and maybe pop-up chats, to a piece of software. And I asked them, we kind of laugh about it, that the user experience is very different, right? One of them is super hand-holding and there's lots of human touch points. The other one is not, but the other one's a piece of software and it can run like a Lambo if it needs to. And it's a piece of software and it has that feel. But again, they're lending, they're doing liquidity pools, which at least get them up the curve. And they're making little mistakes here and there, but man, they learn so fast. And I would implore, like you said, everybody here, if you don't have this now, take $100. Get some ETH on a centralized exchange. That'll take you a little bit to set up. You'll understand that process and start playing around. The community is amazing. You have to be careful for sure. But not only is this the future, Tika, not only is this an incredible investment opportunity, I mean, this is your future reality, right? As finance.
Right. You owe it to yourself to learn about this. If you're sitting there thinking, this is too difficult, or this is just a fad, this will be your life every day, all day. Within 5 to 10 years, when you want to buy insurance, when you want to buy stocks, when you want to get involved in the investment world, you're going to be interacting with a smart contract. It might have a prettier user interface, an easier to use user interface, but you're going to be working with a smart contract. And the reason why I can be so confident in that is that corporations, and especially Wall Street, everything is about reducing costs. So if you can cut your costs by 70 or 80 or 90%, which you can do with certain applications of blockchain technology, you're going to adopt it. So I talked about trade settlement before. There's one side of Wall Street that never wants to see trade settlement go to the blockchain because they make so much money with keeping everything obscure. And then there's another side that absolutely wants to move everything to the blockchain because they spend $20 billion a year clearing trades. There must be at least 500,000 people around the world that are employed just clearing trades, literally with a piece of paper like this saying, and they're marking off trades. They're still using paper and pencil.
I remember, when I was at Bankers Trust in '93, I had direct lines to the Mercantile Exchange and the Board of Trade. And we would trade thousands of Eurodollar contracts on the Merc every day. And at the end, we would go through all of our trades. And I remember asking the guy something about how much do you get for clearing? And I remember he said something like, "Oh, it's like $2 or $3 a contract." And I remember thinking briefly, I was too busy with my own P&L, thinking, man, that's a lot of money. And so again, Tika, you have a great point. There's a whole chunk of the banking industry that relies on this behind the scenes that no one sees, but it ends up taking a chunk out of your savings, income, the world GDP, doesn't it? And so these inefficiencies are going to help everybody and help volume and help liquidity. And it's only a matter of time.
Correct. It is only a matter of time. And the reason why, again, I can confidently say that, which I couldn't confidently say 4 years ago. I said, there's enormous risk here, but the opportunity is so vast. You just take a small position and listen, if it doesn't work, it goes to zero. You don't lose that much money. But because we're so early, if it does work, you're going to see monumental gains. And that's absolutely been proven true. But we're in a different phase now. Bitcoin, and I talk about Bitcoin because it is the underpinning asset of this entire ecosystem that kicked everything off. It is the linchpin asset. It's the dollar, if you will, meaning the funding currency of everything, right? Bitcoin and Ethereum. They are the premier funding assets. I guess the equivalent of in our world, it would be like US Treasuries, right? The capital markets are basically built off US Treasuries and the rehypothecation of US Treasuries. So the point I'm trying to make is that now Bitcoin is being widely accepted by the financial infrastructure. The Office of the Comptroller of the Currency here in the United States last year gave the green light for banks to start actively custodying cryptocurrency and actively working with cryptocurrency actors. That's like the Pope coming down, and giving you that holy benediction. You kiss the ring and you say, okay, you can work in this space. So once that happened, that opened the doorway for institutional adoption of Bitcoin. Well, if you have institutional adoption of Bitcoin and you have institutional adoption of crypto, that means the doorway is now open to the institutional adoption of decentralized finance protocols. So to me, it's a done deal. You pull back the camera, you look at how the chain tracks are being built across the country with this destination of crypto and DeFi and this big train loaded up with institutional money. You don't have to have a degree from MIT like yourself.
Yeah, I mean, Tico, we've talked about this before, and I remember I've texted you a few times saying, should we be worried about regulation? And you're like, Brian, the big players are already involved. You can't say no when JP Morgan's clients want crypto. You can't say no when these things happen. The momentum's already there. And it's really powerful insight from you, Tika, because not a lot of people can tell me that with confidence. But when you say it, I'm like, man, maybe you got a really good point. Whereas sometimes the news media and maybe our governments want us to be scared, want us to think this is all going to be stopped. But you don't believe that, do you?
No, I think we've crossed, I've said this before, we've crossed the Rubicon. If we were going to be stopped, if this wasn't going to happen, then there's no way on God's green earth, Mass Mutual, PNC, Goldman Sachs, Citigroup, and JP Morgan, and Morgan Stanley would offer these products to their clients. There's just no way. It just would not happen.
Right. That's a powerful insight because these people somehow are all intimately involved with the Fed. They all know each other. We saw the bailout. It's a revolving door between them. They
work at the Fed and they go work at Goldman, and they work at Goldman and they go work at the Fed, or they go work at Treasury. I mean, that's just the way that world works. You don't think that the top guys at Goldman are calling Treasury and saying, hey, listen, we're getting involved. Or they're speaking to the guys over at the Fed, one of the governors, and say, listen, we're making these moves. You don't think they have those conversations? Maybe not over the phone. Maybe it's over a coffee. But of course they do. They think Goldman Sachs can get involved in Bitcoin without knowing that their ass isn't legally covered? There's no way. I mean, it would be naive to think that Goldman Sachs, that makes billions and billions of dollars, would take that kind of risk. They wouldn't.
Yeah.
They wouldn't.
And again, who did Trump appoint as the Treasury Secretary? It was ex-Goldman guy, right? The last administration. So, and again, we know that world, and it is a revolving door. I mean, just go, look at the CVs. It's from here to there. So that's powerful. It's interesting, Tika, because I tell my students, be careful of the narrative in the media. First of all, I think every piece of news is designed for two purposes. First of all, to get your attention. The second of all, to transact. Usually those are both the wrong decisions at the time, but it's also, it's a different narrative and it's trying to hijack you one way, right? So the government, sometimes it seems like it wants to scare people out of crypto, but then if you read between the lines like you're doing, Tika, then the institutional money's going in. So they can't stop that, because then you're literally stopping people's bread from getting buttered, and it means they can't get the places in the Hamptons, and it is a little bit of a boys and girls club in that sense.
Yes, you've got to look at the economic incentives. If you really want to get far in life,
follow the money.
You got to follow the money. You've got to follow the money, and the money is flooding into this space, and not for ideological reasons, Brian, but because they see Coinbase made $2 billion in profit last quarter. Binance's profit is bigger than Deutsche Bank. Deutsche Bank's been around for more than a century. It's literally the Bank of Germany, and they're making more money. So I want to impress upon everybody watching today, as greedy as you think you may have been in your life, as greedy as you think somebody in your life has ever been, the greed of a Wall Street banker will eclipse anything you can possibly imagine. Imagine yourself at the most rapacious, greediest you've ever been, times it by 10, and you're beginning to understand the greed of a typical banker. Tell me I'm wrong.
No, you're right, Tika. And, again, it's not like they necessarily attract the worst people in the world, but they stick you in an environment where, I remember when I first started on Wall Street, Tika, people called $1 million a buck. They probably did this back in your day. And how much money do you make today? I'm up $2. I'd be like, you mean $2 million? And they're like, yeah, but it's only $2. So soon, a large amount of money becomes a small amount of money. And then one guy making 10 million over here, one guy's making 20 million, and it's not enough, right, Tika? It's not enough. And the bank's looking to what's the new market where we can make more money and higher margins, and how can we do it? So you get in this environment where, as Bud Fox said to Gordon Gekko, how much is enough? How many boats can you water ski behind? And Gordon goes back and said, it's a game, a zero-sum game. Somebody wins, somebody loses. And you start to see the mentality of Wall Street, right? This is where we grew up, fortunately or unfortunately, but now we understand it, right? And so Atika makes a great point here, and this is really important. When JP Morgan's institutional investors are buying, it's not like there's some dude out in the Midwest who's running, billions of dollars in a teacher's pension fund, suddenly believes in the blockchain. It's because he sees an asset that's going up and he doesn't want to be left behind. I want some of that. That's what he says, right? I remember we had someone call up Bankers Trust in the 90s, and they literally called up a salesperson and said, I want to buy some derivatives. And everybody laughed on the floor because we all knew, you mean a swap or an option, or do you want this or that? And they said, I just want some derivatives. And everybody laughed, but we shouldn't have laughed because it's the same type of mentality, right? People want to get in on it. It doesn't mean there's also not people that understand this tech, but it's an asset class that's growing and the world wants to be a part of it, and you can't stop that train.
Correct. Yeah, it's the train has left the station, and if you're sitting there saying, well, that train shouldn't exist, and that train shouldn't be on these tracks, and these tracks shouldn't exist, and this shouldn't happen, and this isn't real, well, you're going to get run over by that train, and you're going to find out just how real it really is.
Yeah. All right, Tika, I want to do a little bit of a flashback to old days at some point and talk about you recommending to buy ETH at $7. I also want to get your take on some of these new protocols that are out there. But before we do that, you mentioned something interesting about banks and then also government regulation. I thought we'd just finish this up as we speak. I got a text message from NatWest here, which is National Westminster Bank here in Britain, so people don't know. It's probably one of the top 3 retail banks here. And they said, we're concerned about your money. And in order to protect you, we're not going to allow you to use your credit or debit card on Binance any longer. And I thought, wow, I've been a customer for 20 years and I've never ever seen them so concerned about my money. When I call them up to ask about the fees they charge every year, both in my business and my personal, they never seem to give me good explanations. They're constantly putting my account on hold because of fraud that doesn't exist to protect themselves. And I got that text message, first time they texted me, Tika. And I thought to myself, okay, what's going on here? They obviously don't want me in crypto. And then I thought I would ask you, so how are the banks reacting? And then what's your read on how the government's reacting? This infrastructure bill went through. Some people say it was good. Some people say it was bad. Thoughts on regulation, and then I want to go back to the good old days.
Regulation is going to be patchy and ham-fisted. If we look at this infrastructure bill that you're talking about, there was a clause in there that said that anybody that acts as a broker has to provide 1099s, which is a tax reporting form here in the United States. The problem is it didn't give really good guidance as to who is a broker, and it could be broadly interpreted. I think it was written that way specifically. If you look at American securities laws and tax laws, they are very broad, and then that gives the regulatory agency the ability to write interpretive letters about how to interpret it. And, you know, looking at it from the regulator's standpoint, I understand why they do that, because this technology is changing so quickly. They need the ability to have that flexibility. If they say it's only accurate under these very specific circumstances, well, guess what? You got some of the most brilliant people in the world. They'll figure out a way around those circumstances, and now you've got a whole nother area that's completely, you know, unregulated. Now, that's not a popular point of view, but I will tell you right now, if you want to see this sector grow, it needs guardrails and it needs regulation. I don't want somebody taking my pension fund money and banging it in and out of DeFi protocols without some type of regulatory guardrails up. Now, if I make that choice myself, that's my choice, but I don't want some institution running off with my pension fund money in an unregulated market, doing things that I don't know about. Right? Does that make sense?
Yeah, so, and I've heard this from a bunch of intelligent people out there. When a lot of the early adopters, the hodlers, the revolutionaries say, "Stop trying to regulate our market. It's the future. Leave it alone." But then people that have been around have said, "You know what? Let's actually get regulated, because this will make it even better." And it's going to happen sooner or later, and it actually might get us adopted faster. It's almost like the parent coming in, and saying, "Guess what, kids? Let's do it the right way, and it'll be even better." And that's more the way you see it.
I do. I do see it that way. Now, will they get it wrong? Yes, they'll get it wrong. They'll be ham-fisted. The pendulum will swing more one way and then the other. But the key thing here that we need to focus on is that the government is not incentivized to take a negative approach against crypto, because, and I'll tell you where I got that insight. They're looking to raise $28 billion in capital gains taxes from crypto. Well, you don't get any money from a dead goose that lays the golden eggs. And nobody understands that more than a politician in terms of how to bleed us for tax money. So the fact that they see this golden goose can lay $28 billion worth of eggs, well, they're going to protect it. Right? They might be a little bit too constrictive to begin with, and they'll say, "Well, okay, all right, the money's slowing down. Let's restrict it a little bit." They want the money. It's just follow the economic incentives. Now, they've got to have guardrails up. I get it. My call is that you'll probably see Treasury come out with some interpretive guidelines that makes it very clear who is a broker, who isn't a broker. But the other side of this is it's too early to start freaking out about this, because it's still got to go through the House, and that could take months. It could get killed in the House. It could get changed. We don't know. My take is whether it gets approved in the House or not, at the end of the day, we'll have interpretive letters to guide us as this industry grows. And if for no other reason the economic incentive, then the federal government needs the goddamn money.
Yeah, I think it's always important for everybody to take a step back and realize that, what did Andrew Carnegie say? Financial motive must prevail. And the government sees this as a great way to get more money. And, they're not as greedy as the bankers, but they're right one below, right? Always looking for revenue streams. So why would they kill the golden goose? And it's important to always step back and realize what motivates each person. And politicians, man, some extra cash to throw around is always what they want. They always want more budget. So you're right. I guess it's in everyone's interest to find a way to make this work. And there will be bumps in the meantime. There'll be text messages from your banks for a variety of reasons. And we'll see the innovator's dilemma. The old school people will hold on in a death grip as long as they can, right, Tika? But the innovation will come. It will always come from another party. It's just being ramped up because you had fintech using technology to try to beat the banks at their own game. And then it almost as if crypto and blockchain said, guess what? We're playing a completely another game over here. And we set the rules and we set the speed. And these other guys are like, oh, wow, okay.
Yeah, you made a great point. All fintech is old line Wall Street with a pretty face on it, with a user interface on it that you can access through your phone. But it's the same stuff. It's a PayPal, is not a fintech. They're a bank using all traditional banking applications with a face on it. That's it.
Yeah. So how should we act as consumers, Tika, when our banks are restricting us from using centralized exchanges, which, I've had some guests on talk about as kind of the on-ramps and the off-ramps of being kind of in the cryptoverse. Because once you're there, once I own Bitcoin or Ethereum, as Tika said, you can go on Uniswap and you can swap in and out of it. And we'll talk about the old days when I used to buy Tika's coins and Uniswap wasn't there. So I had to go find them on these random exchanges. And it's important to talk about that too. But, like you said, there was this old school way of doing it as far as this on-ramping, this off-ramping. How should we respond to our banks, Tika? I mean, some people get angry. Some people find different ways around it. What's your reaction and how should we react?
Don't get angry. This is. I remember one time I was in a library in 1997 and I was using the internet in the library and I got banned from the library because I dared to log into hotmail.com to check my email because it was not an approved email site to go on in the library. Think about that.
Okay. And so this is kind of a similar thing you're saying.
It's a similar thing. So go to another exchange, open up a couple of different bank accounts and just work around it. I remember I live in Puerto Rico. When I moved here in January 2018, there was not a bank on the island that would let me open up a bank account simply because I wrote about crypto. Not even though I was trading it, because I wrote about it. They wouldn't let me open up a bank account. I had to open up a bank account with a tiny credit union in order to get a bank in Puerto Rico.
Wow, just because they Googled you and didn't like it and wanted to stay as far away from you as possible.
Correct.
Isn't that incredible? I mean, yeah, that's a whole nother episode to talk about the persecution of early crypto adopters. You could probably tell me a bunch of stories when it comes to that, right? This is a good time to maybe talk about a brief history of you. And I kind of want to talk about, Tika, about when you first saw Ethereum and it clicked. Because at the end of this, I honestly want to get your opinion on some of the up-and-comers. And again, you can say as much as you can. I know you have a newsletter and et cetera, but there's a bunch of companies that have recently gone from 30th on the market cap up into the teens. And a lot of people are curious, especially from your perspective, Tika, if they could be the next thing. And again, only say as much as you can because I know you have a newsletter. Ethereum. You went out on a limb many years ago, and maybe you can tell me the whole story, and said this will be the next thing. I think you were buying at $7. You also started getting deep into this whole ecosystem. And again, I remember buying the coins that you recommended, and Uniswap didn't exist. I had to go find these random exchanges just to buy the crypto assets. People don't even realize these days how quick DeFi has actually progressed, because now when I buy Tika's recommendations, I go to Uniswap. Typically, now they've got their own lists and stuff as well. But again, maybe Tika, you could walk us through those early days and maybe what you saw in Ethereum and what you're seeing now.
Well, in 2016 is when I got involved in Bitcoin. I discovered the power behind Bitcoin in January. In the beginning of January 2016, when I first discovered Bitcoin in 2011, I just thought it was a scam. And I hadn't taken the time to learn about the underlying technology. In 2016, in January, I attended an event the Consumer Electronics Show, and Brock Pierce was speaking about Bitcoin. And he was the first person to ever explain what a blockchain was in a way that I could understand. It was a way to move information and value without a trusted third party. And he explained how the consensus mechanism worked, how 51% of the computers in the network had to agree and validate the transaction in order for it to go through. And he explained how each one of these computers has an identical copy of the ledger that has the record of who owns what. And so unless you could corrupt 51% of the computers in the network, there was no way to break the network. And that was, my head exploded.
There's a lot of people out there right now, Tika, whose heads are exploding on the back of your explanation there. Yeah. And sometimes, Tika, it just takes the right person at the right moment to get it, to allow you to get it, right? It's weird how that happens.
It is strange how that happens. And I'll always be grateful for Brock Pierce giving that chat in Las Vegas. It changed my life. So I flew down immediately to Florida, which is where my publisher is headquartered. And I sat down with all the partners and I looked at them. And you have to understand, at the time, I was writing about conservative blue chip income producing stocks. And it was my core audience. It was 45 to 75 blue chip saving for retirement. So I fly down to Florida and I say, I'm writing about Bitcoin, and that's all I'm going to do. And they look at me like I have three heads. And they said, you're not writing about it here. And I said, look, I've owned a newsletter business before. If you won't let me write about it, I'll just spin up my own company and all I'll do is write about crypto. And like, no, you can write about it. So they let me start writing about it. So as I start doing more due diligence and start writing about Bitcoin, I come across an industry analyst. I can't remember her name right now, but she said to me that she was at a hackathon, a Bitcoin hackathon, but there was also this other protocol called Ethereum there. And she told me that 70 to 80% of the Bitcoin developers had moved over and were working on Ethereum. And in that moment, I said, well, hold on a second. These guys are the smartest guys on the planet. If they're now working on Ethereum and building on Ethereum, there's something there. So I read the Ethereum white paper, I researched it, and I managed to get an interview with Vitalik Buterin when he was living in, I believe it was Zurich at the time, Zurich or Zug. And we did this interview over Skype, and this kid melted my brain. Just his vision for the future. And what I realized is that he had created the dominant platform for blockchain development. That the majority of blockchain development programs that were created using a blockchain were going to be built on Ethereum. And in that moment that I realized that, and I realized it immediately after talking to him, I wrote a report on it and I recommended it. I think my recommended price was $9, somewhere between $7 and $9. And in that report, I said that Ethereum is worth at least $350 a coin, which was a $30 billion market cap at that time, right? The whole market cap of the entire space, crypto space, is maybe $3 or $4 billion. So here I was saying that this one coin was going to be worth more than 10x of the entire marketplace right now. It's the equivalent of coming in and saying, oh, global market cap of equities is 100 trillion, and this is going to be worth $900 trillion, right? I mean, it's just nuts. But that's what my research had suggested. And within a year, it had gone 4x higher than my $350 target. It had gone to $1,400. And of course, became a massive wealth builder for my readers and for myself.
Wow. I never heard you tell me that story. I didn't know you had that sit down with Vitalik, but now it starts to make sense, because when your brain clicks and clicks hard, you can go all in on certain parts of this space when you finally get it. But it's hard to get it, and it's easier to get it when you talk to the players involved behind the scenes, right? Because you can see it in their eyes, and you're like, oh, or you hear the hackers are doing this, and you start to piece it together. And this is before there were YouTube videos about it, right? I mean, this is before there were big conferences, and you were out there networking, talking to the people. Talk talk to me about this relationship between Bitcoin and Ethereum. It feels like a tale from the Bible, Tika. You know, it's this weird, you know, Cain and Abel, brother and sister, favored by the parent not. You've got the Bitcoin, which all the smart people that I talk to, including you, say this is the gold standard, the US Treasury, the dollar, if you will, but it's not smart enough to have the protocols and the building. So we need it as the store of value and as almost the gold standard, but it can't get us to the next level, which is what ETH is doing. And then we're all thinking what's going to be the next ETH. Maybe it's Cardano or Solana, which I'll get your thoughts on there. But tell me about this really weird relationship between these two, because you've watched ETH go from 7 or 9, and I don't know what Bitcoin would have been at the time, in the thousands maybe? And
$400.
$400, okay. And now you've seen it creep up, and now you've heard people talking about this concept of the flippening, where ETH becomes worth more than Bitcoin. A Bloomberg analyst yesterday said if Bitcoin caught up to Ethereum's growth, it would be at 100,000. And you get all these people saying weird things. What's Tika's call? First of all, this weird relationship, how does that play out over 10 years?
Well, comparing the two is saying it's like comparing an apple with a car. They're different. An apple can never be a car, and a car can never be an apple. I mean, they are just radically different. Or think of it as two different pieces of software. It's like confusing a messaging piece of software and a word processing piece of software. When people say, oh, you know, Bitcoin rival Ethereum is moving ahead, they don't know how dumb they sound. That's like saying, oh, my instant messenger is going to put Google Office out of business. I mean, no, they do two totally different things. So again, to me, the highest and best use of Bitcoin, at least to date, has been a store of value. It's a peerless asset. There'll only ever be 21 million. It's the strongest blockchain in the world. It is, with current technology, it is impossible to hack. And so I love that it's slow. I love that it's ponderous. It's still faster than gold, and gold's worth $12 trillion now. It's far more usable than gold. So in terms of, you know, the ultimate value of Bitcoin, Bitcoin has to at least get to a $10 or $12 trillion market cap to match gold. Now, along the way,
which means what price, by the way, roughly?
So that's going to be at least $500,000.
Okay.
So yeah, $500,000 gets you to about a $10 trillion market cap, and that's my target for Bitcoin. My 5-year target for Bitcoin is $500,000.
Okay,
that's where I think we'll be. So, but that's just the first step. Bitcoin is so much more than just that. But this is it's like the internet. The first iteration of the internet, people were putting up pictures of their cats and using email, and that version of the internet was around for years before that next version of the internet came. So if we're looking at Bitcoin, no, right now you can't build on it. It is too slow and it is too expensive. But in the future, there will be second layer solutions. So meaning solutions that will allow you to build on Bitcoin, that will allow you to operate at speed and with a much lower cost. But we're not here yet. My point is, even if that never happens, there's still a fortune to be made in Bitcoin. Now, Ethereum is something completely different. Ethereum is a platform. It's an operating system that other people can build programs on, just like Android or just like iOS. That's the way you have to think of it, except this is a global platform that's agnostic to whoever wants to build on it. There's no third-party gatekeeper saying, you can't build, or we have to take a cut, like Apple does or like Google does. So I think you will see more and more projects migrate to Ethereum. And again, that developer lead that they have, there's maybe 10x more developers on Ethereum than Ethereum's closest rival. So I don't know how you dislodge that. People tried to do that for 30 years to dislodge Microsoft, but they couldn't. They had millions of developers, and those developers didn't want to develop on anything else. They wanted to develop on Microsoft, on MS-DOS. So when people talk about Cardano, they talk about Solana, they talk about all these other projects, we own some of them as trades, and they've done incredibly well for us. But will they dislodge Ethereum? Yeah, it's doubtful. It's really, really doubtful.
Because it's just so ingrained in the ecosystem. So much work has been done around it that it's hard to knock it.
Well, the moat is so big. Think of it this way. If you've got 1 million users and you've got all your technology is running and it hasn't been broken and your smart contracts haven't been hacked and they work and you've got millions of people using it, it's like uprooting an entire city and moving it to another part of the country. I mean, can you do it? Yeah, you can do it. But the opportunity cost and the risk, the enterprise risk, it's just off the charts. So the longer projects stay on Ethereum and the bigger they get, the stickier Ethereum becomes. And it becomes like this black hole that just sucks in resources. And it might not be the best solution. It might not be the fastest. It might not be the cheapest, but mass attracts more mass. Understand that. And understand that it's not the technologically best solution that wins, the technologically best solution that makes you the most money over the long term. It's not. Right. It's the one that has the most amount of devs on it and the most amount of users.
I love your comparison with Microsoft because, I mean, you know, all respect to the creators, the user experience, it's not that great, you know, but it's on every office computer. I forget sometimes because we're all on Macs here, but whenever I go to some old school office, I'm like, what are you using? And look at Outlook, and it's just kind of clunky, isn't it? And yet it's dominant and it probably won't be replaced for a while. And that's in the software world, right? So that's a great, let me get, what is your 5-year price prediction for Ethereum, or can you share that or give us a range?
I can. It's going to sound insane, but I think Ethereum will go to $40,000 over the next 5 years.
Okay. And that's insane because it was $730 on Jan 1st of this year, I think.
Right.
And it's insane. Why do you say it's insane? Why do you say that, Tika?
Because it's at $4 trillion, which is what the market cap would be, would make it bigger than Apple and would make it bigger than Amazon. It would make it bigger than any publicly traded stock now out there. And I think most people cannot get their head around that how a piece of software in cyberspace that nobody owns and nobody has direct control over that much value could aggregate around it.
Okay. And that's 5-year price prediction.
Yeah, that's my 5-year price prediction.
Okay, cool. All right. These are really interesting. Can I ask you about a few other coins? Again, you can give me short answers or, you know, pass if you don't need to, but you mentioned a few. Cardano. We got Hoskinson here in about 3 weeks. They just hit some milestones, I think, this last month. It got a pop. Some people say this could be the Ethereum of the future, the one that's already thought about the problems that Ethereum's running into right now, AE, the gas fees, and why they're going to 2.0, and the London hard fork. And they say that Hoskins is looking, 20 moves ahead. But of course, like you said, Tika, it's opportunity cost, and it hasn't been proven. They haven't done anything yet that I know of.
He hasn't shipped anything. Charles hasn't shipped anything. He's had 5 years and $1 gazillion to build something that ships and that can be used. And it's not here. So by the time he's ready, let's say it's another year, another 2 years. Do you know how long 2 years in this space? It's like 10 years anywhere else. Ethereum's going to be light years ahead. They're going to move to staking. Things going to be cheaper. More people are going to be building on it. Where do you think all the venture capital money is flowing into right now? It's not flowing into Cardano projects. You got to be an idiot to cut a $400 million check to a Cardano project right now. No, that money's all going to ETH projects. Why? Because the users are there, the devs are there, the use case is there, and the money, what does your guy say? The money is there.
Right, and we can't forget that. And again, it's a difference in philosophies. I'm sure you met Charles over the years, and you obviously met with Vitalik, and they both have admitted they have different philosophies. Vitalik's philosophy, I think, is ship it, let the market bulletproof it. And Charles' mentality is write 1,400 white papers on it, get everyone's opinion, and then scope it out, right? Am I being wrong here? I've got Charles on a few.
That has been the problem that I've had with Cardano all along. We took a position in it early. We're up a lot on it because, we wanted just to cover our bases just in case. But I would say my one criticism of many of these projects, not just Charles, he's not the only one guilty of this, is you have these brilliant men and women that are trying to make the perfect solution. And that's not the way the world works. You create a minimum viable product, you kick it in the marketplace, it breaks, you fix it, and you iterate and go. You iterate and go. Show me a successful consumer product or piece of technology that didn't follow, that ended up becoming the dominant technology, that didn't follow that approach. Give me one. Give me one that's now dominant.
Yeah, you're right, Tika. I mean, in any tech professional knows it's all about MVP. It's all about get it on the market and then, first of all, see if anyone cares, and then iterate and make it better. Yeah, and that's the mentality here. It's a mentality in the Valley. And I can't think of a product. If anybody can, stick it in the comments and tell us a product that was scoped out for 10 years. But that being said, it did hit number 3 in total market cap a couple days ago on the pop. So it's worth watching.
No, it's worth watching. It's a good trade. People are covering their bets. You've got people that made a ton of money in ETH, and they say, okay, there's an asymmetric bet here. What if we're wrong and Cardano takes over the world? I don't think they will, but I made the same bet with my readers. I said, look, we've got to have a little bit of money here just in case. And just on the speculation, it's been a huge winner for us. And so it'll, as the market continues to go up, Cardano will go up. But will Cardano be a long-term core holding for us over, Palm Beach Confidential? Probably not. It's probably something that we'll take profits on as the whole market moves up, unless something radically different happens. But do you know how difficult it's going to be to dislodge the moat that Ethereum has? You walk me through how somebody breaks apart that moat. I mean, I'm all ears. I want somebody to blow up this thesis. I want somebody to say, oh, okay, here's how they're going to do it. All I hear is, well, ETH sucks. It's slow. It's expensive. It's been slow and expensive for the last 5 years, and it's still the dominant network in this space. So you got anything else other than it's slow and it sucks?
Is it going to get fast and cheap in the next 3 months or not really? Is it going to be a year, or is it ever going to happen?
It's going to be a year or two. I can't see how it's not a year or two. Listen, I'm happy to be wrong about this, Brian, but Vitalik and his crew follow the same playbook that every successful software company does. They overpromise and underdeliver, but they keep hyping the market. I mean, Elon Musk has been doing it for 20 years. Apple's been doing it for 40 years. Oracle's been doing it for 35 years. They all do it. They all do it. So I think we're going to see that again.
All right, really good calls. A couple more while we're at it. Vying for third place is, Binance, the Binance network, which obviously gets kind of tainted with the Binance centralized exchange that's obviously in the news and getting banned in Malaysia and here in the UK, and the CEO in America quit. But that's actually quite different than the Binance Smart Chain, which has a lot of liquidity. It's got a decent market cap. Is that going to be significant going forward?
It will be significant going forward. I can talk about it because we own it at $1.88.
Wow. Okay. And
$1.88. It's been as high as $700. I think it's trading around 400 right now.
Okay. All right. And so it's still going to be an alternative. It's got speed, but it doesn't have the market share.
It's got a lot of market share. It's taking some market share away from Ethereum. I would say if there's any chain that is a legitimate threat to ETH, it's Binance Smart Chain. Even though it doesn't have the same level of decentralization at all. If you think Binance Smart Chain is decentralized, my friend, you need to do some work.
So it's controlled by a few players as opposed to
correct. It's nowhere near as decentralized as Ethereum. And what it's acting as right now is kind of an overflow for people to push trades through because it's way cheaper. So I don't know that it will take over from ETH. but it's certainly been helping the entire network relieve network congestion. It's a lot faster and a lot cheaper. And in terms of value, it offers infinitely more value than Cardano does right now. And it's being used infinitely more than Cardano. So to me, we still own it. And we're up huge on it. But I think it has much more upside ahead.
Okay, a couple more. Solana just popped in the last couple days, up 50, 60%. A couple of my buddies in New York have been talking it up for weeks. Thoughts on Solana?
You know, I'm not educated on Solana. It is a coin that's in the news that I probably should do some more work on, but I'm not in a position to deliver a comment on it. That's at least an educated comment on it.
Okay, I appreciate that. Chainlink, and a lot of London Reelers got some Chainlink on the back of your recommendation years ago. Future of Link, it's come a long way. Just thoughts on where it might be going?
Yeah, I think Chainlink's got a lot more upside to it. What they've done is they have made themselves an integral part of the DeFi space. You know, DeFi can't happen without oracles. So oracles are trusted sources of information that smart contracts can use in order to carry out certain transactions. And so Chainlink has figured out a way to aggregate Oracle data in a decentralized way that can't be tampered with. So that's incredibly valuable. So I'll give you a prime example. Let's say you have a betting feature of a smart contract in DeFi, and you and I bet on something stupid. Like I think on July 5th, 2024, the weather in London will be 68 degrees Fahrenheit. And you say, no, it's going to be 78 degrees Fahrenheit. Well, we can actually create a bet around that. We can bet 1 Bitcoin each, put it in a smart contract, and the smart contract can pull in meteorological data from an Oracle source via Chainlink. So we know that neither one of us are able to manipulate that data. And on that day, it figures out what the temperature was, and then it pays out whoever won.
And they just signed a weather deal, I thought, with somebody, where they've got more weather data or they're incorporating more weather data. Some call them the Google of the blockchain. Am I getting that right when they say that? And what do they mean by that?
I don't know if I'd call them the Google of the blockchain. I don't know what would be the best way to characterize them, but I will say this: DeFi couldn't have happened without them, because you need trusted sources of information. So they are, when they call them link, I mean, they are the key link to this entire ecosystem. Now, it doesn't mean they can't be disintermediated. This is software after all, but it goes back to that issue of if I've got a trusted source of information and I've got billions of dollars of transactions that are being used around it, do I really want to mess with it to save a few pennies going someplace else, or maybe something's a little bit faster? Not really. When you've got a robust solution, you stick with it.
Understood. And people have been talking about these predictive markets. It's something we've never really seen, and it could open up all sorts of probably unlocked value from the universe or the world when, like you said, you can start, I mean, you and I would know it in finances, like forward prices of all these instruments. Now you can get people to kind of put out a 4-dimensional matrix of data in the future and then realize that it might be worth, quote unquote, betting on it. Maybe, you know, a guy that grows grain in the Midwest might be in the interest of swapping that with someone who's a blah, blah, blah. Do you see a lot of future in these, quote unquote, predictive markets that might use all these weird data points in the future as financial markets?
Yes, but that's years away, 5 to 10 years away.
Okay.
Yes.
Okay.
There's a lot more low-hanging fruit in front of us right now, whether it's just trading, trade settlement, remittances. I mean, those are massive, massive, massive markets that have barely been touched.
Okay, cool. Just a few more, and then I want to hear about what you've been up to at DeFi Tech. Uniswap, you talked to me about it a long time ago. We saw it do some incredible things, was kind of built in the DeFi summer last year. It's continued to do well when it had, you know, other people trying to compete, other swaps, whether, you know, Sushi Swap and Pancake Swap, but it broke into 10 market cap, I think, in the last few days. Thoughts on Uniswap going forward?
I love it. We own it. We haven't sold any. I think it's one of the most important facilitators of trade in the world right now. And I think it's undervalued. And I love what the team is doing. Again, any one of these can be disintermediated with somebody builds a better mousetrap, right? I want to be very clear. We're in very early days. But with the information I have in front of me now and today, I'm a big fan of the protocol, and I think everybody should have some.
I feel like, Tika, we're having one of those conversations like you used to see in the commercials in the 90s. When E.F. Hutton talks, people listen. And for people that aren't old like me and Tika, there used to be these ads, and E.F. Hutton was, I think they were an advisor, like a financial advisor.
A brokerage firm, yeah.
And they would have these ads where there'd be like, you know, two guys having lunch in a crowded restaurant, and when one of them like mentions E.F. Hutton, everyone goes quiet and they listen. And Tika, I feel like the whole internet's listening to your calls now on these coins. Look, a couple more, and I promise to move on. Polygon, exciting as you know, as a chain solution, but also they just announced a merger, $250 million. I checked with my guys in New York. This is probably the first proper M&A deal in crypto that I've seen, which is an impressive feat on its own. Your thoughts on Polygon and the merger?
I love the project. I'm a big fan of it. Again, it's another one that I think if you don't own, you should probably buy some. Again, I'm not giving financial advice. I'm speaking generally. Yeah, I think the merger is great, and it shows how much maturity is coming into this space. It makes sense that that you'll see these community mergers and this kind of acquisition of technology and complementary technology. And what's great is it's all being driven at the community level. So people have to vote on it. Their tokens are essentially de facto shares, and they get to vote on this growth. I mean, it's really remarkable. We will never see this again in our lifetimes. The birth of an alternate financial system, a parallel financial system. We are witnessing the transition from centralized financial system to a decentralized financial system. And it's a trend that's going to go on for a century, right? Long after you and I have shuffled off this mortal coil. And maybe, our kids and our grandkids will really see what that world is actually going to look like. Imagine being there when those first railroad spikes were being driven into the ground and they were building what was essentially the first network. And we went from that network to then having digital networks and the internet. So yes, it's incredibly exciting. And the good news is it's still early enough where if you get in on the right protocols and are rational, you can make life-changing wealth. It's truly an incredible time to be alive and be in this space.
Yeah, you can really be part of history. And I think that's what so many people that are now on the inside are excited about this. And to watch that Polygon merger happen, I mean, it's, $250 million. They agreed on a coin swap ratio, just like you would an equity price in a merger. And my first thought was, I called my guys in New York and I said, who did the M&A on it? Was it Goldman? And then I thought, of course it wasn't. It was the communities and them. And then that made me think, like, Tika, would there be a $250 million, digital technology merger without an advisor anywhere in the world? Probably not. And yet they just probably did one. And that in itself is almost incredible. Not to mention the layer 2 solutions they're coming up with. Yeah, it's an interesting world, and it's happening in front of our eyes, right? Again, a couple last ones. Stable coins. They've come a long way. I had a whole conversation with my team, my academy the other night, of how innovative a stable coin is. And we need to step back and look at how beautiful it is, even though it's the most boring thing in the world. And I used to tell them, I like boring. I live in a boring neighborhood. My babysitter's boring. I like boring because it's predictable. I used to not like boring. The stable coin itself and is a pretty interesting invention, and yet they still haven't been tested. We see Visa and MasterCard talking about accepting them. What's your thoughts on the USDTs and DCs and future of those?
USDT Tether, I'm not a fan of. It's just way too opaque. The thing is to remember about stable coins is they're like money market funds. And, do they have all the assets they say they're going to have? Maybe they do, maybe they don't. Just use them as funding currencies. I wouldn't place an enormous amount of money in them. and there is credit risk. You're taking credit risk, but I think it's a good step. It's a good first step. The market needed it, just like in the stock market. We need a place when we sell our stocks. We need a money market to go to, and that's essentially the function that these stable coins fulfill. Now, at some point, the United States is probably going to roll out a digital dollar, and when they do, that will become the de facto funding currency for the entire crypto space. And you won't need to rely on stable coins. You'll basically be depositing money electronically directly with the Federal Reserve. But again, that's probably a few years away before that happens.
And that will maybe make those coins irrelevant, or
it will. Those coins will have to change in order to be competitive. Those coins they'll have to update.
Okay. Yeah, I always tell my students, just because it says USD in front of it, and it looks like a dollar, doesn't mean it's a dollar. And there's a reason you get a 4% plus yield on that, whereas your local bank will give you a 0.5% plus yield because there's more risk. And we haven't seen what happens on a Black Thursday when everything gaps lower and we get to see where is the collateral, et cetera, et cetera. So a good call. Lastly, I got to call you. I got to ask you, I mean, the damn Dogecoin is still up there in the top 10 market caps. Some people laugh at it. It's also a sign, though, of a community actually working. What do you see when you see Doge?
I see a community actually working, creating value where they want to create value. Now, would I put my life savings in Dogecoin? No. I recommended Doge originally back in 2016 when it was trading for a fraction of a penny. And it was just a fun thing to recommend and to own. And my readers made a lot of money on it. We sold and took profits on it a long, long time ago. I would just say, if you are first getting into this space and your first foray was in Doge, that's great. But if you're looking for enduring value, you should own some Bitcoin and some Ethereum. Now, maybe Doge will survive and literally be this funding currency moving forward. I don't know if it will. I feel very confident about Bitcoin's future and very confident about Ethereum's future, but I can't share that same level of confidence with Dogecoin. And so I would say, if you want to play around with Doge, do it with small money, don't do it with big money.
Yeah. Okay, really good thoughts, and I appreciate that, Tika. Talk to me about DeFi technologies. We spoke months ago, and you said, Brian, I'm really excited about this company. And Tika, we know this isn't something you normally do. You don't normally work with companies in this space, but clearly this one made an impression on you. What are you guys trying to do at DeFi Tech?
Well, to answer your question, and just to back up for a second, I've never worked with any company outside of my publisher with my newsletters because I've never found something that I've wanted to put my name and my credibility on the line for. What I love about what DeFi.tech is doing, and they trade here in the States, DEFTF is the symbol, about $1.20 a share. I'm an advisor to the company. I own shares in the company. So let me be very clear. Anything I say about them will be biased, obviously. Otherwise, I wouldn't be involved with them. But I pulled back the camera and I realized that you've got 100 to 200 million people in crypto, but you've got billions of people that invest in the stock market. And those people will never, ever open up a Coinbase account. They will never, ever get a MetaMask wallet and start swapping on Uniswap in order to buy tokens. And then you've got all these institutional buyers that want to get in. But again, they're not going to, either their charters don't allow them to do that, or they're just not going to go through that rigmarole. And what I realized is there was this gap in the market for somebody to provide access to these protocols like Cardano, like Bitcoin, like Ethereum, like Polkadot, but with an equity wrapper. So what does that mean? It means just like an exchange traded product, you have an exchange traded product for gold. You're not actually buying the gold, but you're putting an equity wrapper on the gold that gives you the same amount of proportional ownership as if you owned the actual gold. So DeFi.tech, which is the website, DeFi.tech, is doing that with decentralized finance protocols. And so they're creating these exchange traded products that now allow institutions and individuals to get pinpoint accuracy into the protocols they want through their brokerage firm. And what's really exciting about that is right now they've been approved in certain markets in Europe, and they're trying to get approved in Germany, and I believe they will. I can't promise that, of course. I believe they will. So why is that important? It's important because the German government has said that German funds can put up to 20% of their capital into cryptocurrencies. That's $365 billion. And the reason why that's important and the reason why they will move that money into crypto is because of the gains. If they hold it for a year or more, the gains are tax-free. Tax-free. So you want to talk about a big carrot? Right now, you've got institutions all over the world looking at these massive gains in crypto. And so if you don't get some crypto exposure, the guy next to you will and will steal your clients. So that's why I believe Germany is going to be at the forefront of crypto adoption on the institutional level. And DeFi.tech, it is my belief, will be there to provide products for them, dozens of different products for them. And so I think you'll see an enormous amount of growth in that product offering and, of course, assets under management. And I think DeFi.tech has the opportunity to be one of the largest asset managers in the space. Now, look, can I guarantee that? No. Is it a prediction? No. It's what I believe, and it's why I got involved. At the end of the day, I've been successful in this space because I've helped democratize access to crypto assets. I've taught grandmothers, grandfathers, retired firefighters how to buy Bitcoin at 400, how to buy Ethereum, how to use a wallet. And I think that next step in that growth is bringing access to the stock buyer, and specifically within the decentralized finance space. And that's exactly what DeFi.tech is doing.
I love it. And you guys are announcing all sorts of mergers, and you guys are really going, it seems, aggressively into the space. I love that German that German story. I mean, unlocking that much capital and to give those institutions that, you know, that tax treatment, even to be clear on taxes, is an amazing thing to do for those institutions. Imagine dumping that capital right into the market. And you're right, some people will never get the MetaMask account, and that's okay. And I like it how you said, if that fund manager doesn't get access to crypto, then the other one will and steal his clients. And that's the way Wall Street thinks. And it's always good to remind us of that, Tika. I've had some interesting people on recently. I wanted to maybe just kind of wrap up with getting your thoughts on some of the predictions in the market. And again, say as much as you want to. I had Michael Saylor on here, CEO of MicroStrategy, who Max Kaiser, who's been talking about Bitcoin for 10 years, said is the best pitch man for Bitcoin. So that's quite a compliment for Kaiser. Michael Saylor at one point said, mortgage your house and buy Bitcoin. He said, Brian, this is digital property. It's the best investment I can see for the next 1,000 years. He's literally taking his whole public balance sheet and going all in, and then going all in, and then raising more debt and buying more. I mean, maybe I'm exaggerating a little bit, but there's quite a bit.
No, he's done all of that. Yeah.
Right, he's done all that. He's watched his stock price go up. He's quite candidly said his brand awareness has gone up 100x. He's a fellow MITer, was at a fraternity down the road from me. And he does have a new way of articulating Bitcoin in an industry that has all sorts of fascinating people like yourselves that articulate it in a different way. What are your thoughts on what Michael's doing from a public company and the concept of mortgaging your house to buy crypto? Your thoughts?
I'm a big fan of Michael Saylor. He's brought a whole new level of people into the market, and he's really elevated the dialogue in the market. I think he's great for Bitcoin. We own MicroStrategy stock, and we're doing quite well on it, and we continue to be bullish on it. Would I be as aggressive as him in terms of leverage? No. Do I think you should borrow money against your house and buy Bitcoin? No, I don't think so. And I'll tell you why. Very few people can sit through a 50, 60, or even 84% drop and be rational. And so let's say you have a $500,000 house and you borrow 400K and you buy Bitcoin. Let's say it goes to 100K. And then you go through a bear market and now Bitcoin's 25K. The danger is not so much will Bitcoin recover? Yes, Bitcoin will recover. The danger is that your mental state won't recover, and you'll sell at 25K, and then you'll watch Bitcoin go to $250,000, and you're going to want to end your life. So you have to know yourself. Is the strategy fundamentally flawed? No, I don't think so, because I think Bitcoin's going to continue to go up. In fact, there's never been a 4-year cycle where you lost money on Bitcoin. Those are great metrics. And if you can borrow capital, low interest capital at 30 years and then put the money away for 30 years and be disciplined, sure, it works. But how many of us have the discipline of you or of Michael that have that MIT steel trap mind? Now, what are you? You guys are a sample size of 30, right? So no, the rest of us normal humans don't have that ability.
That's a really good call, Tika. I mean, really insightful. I mean, I'm watching, when Solana popped 60% in a couple days, I'm thinking, this is amazing, but there's going to be a trail of dead bodies behind this in the future, because most people, we weren't programmed as humans to be dealing with assets with that kind of volatility. Like, where in the world before has your cow been worth a half a cow the next day? Okay, unless it died, or things have reduced that much. Like, we're not meant to it. And that's why the biggest thing I teach in the academy is my 4th module, and that's about trading discipline. That's about saying, stop trading on your mobile phone at 2 a.m. Stop checking the price of your coins on your mobile phone. Let's get into a monthly trading strategy. Let's get down to 10 coins in our portfolio. Let's slow it down, right? And look to the long term. But Tika, like you said, the average person, or 99% of the American public out there, can't even deal with that volatility. Now, they could say, but wait a second, I'm up from 40,000 to 100,000, I'm up 60,000 on my Bitcoin. But even if that drops to 60,000 and they're still in the money, Tika, they're probably losing their brains, right?
Right.
Because they already pre-spent the money, or they spend it in their mind, or whatever. And it's just takes a lot of discipline to keep your head in that game, right?
It does, which is why we're not active traders. I mean, maybe at some point in the future, if I find the right approach, I'll launch a trading newsletter. But we've made all our money by just buying and holding. And I've said, look, Bitcoin is an incredible asset. Maybe we'd make more money if we sold it at 60 and bought it at 30. But what if we sold it at 60 and it went to 400,000? Right? There's that risk in Bitcoin all the time, that it can just have a parabolic move higher. So I say take at least a 5-year perspective and compare it to the S&P 500, or compare it to any asset. If you take Bitcoin and you use 4-year rolling periods and compare it to any asset on the world, it just demolishes the returns. It demolishes the returns. So I think that's the best way that most people should play it. I think people have an overinflated point of view as to their ability to trade. And if that was true, everybody would be a trading billionaire, and they're not. The way to make money in assets, you buy great assets and you hold them, and you don't sell them. That's it. But it's so simple that people think it's too easy for it to actually work.
Yeah, exactly. That's also like, make sure you work out every day. Don't eat the jelly donuts. Keep toxic people out of your life. Get sleep. Meditate. All the other things that are simple, that are nearly impossible for most people to do, right? So like you said, it sounds simple, but doing it's the second thing. Next personality I want to talk about is Max Keiser, my old friend, who in 2013 was in my old studio, Tika, with my kitchen. We were talking about Bitcoin. I just bought some at 85 pounds or dollars, and we actually were complaining about the lack of liquidity on the exchanges, which of course was fixed by the world of DeFi with the concept of a liquidity pool that could have never been created by Wall Street, right? Another amazing piece of technology. And Max has turned into, and I think he would agree with this, a Bitcoin maximalist, strangely enough. And when I watched the Bitcoin conference in Florida, I don't know if you were there or not, I saw a bunch of people that not only were pro-Bitcoin, they were anti-everything else. And Max I'm still trying to get him back on the show, but he keeps texting me, no shit coins. Bitcoin won, end of story. That's it. Everything else doesn't matter. And I get a little frustrated with that point of view. And I'm curious, how do you have the conversation with maximalists? I did have a version of this conversation with Michael Saylor, and strangely enough, Tika, when it got to stable coins, Michael said there's a real use for stable coins. He said it's the currency that people are going to use in their wallets, if you will, when they're holding digital property as Bitcoin. And to me, that felt like a de facto endorsement of Ethereum somehow. We didn't go too deep on it, and I'm not putting you on the spot, Michael, but it was nice to see that an intelligent person could entertain the narrative. And yet, when I talk to Max, it's one or the other. I'm also talking to a man who's got probably more Bitcoin than God, and he's been talking about it forever, so maybe he's in a reality that is constantly promoting Bitcoin and defending it. So what are your thoughts on that?
Well, you have to understand that maximalists don't think in days or weeks or months. They think in decades. They really pull the camera back. And if you're looking at it through that lens, you can say you can build a case, at least in your mind, where Bitcoin eats the entire ecosystem. Just think about it this way. Bitcoin is the most secure blockchain in the planet, bar none. There's nothing that comes anywhere near close to how secure Bitcoin is. You got governments and private institutions and private hackers try to, beat up on Bitcoin every single day since it's been born, and it just makes it stronger. So if there is a way, and they really haven't fully figured it out yet, but if there's a way to put a second layer on it, smart contracts, and it's the safest system in the world, and now you can make it the cheapest to operate on and the fastest to operate on, boy, oh boy, that's going to be tough to beat. That's going to be tough to beat. That could eat a lot of people's lunch. Now, will it eat everybody's lunch? No, but a lot of people.
Ethereum's lunch?
Maybe. But we're talking about a possibility that's 10 years away, 15 years away, perhaps 20 years away. And people get so caught up on something that might not even happen in their lifetime. And they miss all the low-hanging fruit that's in front of them. Because between now and then, there's so much money to be made. And the best example I can think of is AOL. You could have sat down in 1992 and said, AOL, they're helping newbies get on the internet. Yeah, they might have a good run, but they'll be dead by 2002, 2003, when you have cable modems and everybody has high-speed internet. And you would have been right, but you would have missed one of the best performing stocks of that decade, a stock that made people billionaires, centimillionaires, decamillionaires, and individual millionaires. So much wealth was created by owning AOL during the period of the 1990s. And so the same will be true of Ethereum. Look, I think Ethereum's going to make it. But even if it doesn't, the amount of money that has already been made in Ethereum and will be made in Ethereum over the next 5 years, it's going to be life-changing.
Okay. How do you talk to maximalists? Are you even allowed in the room, Tika? Do they allow you in there?
Sure, I have plenty of my friends are maximalists, and we have good conversations. And I just don't take the other side of it. I see their perspective. I understand their point of view, and we need the maximalists. I mean, they are the people that have been working so hard on building the Bitcoin network. Whether Bitcoin's up 600% or down 84%, they just keep working. They have a vision of the future that they're looking to make real. And think about how far Bitcoin has come. Bitcoin was the original shitcoin, right? It was used to fund drug purchases that had, you had maybe 20 nodes in the network, right? It had no decentralization to it at all. And it's gone from that to being worth as much as $1 trillion. And it's done it faster than any other asset in history. You'd be a fool to ignore that.
Yeah. Lastly, what do you say to the people out there that are still in crypto denial? I don't know where Warren Buffett is these days. I kind of know, I don't know if Peter Schiff is still in denial. I don't know, but there's still people out there that are still saying it's a Chinese scam, it's Russians, it's all going to go to zero. How do you talk to those people, and are there any left?
Oh, sure, there's plenty left. I would say this, if it was going to go to zero, and that was a real concern in the early days, but if it was going to go to zero, it would have already gone to zero. It would have already happened. You think about the trials and tribulations that Bitcoin has been through, the chain splits. You think about the trials and tribulations Ethereum has gone through, its own chain split. the amount of money that's been lost in smart contracts, the amount of money that's been lost on the hacking of exchanges, billions and billions of dollars. There's all the reasons in the world that both of those technologies shouldn't have flourished, and yet they have.
Amen to that. It's easy to forget those events, Tika. I mean, the Mt. Goxes and the splits, the Ethereum, the Bitcoin Cash and the Bitcoin and the Ethereum Classic. I mean, it's easy for especially new people in the market to not know that history and realize there's been a rocky road, which is a beautiful thing, right? Anti-fragile is what we want from these networks.
Correct.
Tika, first of all, this is, I think, our best episode ever. So thank you. I really appreciate you here. I guess I want to finish up with mindset. Maybe the mindset of money. Maybe us all getting in touch with how we were raised to think about money, whether we're worthy of understanding our money, even understanding how money relates to our life. I know it's a real big picture thing to do, but it's also something you're good at. It's one thing to talk about specific coins and assets and returns, but I mean, as you and I both know, Tika, most people, they can't even get to the party. I mean, they're self-sabotaging with their money. They have a hard time getting their head around it. There's the old thing that Kiyosaki says, poor people work for money, rich people make money work for them. They don't even understand assets and owning things. How do you get people to start thinking about that conversation of them and their money? You know, it's weird, Tika. It's like the most carnal relationship of a human being, them to value. But it's something I feel like we've been disconnected from, like we've been raised in the zoo, and now we're about to get reconnected. And there's a bunch of mistakes we can make or mindsets we don't understand. You must have thought about this countless times and had countless conversations with people. What are some of the basics you try to educate them on when it comes to even having this conversation?
I've spent a lot of time thinking about this as I've been on my own wealth journey. You know, I've grown up in very limited circumstances. I've developed wealth, lost wealth, developed wealth, lost wealth, was on that merry-go-round for many, many years before I developed lasting wealth. And now I'm a very wealthy man. And the difference was all up here. So I will say the biggest mistake is to sit there and ask yourself, why am I not rich? Why do I keep doing this? Why do I keep engaging these behaviors? Why am I a failure? Why can't I get out of my own way? Stop that immediately. Your brain is an incredible machine. You ask it a question, it's going to give you a goddamn answer. Why am I failing? Oh, because you suck at life, man. And you're fat. And people told you that, you know, you're a loser and your dad doesn't like you and your mom thinks you're just super awkward. That's the brain. Ask your brain a negative question. It'll find negative answers. So you got to stop doing that. The second thing you do, once you stop asking yourself why I don't have something, the second thing you do is you take a piece of paper and your pen. Literally, don't do this with the phone. Pen and paper. You write down, what do I want? And you turn off your phone, you lock your door, you shut down your computer, and you sit there until you figure it out. And you write, what do I want? And then you'll have a list. And then on the next page, why do I want it? You write it out. You have to get clear on what you want and why you want. If you're just going along saying, I want to be rich. Well, shoot, we all want to be rich, but it's not enough to get you from where you are to where you want to go. And it's not going to be enough to change your behavior. But once you get clear on what you want and why you want it, your behavior will automatically change. It won't be an effort. You'll automatically know what to do. You'll be asking your brain the right questions. Then you say, instead of, well, why don't I have that? You say, how do I get that? If I could create a plan to get that, what would that plan look like? Pick up your pen and write it down. So it's what I try to teach people that I mentor, and I mentor a few different different people privately, and that's just something I do because they're my friends, is I get them to take control of their mental focus, of what they're focusing on. You can't hit a target that you can't see or that you haven't even written down. So this is critically important. For everybody watching here, I need you to do this. I need you to say, okay, what do I want? Why do I want it? And then ask yourself, okay, how do I get it? And the brain was like, oh, I don't know. I'm sitting here on my couch. I don't know. And then you say, okay, don't beat yourself up. Say, all right, I get it. If you did know, what would be the first thing you would do? And then these questions, they start unlocking this incredible intelligence. I don't care what your IQ is. We all have this intelligence built within us, this incredible brain, this incredible machine that if we just ask it to do things for us and phrase our questions in the right way, it will automatically go to work for us. And the second piece, and this is just as important, maybe even more important, because you can do this piece and not do the other piece and still be successful. Surround yourself with successful people. Surround yourself with people that have the life you want. And being around them will automatically change your actions and will automatically change your thinking, will automatically change the way you view yourself, and will automatically get you on the path that you need to be. Now, you put these two together, this being intentional and being around the people that are living the life you want to lead, and it's like nitroglycerin. It'll change your life in ways that you can't understand.
It's powerful stuff, Tika. I'm thinking long and deep about what you're saying. You know, so many people out there, like you said, they just think I want to be rich. You know, and like you said, everybody wants to be rich, but they don't know why, right? And they don't even know what they want. And if they figured that out, then they could also realize that any wealth would help them do more of that, right? Because that's what wealth can do. I mean, you know that from being on both sides of the coin. I mean, wealth allows you to do more and be more, right, Tika? And it's a magnifier. And yet some people have a very weird relationship with money, like it's bad or dirty. But I agree with you. I feel like if people could get aligned on what they want and then see as wealth as a way of just getting more or doing more for more people, it makes the whole thing healthier somehow. And, you know, in a world of more information, Tika, it seems, and maybe I'm an old man talking about the kids on social media, but it seems like a lot of our TikToks and Instagram, they value that bling. And everyone sees, I want the bling, I want the bling. And they never have that conversation with themselves you talked about, where they write down, what do I want? And then you see so many people that get it, right? You must know people in the crypto space that get the money, and then they find a really convenient way of losing it or losing their brains because they never knew their why in the beginning, right?
Right. You can hit all your goals. And if you didn't have your why figured out or what you really wanted written down, you can lose your mind and still feel like a failure.
Yeah.
So it's critically important. You must map your own life. If you don't, somebody else will map out your life for you, and you'll just be a pawn in their game and them acquiring more wealth.
Yeah, there's that old saying, if you don't follow your dreams, then somebody else will pay you to follow theirs. And it's always something to think about. Tika, we could talk for hours, but next time we'll do this in person somehow. We'll get you to the UK. We'll make sure we allow citizens to start coming in soon. Look, I really value all of your ideas. You know, so many of the people in my on London Real, and so many of my students in my academy have been listening to our conversations for years, and they truly appreciate you being a pioneer in this space. And again, a lot of people don't know how hard it was to be a pioneer back then. I mean, you know, when I ran for mayor of London, I got a lot of hate, but I'm sure it's right up there with what Tika got back in the day for going out on the line and throwing these coins out there and putting all these big ideas into a space where it's easy to be critical of. And yet history has proven you correct, Tika. And so again, appreciate you going on the limb. So many of my viewers and students, you know, invested the way you chose. Of course, we always buy all your coins here too. And again, it seems like now you're even more insightful about what's going on. It's like you're going more powerful because you're now a veteran in a market there's not many veterans, right? And you've been watching this space since Jan 16, Tika. That's coming up on 6 years. I mean, that's dog years, right? You're like a 40-year veteran somehow, if that's what a dog year is. Any final thoughts for people to know, Tika? And also, everyone's also asking for new coin predictions, so we might have to get you back on at some point and talk about formally your picks for the next few years. But final thoughts.
No, I think that's it. I think if you can play back to what we discussed here, I think there's enough information in what we've talked about today, especially in the last 10 minutes, where anybody watching here can absolutely transform their life. And it's not going to be easy. But if I'm driven by more than anything, I know that once you fix your financial life is when you can really look within and really start changing who you are, adding more value, being of more value to the world, whether it's giving more money or giving more of yourself, being more generative. But I do believe that individuals, it's incumbent upon them to get financially free. I don't think there's anything wrong with that. As long as you're not hurting anybody or victimizing anybody and you're adding value, there's nothing wrong with that. And I would say if you find your mind plagued with these types of guilt feelings around money, I'm going to give you the best advice I can. Ignore them. They might never go away, but you just can't pay attention to them because they're not working in your best interest at all.
Yeah. Really well said. Got to get that mind right. And it's such a hard thing to do. Even when you know what to do, Tika. I'm already checking my own brain process. I got some reprogramming to do on this side. Tika, again, thank you so much. I mean, you've been a good friend now for many, many years, and I know you're off camera as well. You're an incredible dude. You're a friend of the family, and you've gone on such an incredible growth journey. And been really honest about it too. If people want, go watch the old Tika Tawari episodes. Man, he'll tell you about hard times in London and growing up here and all sorts of other stuff that's created the man. So thanks, and thank you for the contribution. And I'm looking forward to what you're going to contribute to the space for the next 5 years. It's going to be absolutely mind-blowing. So thank you so much. We appreciate you. You have a personal website now? I guess
it's tikatawari.com.
Okay, so tikatawari.com for you, defi.tech to learn more about the company. It's traded in the US, but it's also on the Canadian exchange. It's got two tickers.
Yeah, defi.neo in the Canadian exchange.
Cool. I get all their press releases. It's exciting what you're doing there. And of course, Palm Beach Research is your incredible newsletter that's read by so many people around the world. So that's what people should do if they want the research. And hopefully we'll have you back on talking more about future and coins and all sorts of stuff. So Tika, love you, man. I really appreciate the time. And again, thank you so much.
Thanks for having me, Brian. It was a pleasure to be here.
All right, cool. Thank you so much for everybody. Again, like Tika said, it's all in this episode. So just go in, get the messages, get out there, and get involved. We appreciate you all. We'll see you next time on London Real. Take care. Bye.
What is XRP? XRP is a digital asset for representing the transfer of value across the Ripple network, also known as the RippleNet, created and operated by an US-based technology company, Ripple Labs. The main goal for Ripple is to connect banks, payment providers, and digital asset exchanges to provide a solution for real-time and cost-effective global money transfers. XRapid is an on-demand liquidity solution provided by Ripple Labs. It is designed for financial institutes to use Ripple's XRP asset as a bridge currency between fiat currencies when making cross-border payments. XRP and XRapid are relying on Ripple's patented technology called the Ripple Protocol Consensus Algorithm, or RPCA in short. And all the information of Ripple accounts and XRP transactions are stored in a common shared ledger, also known as the XRP ledger. The ledger is managed by a network of independent validating nodes that constantly compare their transaction records. These nodes can belong to anyone, from individuals to banks. However, Ripple recommends its clients to use a list of identified, trusted participants, also known as Unique Node List, or UNL, to validate their transactions. The nodes in the Unique Node List continually exchange transactions with other nodes on the list, and the goal of consensus is for each node to apply the same set of transactions to the current ledger. Transactions that are agreed upon by a supermajority of nodes are considered valid. You can imagine this as a large group of trusted people, and the network needs agreement from all of them to make a decision. But if one of them doesn't agree, nothing will happen until the problem is solved. How does it work? Let's take a simple example. Bob from Australia wants to send $100 to Alice, who is based in India. Bob transfers the money via a service that is provided by a financial institution that is using the XRapid solution. The service then connects into asset exchanges in both the originating and destination country. Bob's $100 is exchanged into XRP, which provides the necessary liquidity to power the final payment. And in seconds, that XRP is exchanged into Indian rupees and is accessible by Alice from the local asset exchange. Ripple also offers other solutions that do not use the XRP cryptocurrency by default. Xcurrent is Ripple's enterprise solution that is designed for facilitating instantaneous settlement and end-to-end tracking of cross-border payments between RippleNet members. Xcurrent does not operate on the same technology as XRP, as it is built around the Interledger Protocol, ILP, which was designed by Ripple as a protocol for connecting different ledgers or payment networks. Xcurrent consists of 4 different components. The Xcurrent Messenger provides peer-to-peer communication between connected RippleNet financial institutions. It is used to exchange information regarding risk and compliance, fees, FX rates, payment details, and expected time of funds delivery. Validator is used to cryptographically confirm the success or failure of a transaction, and also to coordinate moving of funds across the interledger. Financial institutions can run their own validator or can rely on a third-party validator. ILP Ledger is used as a subledger, which can be incorporated into financial institutions' current ledger. The ILP Ledger is used to track credits, debits, and liquidity across transacting parties. Funds are settled atomically, meaning that they are settled instantly or not at all. FX Ticker is used to define exchange rates between transacting parties. It is also good to note that the same way Xcurrent can handle dollars, euros, and other fiat currencies, as well as Bitcoin and other cryptocurrencies, XRP can also be traded through the system. XVIA allows payment originators and corporates to send international payments through a financial institute that's been connected to RippleNet using an API-based standardized interface. Payments can be attached with rich information like an invoice or payment status. Stay tuned for more content and don't forget to check out our other videos at Binance Academy.
In today's now economy, money, like goods, must move fast. As a result, payment solutions are undergoing dramatic change to enable this. And it's you and me, the consumer, that is driving this change, this innovation. On a domestic level, many countries have modernized their payment infrastructures, providing this instant payment experience. Now SWIFT is bringing that same instant payment experience to cross-border payments. making them as efficient and as seamless as domestic payments, and by providing interoperability into these instant payment systems. We're doing this through a new service which harnesses the power of Swift GPI and now provides an instant payment experience. This will dramatically improve the end-user experience, in particular for SME, e-commerce and retail. Our GPI instant solution is in place, and it works. We successfully tested it with 3 countries and their payment infrastructures. Now it's time for the whole community to seize this opportunity. We invite all market infrastructures and banks to join us on this journey.
So I think we've reached a very successful conclusion.
Yes.
Congratulations.
Thank you. Thank you. So it's my understanding you're flying out this evening? Yes.
ありがとうございました。
Success. There you go.
Oh, thank you.
Hey, Lawrence.
Hi, Ian. Look, I know you've put a lot of work in on this, so I thought you should be the first to know. We've signed the contract.
Fantastic. Does that mean that I can push the green light on this end?
Hi Ian, it's Anya. We're almost complete. We also just wanted to keep you in the loop with the payment.
Yep. You should see all the details in front of you now.
Fantastic. Time is of the essence. The deadline for our first shipment goes out this afternoon.
We've also just sent Mr. Tanaka the payment request, which is everything he needs.
Yeah. Looks like he's got it.
Taxi! Hey guys, look, I know it's getting late there. I can track the payment and keep you posted.
Oh, there's no need for you to do that, Ian. Thank you. Payment is complete. We just got access to the funds.